what he's basically did was stand the paradigm on its head. We're going to pay our people much more because if they're happier and do better, everybody makes more money. It's the exact polar opposite of the way it was for Doug.
I remember when you did that interview with him, Carl, right? Wasn't that one of the key ones when they were raising wages?
Yeah, no one had done it. And it gave so many businesses cover to raise their own wages.
But it did so great. Doug McMillan, great job. Great job. We'll be missing.
Yeah, for sure.
Fantastic.
Take a look at the pre-market. We'll get the small names as well. Got some M&A with Abbott. We'll get to Palo Alto. Jim mentions Costco. More clarity on these Verizon layoffs and more in just
a minute. All right. Good morning. Okay, we're still up 105 handles, a little fade, a little profit taken. Now we're getting a little bounce. I got some limit orders in to sell NVIDIA 195s. I imagine there'll be a lot of people out there taking profits this morning. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's a glorious Thursday, November the 20th here in Myrtle Beach. Nice and sunny out. It's about 65 degrees, I guess, I would think. Let's see. 59 degrees. 59 degrees. All right, so it's nice, sunny. Okay, looking at
NVIDIA GPUs in the cloud are sold out.
GPUs are sold out.
We have lots of Blackwells coming. We're making a lot of Blackwells.
Okay.
And we have a bunch of Vera Rubins coming. And so
AMPX.
Business is very, very strong.
My first reaction to that interview, what happened to his leather jacket?
Okay, so we want to stay above 6,700. Got a lot of traction here. Okay, S&P, NVIDIA.
On AI in the third quarter. It's nothing new and it's nothing surprising. Why is that enough?
Okay, let me update this streamer.
Solid numbers, but that was to be expected. Single-digit beats. I mean, no one's running out and buying stock, so it's beating by single digits. I think what's the most important thing was the messaging around 2026 here. And the company came out and gave a very strong demand signal on 2026. Talked about essentially being sold out for GPUs, supply constraint.
So the talking heads don't have a whole lot to they're making stuff up this morning. That's the way it seems to me. I mean, just yesterday we were talking about the AI bubble, and the week before that, and the week before that, it's been the AI bubble. It was the recession before that, and then it was Fed rate hikes, and what else? There was so many things. The Iran business with the nukes. There's just so many things in the way, and yet here we are. Moving back to all-time highs, looks like. S&P. So junk bonds are going to look good this morning.
All right, it's first round bid day for Warner Brothers Discovery, of course, the media asset, the old media asset. Sorry to use the old in front of it, but you know.
Okay, so
that is being potentially contested by
something of a bias right now. Yes, we are quite a bit higher. I'm looking for an initial fade from profit taking. So I'll be watching that. We'll also be watching what levels we are dealing with here overhead. Just above where we are right now. If we manage to push a bit higher, we'll watch for some resistance here. And then 67.90 and then 68.20. A lot of people will be taking profits at the open. I know I will be. Walmart had the 100 call for January. I don't think I need to take that off. I'll let that go. That'll be up nicely this morning.
Would it have to have a collar? Do you have to at least sort of give something large in terms of a reverse break fee or some sort of insurance policy if, in fact, there were significant pushback from antitrust regulators or the states and any number of others. John Malone has a view on the antitrust implications, at least for Netflix, which would bring together number 1 in streaming and number 4 in streaming in HBO. Take a listen to his thoughts.
I believe that streaming is not a category. Television viewership is a category. Subscription, eyeballs might be a category. But if
Okay, what do we got? We got 6 minutes to go. 6 minutes.
Facebook and social networks, TikTok, and those are huge in terms of their viewership and their share of audience. So the question really is, how would antitrust regulators look at number 1 acquiring number 4 in streaming, right? I mean, that's really the question.
Yeah.
Is streaming a category? Are studios a category that there's not enough competition between studios? And is that going to get looked at hard? These regulatory things are a little bit difficult to predict.
Value and certainty. That's what you've got to figure out when you're a board member, Jim, of a company like Warner Brothers, trying to decipher between, again, what may be a very complex bid from Comcast, first of all, what may be a relatively simple bid for Paramount for the entire company, and then we will wait to see if and what Netflix actually decides to do. Again, their bid more likely to be just for the streaming and studio as is Comcast bid.
But if it's a push, would David Zaslav steer it toward wanting to be the co-CEO?
Everybody's trying to woo him in the sense of this is what you could do here. And I certainly have reported on Paramount's efforts to do that, give him a substantial role, make him a billionaire, for example, as well, given what they'd be willing to pay and give him a significant role at a combined Warner Brothers Paramount. So that's not an unimportant part of it, but one would expect that ultimately the board will make a decision. After all, Mr. Zaslav does work for the shareholders, so it's not just about pleasing him. It really is about doing the best you can for your shareholders and getting the highest value with the most certainty. And again, the pole position on both of those has to go to Paramount, but we'll have to wait and see. Hopefully I'll have some reporting on what Netflix did, if they bid, what they bid.
And to be dispassionate about it, I think yesterday you talked about how it seems that Comcast really doesn't have the horses.
It's very difficult. It's just very difficult for Comcast, given the multiple in which its stock trades, its inability to leverage its balance sheet enough to actually make it all cash, and so you're left with a much more complex structure that they would offer. Doesn't mean they're not going to try. It just means their chance of succeeding would seem to be fairly low.
Why do you waste your time? Why do you do that?
Got to try. It's important.
Try what you like.
Warner Brothers Studio, the opportunity for the cost savings there, enormous the library again, obviously some great interest in Netflix as well.
No, look, everyone should try to be. If you think it's additive, do it. I just think that multiple is the lowest.
You're talking about Comcast now.
It's maybe the lowest.
We're going to have a lot more, by the way.
A company that is still solving.
In the 10 o'clock
Okay, NVIDIA.
alone, and particularly on the state of the cable industry.
Looking for a fade.
That's going to that. Yeah, he had some interesting
Profit taking.
I'm gonna tune in for that.
Watching momentum.
Let's get the opening bell in just a few minutes.
MACD down there below. All right. If MACD continues to fade, I would think that we're going to see a little profit taking up there. I got the 195 calls. I want to take those off for this week. Okay. All right. We've got 3 minutes to go. 3 minutes to go.
Certainly easing some of the concerns that we'd seen heading into that report around AI valuations, around some of the depreciation, around the circularity of financing as well. Not that any of those concerns has gone away, but this very much confirms that the demand is there and the AI story remains intact right now. Then, of course, we got some jobs numbers, the all-important and long-awaited NFP this morning, and that obviously coming in at 119,000, Nicole, which was above the 50 or so thousand that the market had been penciling in here. Yes, the jobless rate has ticked up slightly, but I think everybody's really focused on that number and what that's going to mean for the Fed as we start to see this official data sort of.
Okay, let's look at Walmart. Walmart had earnings.
Markets think of all of this. We're seeing the futures pushing higher and the yields coming off a bit. So a few things going on in the commodity space as well, with oil, the Kremlin saying no consultations with regards to Ukraine with the US, and then we're seeing gold as well reacting to the Shanghai exchange actually issuing an alert on risky trading there in the market. So a couple of things going on, but I think, the big focus this morning very much seems to be on Nvidia and the jobs. Yeah, and you talked about how it's really trickling out across the board. I was mentioning earlier how heavily weighted it is into the major averages. It's lifting all boats here today. And you also are looking at the big picture here on the federal government and the AI chip makers. Tell us more about that. Yeah, so there's a couple of interesting reports out there this morning, Nicole, which are worth sort of highlighting. First of all, you've got The Verge now reporting that President Donald Trump is considering signing an executive order here as soon as tomorrow. That would be Friday, to basically give the federal government more powers.
1 minute. 1 minute 30 to go.
This is including reportedly, according to The Verge, an AI.
First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets, looking for stocks with high relative volume. I'm watching the top 10 on the NASDAQ 100, the top 10 on the S&P 500. Today, we're pretty full. Got a pretty full list here. You got only 2 stocks red on the NASDAQ 100 with 50 seconds to go.
We've seen that through the backing of companies like Intel, particularly on the chips front as well. So let's see what happens here and whether any of this is confirmed. And we do see details out tomorrow. But we've also got this other report, which is certainly interesting, particularly in the context of Nvidia and what Jensen Huang has been wanting to do, and successful lobbying, trying to get those chips back into China, although that has been unwound right now. But Reuters is now reporting that U.S. officials have sort of been quietly saying to each other that we actually might see a delay on some of the semiconductor tariffs, which obviously was a centerpiece of President Trump's economic policy and his agenda. Now, the reason
here we go. There's your opening bell. And we're open. Let's see. Okay, let's go to Nvidia. Nvidia is starting to fade.
High took alert plus 800. Extreme high took alert.
Okay, took a little, the 195s off. Nvidia 195s, took a little profits. Okay, what is Walmart doing? Walmart looking okay. Okay, S&P is still moving here. Not going to do anything just yet. I'll keep an eye on hedge flows. We're up quite a bit already. Would love to short this. Love to take some puts.
Gaining almost 500 points, 46,640. 2001.5%. People are feeling pretty great here on Wall Street right now. As far as sectors, every single sector is in the green. All 11 sectors gaining.
Okay, watching the futures.
Services, industrial, and those are some of the ones.
Okay, so I'm just going to populate my active trader screen with 40 deltas. I'll adjust those during the day as they change direction. Let's see. S&P 40 delta. I'm gonna put that over here. 40 delta put. 0 day. 0 day. I'm assuming that we're going to fade this. That's quite a move today. Okay, 40 deltas are 67.35. Those going $15. 67. Let's just fill this with 6,700 for now. Put that here. Okay, I'm setting up 6,700 in case we fade, and if we take off to the races and we make it above the 67.45 zone. 67.90 on the upside, 67.90. Put that in my call side. All right, so I'm set up right now with trades for, that's not right. That's not right over there. Let's see the put side. The first level down, 6,700. Let's go 6,700. Put that here. Okay. That's not right. Okay, watching hedging flows.
Extreme high tick alert. ATGL may resume in less than a minute.
Okay, back to NVIDIA. Walmart's doing okay. NVIDIA dropping off. Let's see, my son. If you took the NVIDIA Iron Condor, I'm going to wait till at least noon, I would think. Let the volatility crush.
Guidance came in essentially in line, maybe a little bit better than expected. So, still, again, not strong enough to receive a positive response. Now, this also may be a tricky point here. CapEx jumped to $84 million versus what was expected.
Okay, Walmart. Okay, so Palantir is number one on the NASDAQ 100. Palantir, number one. Okay, so buying the dip on Palantir. Working, we're gapping up. Gapping up on Palantir. Headed back towards the 50-day Palantir. Okay, note what's going on here with MACD. Don't often talk about this, but if you're going to trade, damn it. If you're going to go long at this point. Okay, what's going on? Okay, there you go. Okay, MACD's turned up. MACD's turned up, and prices are moving higher. This is looking good. And volume is higher, so this looks good for Palantir. Palantir looks good. Gapping up. Okay, futures are just sitting here. Number two on the NASDAQ 100. App Lovin. Shopify. Let's see what Shopify looks like. Shopify, nice reversal back towards the 50-day. Constellation Energy, CEG. These are the top 10 that I'm going through. Top 10 on the NASDAQ 100. S&P still sitting here. NVIDIA dropped down to number 5, 6. NVIDIA just dropping here. I mean, yesterday it was a AI bubble. Apple on the move. Okay. Here goes Apple. Okay, so Apple, we have Apple. I wanted to see which direction this was going to go. Obviously, we're going to be moving higher, I would think. Bollinger Band is still squeezing. You don't need to chase it, but I do like the idea of a trade on Apple. We got Meta. Damn it. Meta. Okay, here's Meta coming off the low. Not much on mean reversion trades, but this looks pretty good. Meta. Snowflake is higher. All right, there go the futures. No, that's just Wix. Okay, never mind. Belay that. Don't get too excited. Tesla, have Tesla TSLL shares. I'll add to that. NVIDIA doing well. Walmart. Okay, let's look at Supermicro. Stocks like Supermicro and TSSI. Looking for those to turn. You heard Jensity, who said in his interviews that most of the top line chips are sold out. Okay, Blackwell, they continue to sell very well. I'm not sure what the top chip is. NVIDIA name. Okay, Blackwell series is the #1 chip. They got the GB200 super chip and the new Blackwell Ultra chip family. They put two of these side by side, I believe, or four, or whatever the hell it is, the configuration, but they connect them together with this Hopper architecture. It's really cool what they're doing. Anyway, NVIDIA is fading a bit. So feel free to take those iron condors off anytime you want. I'm going to take them off probably around noonish. That's up quite a bit. Let me see what I can get out of this for. The put side, I could definitely close. $77. Okay, we sold them for 120, so that's only $50. Not even $50. So we'll I'll put in a limit order for, let me see, 50. Now let's go 40. Limit. I'll go 50 to start. Okay, 50 to start. Limit. Good till canceled. Yeah, okay. So good till cancel right now. I can adjust that during the day. Okay, there goes. Apple is on the move. Apple, I'm going to go ahead and buy some Apple. It is extended right now, so this is a bit risky. Let me just take a look at this. Okay, MACD is rising rapidly, so is volume. So this looks good. Would like a little dip to buy. I can scale into this. Let me go out to December monthlies. Apple. Okay, those are the 60, 50 deltas are 275. I don't know. I don't like to buy the high. The pops. This does look good though. MACD is up. Get rid of this. That's the high of the day for now. High of the day. Futures. I got a feeling we're going to fade here. Okay, watch the hedge flows. Okay, I got 6,700 lottos set up in my active trader window just in case this starts to drop. Those are going for about what, $6, $7 right now. If we start to fade. All right, so I got puts and calls. I got both the 40 delta put and a 40 delta call in my active trader window. So I'm waiting for direction. See where this goes. If it starts to drop off. All right, let's take a look at S&P. Okay, MACD is still facing higher. Got a lot of junk on the screen.
WMG, VIPS, BW, CRNC,
Okay, we're way up here.
ANNX, TMC.
Price is way up here. That'll make things a little easier.
NNOX, OKLL, RZLV, NKLR, TSSI, ORGO,
All right, we're still okay. We're taking off to the upside.
SRFM.
Every time we move up here, we form some wicks at the highs. We're on a 5, 15, 30, 60-minute buy signal for now.
NNOX. SGPX may resume in less than a minute. EOSE. MSTZ.
Apple still going.
JACK. CRNC. NNOX.
Okay.
MNDR.
IONC. MNDR. MSTZ. SGBX may res in 10 seconds. JACK. SMCZ. SOXS. ZIM.
MNDR.
IONC. NNOX.
Okay.
MSTZ. PLTZ. LNAI.
Trace starting to peak.
SMCZ.
I'm leaning towards puts here.
SOXS.
Okay, 6,700. So going for $9 now. No, 740. 740. All right, let me save this Apple order. I'll wait for Apple to dip a little bit. Everything seems stretched right now.
SMCZ. ICON may resume in less than a minute. AGIO.
Yeah,
It's a
OLMA.
list of things, let alone something as complex.
I think this is, you know,
BW.
I'm almost 85. This is a very serious societal question, I think.
NRGT.
That the technologies can well take over
SGBX.
for
SGBX.
traditional culture.
MNDR.
Traditional.
Well, and
ANNX.
then you also point out, and we have discussed this in the past, and I talk about it all the time, the size of these companies is just remarkable.
They can
It's
crush.
breathtaking.
They can crush anybody. They can get in anything they want.
We're only getting bigger.
NNOX.
Interesting hearing from Malone, of course, who, I mean, his company was called Liberty,
CRNC.
libertarian, certainly an approach, but yet,
LFS.
is it self-serving?
ICON may res in 10 seconds.
At this point, probably
TSSI.
not. I think he genuinely
TALI.
believes that
AGIO.
yes.
Okay, we're still looking strong.
When you brought up the Justice Department
NVIDIA, nice dip on NVIDIA.
FOSL. ANNX.
By the way, that was before we got the latest ruling on Meta as well.
So I think that they are nation states. there is no real regulation. We are counting on
Microsoft just sitting here doing nothing. Meta's trying to push higher. There goes Tesla. Tesla.
We really want Amazon to be in there fighting. We want Microsoft to be in. We need competition. But I don't know. If you pay Apple a nice sum in order to be Apple so that you're also the AI, you have 1.5 million people. I would go into Apple right now and lock that deal up.
There's a story this morning about the White House considering an EO that would prohibit states from regulating AI.
Yes.
Utah, for example, would be unable to institute their own safety measures.
AGIO.
S&P still looking strong. Wow.
Right, preemption by the federal government, because there is a concern, Carl, that in this race that we are in, that conceivably, if you are one of these companies dealing with a patchwork, you're going to be much slower as you try to comply with laws all over the place. I understand that. And obviously, you saw the big, beautiful bill, they were trying to get that in there. It didn't work.
Right. Now they're trying to under the NDAA.
Yeah.
I played with my heart when I sold Alphabet for the trust. I put my heart. This is good.
Yeah, you're really sad about that sale.
Hedge flow still rising. All right, so do we try a 67.90? What's that level there? 67.90s are $5.40 at the moment. Just got a feeling we're going to roll over. Not too often we get a 100-point gap. We're currently up 119, 120 handles. Going to push this higher? I don't know. I'm not taking a trade just yet. Okay, let me just see what's going on here. S&P 500. What do you want, baby? You want food? Here. There you go. You hungry? Good kitty. Okay. Hedge flows are still saying strong, but I just don't believe it. I don't believe it. Okay, so Micron moving lower. Micron moving lower. Let's see. TSSI moving higher. Okay, let's go through the top. Okay, so some profit taking on this one. Probably going to head back to the 50-day. What's Oracle doing? Oracle, we're looking for Oracle to follow through. Coming off the 200-day. So we're looking for this to build a trend. Oracle. I'm not looking for a big move, but I am looking for positive price action. I'm looking for something like this over the next several months. Oracle, weekly. Okay, still below the 20 EMA, the 10 EMA weekly. S&P is hanging in here at the high. I don't know, man.
ALAB. PALI.
Futures sitting here at the high. Let's see what NVIDIA looks like. NVIDIA. S&P at the high.
PALI.
NVIDIA bouncing.
PABS.
And get a lot of people to buy NVIDIA up here at the high. And then consolidate at these new levels. Netflix at the lows here, 109.40, 109.80. That's jumping back and forth. Broadcom. Many looking at Broadcom to be the next NVIDIA. They do security too, not just chips. Broadcom looks good. No
MNDR.
position in Broadcom. Apple sitting at the high. I want to get some Apple, but I don't want to buy it at the high of the day. I'll look for a little dip. Fair value gap there. Everything is up quite a bit, so all I'm doing is taking a little profits off and waiting for a good setup. Up 110 points, 120 points on the futures. I'm not really interested in chasing. I'm really looking for perhaps a turn back down.
Watching this NVIDIA halo effect today. Take a look at Apple. Market cap back above 4 trillion. It did get to 277 on Halloween. And has struggled to top that since, but awfully close, just a couple dollars behind. We'll watch that with the S&P back to 67, 60-ish. We're back in a minute.
Okay, watching MACD. Volume looks good. I just got a feeling we're going to fade. What about you guys, ladies? Micron, Netflix, Q, Squeezy, Tesla. Tesla's still pushing here. Tesla.
AGIO.
Tesla.
RZLV.
Okay, volume, MACD. Everything looks good on Tesla. Moving back above the 420 call wall. Let's see. Money magic levels. Let's see if these updates affected Tesla. They did. 405, 410. Okay, so this is 405, 410. 410.
PAVS. VEE.
410.
RZLV. ANNX. AGIO. MNDR. BAIG.
Okay, so we're above that 410 call wall, so we'll have dealers scrambling
PAVS.
to buy shares above 410. Squeeze above 410.
ANBS. RZLV. IMSR. ANNX.
SGBX.
All right, my son has an interview this morning. Where did he go? Let me see where these guys are.
ANBS. RZLV. ANNX. BITF. IMSR. BAIG. LABX.
PAVS.
BEE.
VEE.
DBLT.
Okay, Broadcom. Okay, Tesla looking strong.
TF.
NVIDIA.
BAIG.
All right, NVIDIA headed back up to the highs of the day. After some profit taking, futures look like they want to go.
RZLV.
All right.
ANNX.
Well, Walmart's moving to the NASDAQ. John Rady, who's the man who led the call, was on the board.
Tesla still strong.
Resigned when he moved over to Walmart. It looks like that now that Doug McMillan is moving on.
S&P at supply. Overhead 5-day.
I think that there's always been a tug of war.
Momentum still very strong. Looks like it's going to go.
On the NASDAQ than the New York Stock Exchange. I don't think it's a real edge to go to the NASDAQ, but you could say, listen, my studio's right here. Maybe I'll.
ANNX.
You don't think it lends them a little more of a tech flair?
Yeah, that's what yes, I think that it does do that, but I think the New York Stock Exchange is. But do you really want to leave the stock exchange? To me, it's still the premier place for capitalism. But at least to understand that it was Rainey, I think, that made the decision once because Rainey did resign from the NASDAQ board.
Goldman Sachs. Let's see what Goldman looks like. Goldman Sachs. Big gap up on Goldman Sachs. So whatever you have put credit-wise. looking much better.
Dixon's doing a great job.
EABS.
Wow. I
SOUX.
gotta rethink.
Goldman Sachs.
It's like Frank Sinatra had to pull all the wires.
Big move here.
RZLV.
All right, Goldman's working.
VITF.
I figured that one out.
So the breadth is extraordinarily good, and the VIX back below 20. Back in a minute.
Okay, let me just put NVIDIA here. Palantir, just Doji spinning top. Where's my NVIDIA? There's my NVIDIA chart. Okay.
CRNC.
LFS.
Okay, NVIDIA. Looks like we got a little fade again, a lower high for now. All right, futures continue to move higher. I'm reluctant to chase this up 100, more than 100 points, 120.
RZLV.
But hedge flows are continuing to move higher. So it looks like we're headed to this 67.85 zone.
OLMA.
Why are these calls not moving? I don't get it. Something wrong's here. 20.
LFS.
LFS. SOUX. ANBS.
Okay, 67.85, 67.85, 67.85. Those are going for $8.
OLMA.
SGBX.
Pretty close to that already. 67.85. S&P. Goldman Sachs still moving higher. Okay, we got 20 points to go.
KSY.
67.85. Let's see what 0-day says. Okay, a ton of 0-day at 67.85.
SGBX.
OLMA.
LFS.
67.85.
TF. LFS halted to the upside. IRE. IMSR.
AUID.
ANBS.
NUTX.
IREX. OLMA.
LFS. SGBX.
LFS. BKSY. ANBS.
All right.
OLMA.
LFS.
I'd like to take a short from up here.
SGBX.
Pretty close.
IRE.
Pretty close. All right, so I'm going to set up some. We got some 6700s already set up. Okay, maybe some 6750s if this starts to roll over. Right now we're pushing higher. 6766. MACD is starting to flatten out a little bit.
Some new data inputs from this morning from the jobs number. That NVIDIA bullish print calming down some AI bubble fears. We'll talk to Dan Niles about whether the numbers are at all clear for tech and maybe the market at large. And a lot more from David's wide-ranging interview with Liberty's chairman John Malone, including some of his biggest regrets in his career and what comes next.
First of all, let's get some housing data that's just processed. Diane Olick has that for us.
ANBS.
Carl, existing home
MSTZ.
sales in October rose 1.2% from September to a seasonally adjusted annualized rate of 4.1 million units. That's right along expectations. Sales were up 1.7% year
Wow, can't believe this market's so strong here. 126 handles. Futures up 126 handles. NVIDIA. NVIDIA lower high. NVIDIA with a lower high. Okay, watch the hedge flows here. Okay, I know I'm switching back and forth on you. I would love to take some puts here.
last year. That's the longest in 6 years. First-time buyers making a small comeback at 32% of sales, up from 27% a year ago. And sales growth continues to be on the highest end of the market. Those of the $1 million plus homes up 16% year over year. Sales of homes priced between $100,000 and $250,000 flat. Carl, back to you.
All right, Diana, thank you. Diana Olick this morning. NVIDIA shares climbing after a bigger than expected quarter. The company making its way to that $5 trillion valuation. Our next guest says NVIDIA may have just saved Christmas with its Goldilocks quarter. Let's bring in Niles Investment Management founder and portfolio.
Okay, so watching this, let's go to Gamma.
Yesterday, we've had Microsoft Ignite. Now this NVIDIA print, a lot of catalysts. Where does it leave us?
Well, I mean, you really needed a solid printout of NVIDIA, and as I wrote up on Sunday, I thought we were going to get it for two reasons. The first one is if you look at all their big customers that already reported, Microsoft, Google, Amazon, etc.
NVIDIA.
Expectations for this year.
Very strong morning.
Before they reported Q3, and when their customers reported Q3, those numbers
NVIDIA.
The second thing was NVIDIA's GTC.
Constellation Energy. These are in the top 10. Constellation Energy showing lots of strength. Apple, what's Apple doing? Apple, want to buy a dip on Apple. Okay, so we didn't buy the high of the day, so I've been waiting for Apple to do something, give us a better entry. Watch MACD, Shopify, Palantir.
But interestingly, they guided about close to $3 billion above consensus for the upcoming quarter, which tells you that they're really seeing strong momentum.
Netflix pulling back. Tesla's still pushing. Tesla. Tesla's still going. Very strong move on Tesla. Tesla's number 2.
Earnings estimates for the Mag 7 for 26 now are going higher. For the 493 now, they're going lower. Is that, how material is that given the weight?
I mean, it obviously matters a ton because you've got 7 stocks that are driving the market. The main thing for me and why I thought that thing would be pretty bullish year end was the Fed seemed to say, go back a couple months ago, hey, we're going to cut any inflation we see is transitory. Now you've got up to 4 to 5% if they do cut it, and maybe they don't. That's a coin toss. And so to your point,
okay, S&P 500. Okay, starting to turn here, MACD. All right, I'm contemplating taking some of these puts. Okay, I'm going to take some puts here. Okay.
Pretty relatively disappointing in terms of what they're spending relative to what the EPS is doing. You've got to start, I think, picking stocks because you're not going to be able to have rate cuts driving everything up until.
Okay, I bought a few of the 6700s just now. Okay.
The cutting cycle will start again because President Trump will only appoint somebody who wants to really cut rates.
Dan, having the advantage of having you on with some frequency, you had been saying that you sort of were expecting or potentially wanted to see it.
Okay, I'll add, say, 60.
But I also remember you. I mean, you still have concerns, don't you, about the money being spent and the ultimate return on that? Do you still have those concerns?
Maybe these 6720s, 6730s.
Absolutely. There are 2 concerns I have. One of them actually, I have gone a long way to laying that, which is, I think one of the most important things they said on the call last night was.
Okay, so we're starting to turn. There we go. Okay, hedge flows turning over. Okay, hedge flows are turning over.
We shipped 6 years ago. Those are all fully utilized. So the questions that have been raised recently about, the hyperscalers are all extending CapEx depreciation cycles, so earnings are overstated because of that. And I've actually done some, private work on that, and it seems like there's a high degree of truth to that. So if
BMNZ.
6 years ago processors are being fully
LFS.
utilized, that's great. The second
SGPX.
concern I have, though, still stands, which is
DBLT.
how do you have an open AI, which is going to have a run rate revenue of 20 billion
DLTZ.
coming out of this year, fund 1.4 trillion in capex? I look at a company like Anthropic, which is closer to 100 billion, and they're going to exit the year at about 9 billion revenue run rate, and I have a lot more belief in that. The other part is sovereign, different countries around the world will fund their own AI efforts, which is good, but I think you're going to have to start differentiating.
LFS.
Do you think we've had this discussion a lot, David and Jim and me? Do you think the market can handle an environment in which capital raising?
Let's see. Oh boy, that's going pretty quick here. That was a quick move.
Right? It's struggling with that, but it is differentiating out and saying
You're in Iron,
it's pretty much
Mondo, Iron. Okay.
the AI play. They've got everything.
All right. So hedge flows are turning over.
And products in the Pixel plus all the Android phones. They've got a great AI product itself. They know how to monetize it through advertising. So they're everything OpenAI wants to grow up to be. But the problem is, I don't think they're going to displace Google. So I think you're going to see this increasing difference between the guys who can fund all of the spending through cash flow, like a Google, versus the companies that are hitting the debt markets to raise capital because they can't fund it. Because ultimately, I go back to the following. All of us as consumers have been trained by Google, 5 billion of us over decades, that you put in a question, you get the answer for free. OpenAI is like 80% of their revenues comes from consumer. Anthropic, about 3/4 of their revenues comes from corporate because people use it for coding assistance. So
Okay, watching MACD.
who's in which food chain, who's the most diversified, and then I think you can back into
Okay, volume. We'll see if volume picks up more than to make it unusual looking. But so far, we're fading this.
everybody's not going to win. And the last month or so, people have been really starting to think about that.
Right. Yeah, we're back to that enterprise consumer dichotomy discussion. Dan, a lot to process, and we'll work on it further in the days to come. Thanks, Dan Niles.
Thank you, Carl.
Sarah?
Guys, let's get to the other big earnings mover of the day, and I have some reporting on this one. Walmart shares are strong, up more than 6% after a top and bottom line beat and a full year guidance raise. Just some highlights. U.S. same-store sales growing 4.5%. That was better than expectations. Broad-based strength. It came from tickets. It came from transactions. It came from Sam's Club. With higher margins as well. Another just highlight, 27% growth in e-commerce and more than 50% growth in advertising. Guys, I just caught up with the CFO, John David Rainey. Here's what he told me about the consumer overall. He said we did see a slight indication of weakness with the low-income consumer, but not enough to make us think differently about the economic environment here. That's why they're still feeling good about holiday. He said we are seeing, though, a bit of a downdraft in low-income
NVIDIA.
That's how they track it versus high-income zip codes.
Okay, lower high on NVIDIA. Okay, looking at the top 10 again, Tesla, number 1 now. Tesla's number 1. It's flagging at the high. Regeneron, the biotechs have been very strong. Regeneron, still going. What's J&J doing? J&J, higher. Merck, inside day. Lilly, still going. AbbVie, okay, fading, consolidating. AstraZeneca. I think Abbott Labs is going to get bought out or something. Abbott Labs. Bristol Myers. Okay, XBI. Let's see what that looks like. XBI. Gapping up.
Now the all-important holiday period. John David Rainey tells me he feels pretty good about it. We'll see 7,000 rollbacks, speaking to the lower prices.
Banks caught a bid too. Banks too.
We're taking share across all income groups, but mostly the high income. And one example of that is their online marketplace business. Categories like autos, toys, and apparel. He said all grew more than 40% online, and that is the more affluent customer coming in. How is that happening? Well, they're diversifying their merchandise.
Okay, Iron. IREN, IREN. Okay, turning back up. All right, IREN looks good there, Mondo. Okay, good. JP Morgan, the big banks catching a bid. Nice reversal back above the 50-day. If you want to sell put credits,
But he did actually say specifically we're glad the administration will be now not tariffing some of the food items.
notice XBI, biotechs, you can see on the left side time frame. That's a 5-minute. MACD's trying to cross down. S&P 500. Looks like it's rolling over. Tesla. Apple's starting to fade. Tesla still looking pretty decent. New York Fangs are starting to wilt a little bit.
Them versus Target, them versus Costco, you name it. It's pretty remarkable. By the way, best earnings reaction since last August of 24. Thanks, Mike Sicardi. Coming up after the break, our can't miss interview with Cleveland Fed President Hammack.
Hedge flows, they did drop back off a little bit. Watching for a trend now. Do we just kind of chop around? What are we going to do? Just feels really overbought, extremely overbought. At 126 handles, I think it was at the high. 126 plus. We're at 109 right now. It's amazing. One company reports and all the trickle down and ancillary effects of NVIDIA having its impact. Pretty amazing. Okay, watching the S&P here. S&P, lower highs. Lower lows coming off the high.
QBTZ, RGTZ, IONZ.
SGPX.
Yeah, Frano's in J&J too, I believe.
IONZ.
Okay, S&P continues to fade. We went all the way up to a 5-day estimated move. It's pretty wild. Pretty wild there. Looking for a fade.
MAGH.
Okay, those lotto puts are working. Okay, a lot of things are going to fade now. Okay, J&J. Top 10 again, Tesla, Regeneron, Broadcom, App 11. I like the App 11 for the return trip. It did break the uptrend, though. That's the only issue I have with App 11. This is one that Dan Zanger was in, I believe. Okay, so whenever it's above the 10 EMA and it's trending, he stays long. Once it breaks the trend, which we can see it has already if we zoom out a bit. App 11 was very popular since the April 7th low, but you can see that we broke the uptrend depending on where you put your pivots right along in this area. All right, we broke below the 50-day. So I'm pretty sure he's out. So that would need to get back above the 50-day and then start trending again. But it looks pretty good. Looks pretty good so far. App 11. It's number 5 on the NASDAQ 100. Let's look at some of these other ones. Shopify, the top of the list. Shopify. Shopify, another one that broke the trend, the 50-day. Needs to get back above. Regeneron. Notice Regeneron. Regeneron just gave us a 50, 200-day cross a week ago.
And this one is a bit stale. It's a bit dated because it comes from September. It does look like it was a mixed report, but it's in line with my expectation that we would see some further softening in the jobs market, which just highlights the difficult time that this is for.
Regeneron is a long setup. Stop, low of the day. Okay, Regeneron looks pretty good. S&P.
MSTZ.
I don't think it's going to stay up here. I wouldn't think it'll stay up here. Pretty small on the puts for now. Watching MACD. Let's see.
SGPX.
NVIDIA. Okay, it can hang out right here. It's fine with me, NVIDIA.
MAGH.
Okay, S&P bouncing again.
SGPX.
S&P, NVIDIA. NVIDIA, lower highs, lower lows. I would be just fine with NVIDIA staying right here. I know some of you are long and want this to push higher, but we'll see. S&P bouncing, S&P bounce. I don't like buying the S&P way up here, plus 126 handles. Looking for at least some profit taking, you would think, right? Hedge flows, watching that. We've got the possibility of testing 67.85 first before continuing lower. I don't know. We'll see. Don't trust it, though. That said, the stocks that are showing a lot of strength, like Regeneron, okay, we got a 5,200-day cross last week. Okay, looking very strong here. Let's look at some of the other stocks in the group. The IBB is the top 10, top 20 stocks in the NASDAQ. Biotech ETF. Look at this. Look at that. So I often hear people tell me or ask me, you know, am I buying high? Yeah, you're buying high, but this is trending. So first thing I would do if I haven't started a position, I do have a position XBI. I'd put a stop underneath the low of the day. Or if I don't want to trade this, maybe I would trade XBI. Okay, it's about $50 cheaper. Not that matters. But looking at some of these, what's Moderna doing? mRNA? Nah, that's dirt. Regeneron. So what we were looking at here is the biotechs. Equivia. Moderna, no. Mettler Toledo looks okay. NTLA. So the IBB is ranked much higher. So the top stocks are like 8% of the index of the ETF. NTRA, look at this one. NTRA, just make a comment about NTRA. You got a 20, 50-day cross. You got a, let's see, 5,200-day cross back here in September. Once that happened, stock started to go. Moved above the 200-day, moved above this breakout zone, 181. Look for these kind of setups. Yeah, some of these are a little bit extended, but look for these kind of setups. 5,200-day cross, just run a scan, 5,200-day cross. And then look at a 20, 50-day cross. Okay. But these look good. Bollinger Bands opening up, RSI rising. S&P still trying to regain a foothold here, S&P. But the biotechs look good. The big banks look good. Regeneron, this looks really good, Regeneron. Okay, so I don't want to get too sidetracked. All right, so continuing on, that's number one on the NASDAQ 100 right now. AppLovin is turning back up. Looks like a descending wedge. Okay, so what do we have here? We have a second stage base, it looks like. I don't know, kind of messy, kind of a messy chart, but let me show you what we've got here.
October layoffs being the highest since 1994, isn't it?
Okay, so we got this first stage base right there, cup and handle, right? So we got a cup and handle. We break out above this level. So this is a wedge down. So this is a second stage base. So this is still pretty safe. When you got MACD turn up, okay? MACD turns up. So app 11 probably going to get something going here. RSI rising. S&P still climbing.
In the labor market, and that seems to be what I'm seeing when I look at all those various indicators that you pointed out. It's important that we balance that.
Okay, S&P back to the highs.
Already through the last couple of meetings, and so I think that we need to maintain a somewhat restrictive stance of policy to make sure that we are continuing to bring inflation back down to our
App 11.
It's great that inflation expectations remain contained, but that is a place that I remain focused, that we continue to bring inflation back down to target.
Okay, so banks look good too. JP Morgan. S&P back up to the highs. JP Morgan. Goldman Sachs. All of these back above the 20-50 day. Goldman Sachs. That's pretty funny. My son just responded to his Iron Condor.
Doesn't that feel like restrictive policy that the Fed should try to make things easier for? Well, on the housing side in particular, when I was down in Columbus meeting with a variety of businesses, there were some construction companies represented. And what I heard from them was that the cost of materials and labor is as impactful and is as much of a deterrent in terms of new home production.
My son's cracking me up.
They're buying down mortgage rates, and so there's been some support that happens on that side. But what I hear all across Ohio and Eastern Kentucky and Western Pennsylvania, the various parts of the district, is that it's really hard to find laborers, particularly skilled trades, and that's a place where it's continuing to elevate home prices.
We're here at the Financial Stability Conference every year for 13 years since the Great Financial Crisis. And I think I got to know you in the 2019 repo flash, whatever. What do we call that?
Repo eruptions.
Repo eruption. Okay. Did you have a little deja vu at the end of October? Did you begin to be concerned about what's happening with the tightness in the repo market?
We expect to see some fluctuations in money markets. Okay. We had Fed funds, which is our target rate, was squarely within the range. What I would have liked to see was more usage of the standing repo facility, which is a monetary policy tool we put in place to help manage rates to keep the broad constellation of money market rates within the range, the band that we put forward, which right now is 3 3/4 to 4%. And so it's something that we need to monitor closely. But I'm glad that you brought up the Financial Stability Conference that we're having going on right now. It's really exciting that this is our 13th year that we've been hosting it. We have 2 great keynote speakers here in Itai Goldstein from the Wharton School is going to be talking about fragility,
the
sources of fragility in financial markets, and tomorrow we'll have the Vice Chair for Monetary Policy, Philip.
But I want to ask you about fragility because a couple of things you mentioned. Private credit and the AI bubble. Did you take those separately and tell us, and then together the extent to which...
All right, watching the S&P. Still diddling up here.
Sure. I talked about 3 things that I called out this morning in my remarks. One was private credit, which is a place that I'm spending a lot of time looking at that. The second was stable coins. And the third was the emerging risks from easing policy into accommodative financial conditions.
Okay, NVIDIA.
We're spending a lot of time on as well. There's a lot of innovation in the district around AI. Last week, I was out in Pittsburgh meeting with some folks from BNY who have actually their largest U.S. office in Pittsburgh. And that is the center of a lot of their innovation around AI and the focus that they're doing. They showed us some of the tools that they're using, and they're really at the cutting edge. When I travel the district broadly, I'm hearing a lot of different stories about how AI is getting incorporated into different workflows. At Ohio State, they talk about making sure that every student is taking classes in AI to think about how they should be using it. And so they're more fully in it. What I hear most often is that AI is going to be a complement rather than a substitute to workers. And businesses are using it to help enhance the customer experience and give them better insights around what's
the way I think about it is whether or not it's something that's going to keep me up late at night or get me up early in the morning. And I'm a little selfish about this because the only thing I really care about is systemic risk.
Or how much they could get?
No, that doesn't matter to me. But here's the thing. People can lose as much money as they want going into something, but if it messes up the banking system, that means more work. Okay, so when I think about
just watching the S&P climbing back up to the highs.
the AI bubble,
I have a small put position, no big deal. I don't trust it up here. If it hangs up here, that's great. I got a lot of longs that I want to see continue higher. So
2007, 2008, found out it was directly linked to the banking system. Do you have concerns either private credit or what's happening with AI have tentacles back into the banking system that are reasons for concern?
Yeah, so the financial markets are not the real economy, but they are an important transition into the real economy. So it's a place that I watch carefully. In private credit in particular, there's a lot to feel good about in private credit markets. They tend to have reasonably stable funding. They've got 7 to 10 year lockups. There's no early redemption features. That means that they can stay in the investments that they have for a long period of time. On the other hand, there is ties back into the banking sector in that there's a lot of lending that's happening.
Right.
There's been significant growth in the lending that's happening from the banks into the private credit universe, whether it be NAV loans, capital call lines,
may resume in less
or
than a minute.
other sorts of lending. And what you tend to find in private credit, because it's outside the banking system, is that they use special features like payment in kind,
Yes.
which can increase some of the borrowings that some of the riskiest lenders or less profitable companies can undertake. And so it's an area that I think we need to watch. I feel generally good about private credit because of the long-dated funds that they have. But you have to remember that many of the investors are going to be endowments, pension funds, and insurance companies. And if we see significant losses for pension funds, I'm not going to feel great about that.
One last question on rates. I want to get back to that. Are you a Fed official who believes that long-term rates should come down? In other words, we're operating above neutral, but it's a question about the pace.
In 10 seconds.
Or do you think we are at a neutral rate right now, and we're okay here?
I think we're right around a neutral rate. I think we're barely restricted, if at all. I grew up in the
just waiting for the markets. Are we going to do anything here? What are we doing? What are we going to do?
I grew up when rates were kind of 3 to 6%, and so having a front end and a yield curve that's right around that 4% range feels to me like actually pretty modest interest rates.
I guess we could stay up here. All I'm doing is negotiating some better prices on some of these. I want to roll some positions, but right now I'm just sitting here waiting. I got some puts on. That's about it on the S&P. Just taking a few things off. Got this iron condor on NVIDIA. Feel free to take it off whenever you want. My son already took his off.
LAZR. LFS.
Okay, wow, the market's a lot stronger than it appears for now, at least. I don't trust it. Just feels like it's going to roll over at any moment. Trap a bunch of bulls up here. NVIDIA earnings, yeah, they were good. They're going to have trickle down and ancillary effects all across the markets. But some stocks aren't following through, like Micron. Micron, we saw some profit taking. All right, starting to hold here. Oracle, you would think would be higher. Oracle. It's coming out of a bounce at the 200-day, day 6. So looking for Oracle to continue higher. LRCX, let's see what that looks like. LRCX, oops. LRCX. I know you don't see what I'm talking about. Here, I'll switch screens. Lam Research bouncing off the 50-day. S&P, wow, S&P is killing it. Okay. So it looks like we're going to go all the way up to the 67.85. I can't think of the last time I went long with the S&P up, futures up 120, 110 points at the open. I can't remember the last time I would take a long at that point. With hedge flows showing strength, pretty remarkable. But I am looking for this to roll over, just the same. Plenty of time for the early morning session crowd to chase it up there. Okay, NVIDIA just sitting here.
NCPL. LFS.
On the street, we're about 30 minutes here into the hour. Here are three parts of the market getting a boost from the NVIDIA effect right now. Check out the chip makers, both here in the U.S. and abroad. Taiwan Semi's internationally listed shares seeing their best day since August. The so-called neo-cloud service providers are jumping as well, particularly those related to AI infrastructure and cooling. They are big winners, names like Applied Digital, CoreWeave, all higher. And then this AI demand.
Now he's going to want to do nothing but iron condors. Let me send him the link to the room, the broadcast. NVIDIA. Okay, S&P.
Meantime, Dow's up 650 or so. Let's get a news update with Seema Modi. Hey, Seema.
Carl, good morning. A funeral service for the late Vice President Dick Cheney will begin in just moments at the Washington National Cathedral. A White House official telling NBC News President Trump, who had a frosty relationship with him, and Vice President J.D. Vance were not invited. Former President Joe Biden confirmed his attendance along with
LFS is back, Cayman.
The CDC walking back its previous
LFS is back.
updating its website to say claims that vaccines do not cause autism are not evidence-based. A previous version of the webpage said studies had shown no leak. The agency kept the header "Vaccines do not cause autism" on the website, saying it was not
LFS is back, Cayman.
Cassidy, who is a physician. And Verizon announcing layoffs today of more than 13,000 employees as the telecom giant says it needs to reorient the entire company. New CEO Dan Schulman wrote in a memo to employees seen by Reuters that the company needs to simplify operations and wrote that the current cost structure limits the ability to invest in the customer value proposition. David Olson.
Okay, Seema, I will take it. Thank you. My annual interview with John Malone, of course, a man who's had an extraordinary career in building what was once the largest, we used to call them cable companies, now they're called broadband companies.
LFS.
Of course, that was TCI before he sold it to AT&T.
LFS.
And he also, through Liberty, was a very large shareholder for a long period of time as well.
Tesla
The last 10 years has looked like for the broadband
at the highs. All right, everything seems to be a bit stretched right now.
company Comcast, the shares of which are lower than they were 10 years ago. And so, as part of our conversation, I put it to Malone in terms of, well, how did we get here, and what does the future hold for what clearly is an industry under pressure?
We got here because of
Tesla.
network neutrality requiring massive capital spending by the connectivity industry without any connection to revenue. And so it's like asking Walmart to build shelf space for their competitor and not participating in any of the revenue and also not even knowing what the competitor is putting on the shelves. That's what that did to the connectivity industry. It's driven up CapEx enormously to keep up with capacity. As a result, free cash flow has been under pressure. And then if you add to that,
Future's still pushing higher. Jeez, the strength in this market is crazy.
overbuilt, you got way too much CapEx going.
Going back through the list of stocks that are strong this morning: Regeneron, Tesla, AppLovin. We did those. Broadcom, looked at that as well. Broadcom, gap up. You can't chase it now. Synopsys, ARM Holdings. This one had turned the corner. ARM Holdings, I believe, is back above the 50-day, back above the 200-day. ARM Holdings looking good.
COGT. AOI.
principal control shareholders are selling into the buyback. Why would an institutional investor want to stick around when the most knowledgeable owners of the business are selling in and shrinking? Okay. So I think there's just
Okay, those look good. Let me go take a look at the watch list real quick.
I'm still a big believer
For the week
the business,
of November 16th.
you can't paint with
Okay, Apple obviously back to the high. Let me look at Apple here. Apple.
each business is different.
Apple flagging.
Very real opportunities in the business.
You know what? I might just bite the bullet and go ahead and buy some Apple. Something further out. And damn it. No, I can't do it. Can't do it. S&P still going. Markets are very strong, very strong. Looking at this 6780 overhead, S&P 6780. Thought we might get more of a fade. Not happening.
But it's the same old game in my mind. If you read my book, it's the same old story. Levered cash flow, sheltered growth. And if you can put the pieces together, there is still meaningful
Tesla.
return and opportunity.
Okay, so the watch list Apple,
If they were to take their levered free
AMD, not giving us anything yet. ARQT, BE, Bloom Energy, bouncing. Celestica, multi-industry conglomerate. Celestica back above the 20-day, 50-day. Credo, nice. Credo.
and they've got to think about, do they believe they got a business that can pay a sustainable dividend? And if they do, they may have to do like Verizon, which carries a higher valuation than the cable
Credo looking much better.
and pays out almost all of its free cash flow as a dividend. Right. So some of this is just in the nitty.
Yeah, there goes LFS looking good there, Cayman.
When Warren Buffett, Berkshire, I'm not going to blame Warren. When he decided to sell down his charter stake, okay, that was sort of a signal to institutional investors that, you know, is this the thing to be in for the long run? And if they didn't, it's one of those sell-offs that didn't bounce, you know, the dead cat bounced it back.
Credo.
They're in the midst, obviously, of acquiring Cox.
Yeah.
Very large.
ENLT, GSL Global Ship Lease, the container shipping companies, some of them consolidating. Harmony Biosciences, XBI, as you know, has been on a tear. XBI been on a tear. That's on the watch list too. Harmony, looking for a follow through. Insight, Biotech, Crystal Biotech, trending. Lilly, trending. Merck, trending, consolidating today and yesterday. Micron, pulling back a bit. NB Bank Corp. All right, looking for that to start trending a little bit stronger. NVIDIA, obviously, with earnings. Reddit looks good. Rigel Pharmaceuticals looks good. Okay, so the watch looks pretty good. Shopify, number 5 on the NASDAQ 100. Shopify looks good. Synopsys. Okay, coming off the low, not crazy about that pattern. Google. Okay, Google breaking out again. All right, so I know Frano, you're in that one. I have a Google position as well. Looking for that to continue.
This is wasteful capital spending. The trucking companies aren't required to build their own roads. The airlines aren't required to build their own airports. Why is it that communications companies can't sit, even with regulators in the room, and work out ways to be more efficient?
Okay, Andrew, I took some of the iron condors off. Andrew. Okay, I know you're in Goldman Sachs. Okay, so I took some Goldman Sachs off. These put credits on Goldman Sachs, I took them off. I still have some. Which ones did I take off? I took the 730, 725s. 730, these here. 730, 725. I never did get around to rolling these, by the way. All right, so I have 30 total. 30 total. I just took 10 off for 55 debit.
I have had so many opportunities that I've missed that I really almost have to apologize to my shareholders for being, for missed these things. Like we could have taken over Amazon in 2001 with their convertible debt. We had the cash. Their stock was, their converts were selling like 14 cents on the dollar. I remember it. I mean, and Jeff was, on his. He was scrambling for money. Yeah. So there were many. Netflix. We could have gone aggressive on Netflix. I bought some first, but I couldn't get DirecTV to go aggressive. Talked about that. A whole series of these, that could have, would have, should. Wonderful opportunity. AOL. Buying AOL. Paul Allen. Early. For nothing. But in terms of things I actually did that I regret, I think the AT&T deal, I have to really apologize to my employees for that. Because for the shareholders, it was a home run. You get a 40% premium into a liquid stock. Right. I mean, boom. If you were stock, you hung on, of course. Yeah, I hung on. I hung on really to protect the Liberty side of it. But for my employees, they then went to work for a company that really didn't know what it was doing. And it was very disruptive.
Okay, S&P, I don't know. I can't see how this is just going to keep going.
Go from like $88 down to 14 or something. So they got creamed. So did I.
It could get up to this level and sell. But we're up over 100 and what? 126 handles right now. I don't see how they don't take some of these profits. Now, that's a bias, of course. That can get you in trouble, but looking for them to take some profits off, them being institutions. This is a huge move today.
I'm curious from your business career again, best period when you think about something, and it's a period that was the most, I don't know. The
80s when we were essentially a monopoly. It was like the movie The King of the World, the bond trader when things were really going well. There's that sense that you can do no wrong. Early cable industry.
Tesla, man, this thing is so strong.
An average deal every 2 weeks, merger deal, acquisition deal, financing deal, the banks throwing money at you, Mike Milken, working in your behalf. That was pretty heady stuff, right, for a young guy. And I thought that was probably the most interesting.
The 80s. And finally, we also discussed, of course, the future for Malone. He takes issue with the word retired and certainly likes to point out that he is still a control shareholder in fact, Formula One. And that's where Sarah, of course, is today in terms of their investor meeting. Take a listen to how he views sort of his role at this point.
I'm going to be a very involved control shareholder. Okay?
Very involved.
Very involved control shareholder.
Talk to CEOs every day.
You got to back up here, David, because I look at these businesses as my boys, right? Rapino is one of my boys. I was the first chairman. He's done a fabulous job. He doesn't.
Okay.
Like your adult sons, right?
Okay, watch. I don't talk about this often enough, and sometimes I don't have it enabled on my chart. But if you're buying something like Target, for example, and you're trading options, you should really keep volume and MACD enabled. I usually look at a few other things, but Good idea to keep an eye on that. Because once MACD starts to turn over, you want to be taking profits. Okay, so same thing with S&P right now. Okay, S&P. Look at the crossover. Okay, so you might not be in puts yet. I got a little early. I took them a little early, but you got a crossover on MACD. All right, we're probably going to move lower pretty soon.
So that's why I have control, and I try very hard to not be in a position.
Priceless is my son's reaction to those iron condors. I have to say, very happy. We took 15 deltas. Well, actually, the put side was a 12 delta.
LUD may resume in less than a minute. PLTZ.
I feel like I'm leading a collective.
IONC.
A lot of these people have been working in and around me for forever, right? We're together. My whole philosophy of building businesses is the management, the executives that are actually doing the work should be my partners. They shouldn't be my employees. And if I'm going to do well, they're going to do well. That's how I've done everything.
So you just described retirement for John Malone to me.
At least it wasn't, oh my God, NVIDIA jumped at 220 or something like that when we were underwater. The likelihood of that happening, given the structure of NVIDIA, we had a pretty good shot that this was going to be a good trade. Okay, so we knew, I posted this before earnings. We knew beforehand that we probably wouldn't make it below 160 and we probably wouldn't make it above 200. Okay, just by looking at this structure.
Every year, Carl, I kind of come back and think, all right, John and I have been doing this for I don't even know how long, probably the last year. Then I listen to it and I'm like, I don't know about that. It's like, maybe not. Maybe not. You just heard Thur saying how involved he wants to continue to be. It's different now, but obviously there are any number of companies that are still sort of under his control.
Okay, we're finally turning over. Those options that were underwater there for a few minutes are now starting to scoot back up.
CNBC Pro's got it for you. You can click on the QR code right there on your screen. It's a picture of him from a little time back, I think. Still looks pretty.
I mean, it's interesting. You did the interview in Denver, right?
We did.
Where
go out.
The cable and telecom rollout sort of mirrored where the rails ended
MSTZ.
decades ago, and even in this era where we're trying to figure out this new build out, these new cycles, maybe the one man who can really give us insight into how prior cycles worked.
It's without a doubt. Of course, you heard him using about the 80s and what that was like. But yeah, and it always comes back to sort of the same themes in terms of capital, sheltering that capital, tax advantage, things of that nature. And you clearly heard him earlier on what he feels is the waste of capital spending to some extent in the broadband industry, at least not generating the return perhaps that it should.
Sarah?
All right. David, we're going to get into Malone's views on F1 and a little insight from here as well. Vegas getting ready for an F1 weekend in just a bit. Much more on this NVIDIA-driven market rally.
PLTZ.
It's a pretty strong day. Nasdaq's up more than 2.25%. The S&P zooming 1.75%. Yes, NVIDIA giving a strong outlook, sort of rebutting the whole AI bubble story, but also odds go up for December rate cuts after that jobs report. More Squawk on the Street when we come right back.
LFS.
MSTZ. PLTZ.
System that's issued bullish ratings in our backtest for 44 of the top 50 stocks of the year, 2 years running. In fact, my system flashed bullish on all of the Magnificent 7 AI stocks before their massive run helped mint 600,000 new American millionaires. But that was then, and this is now. Looking ahead, I believe the biggest potential gains will not come from the Magnificent 7. My system is now pointing to lesser known companies. Stocks you will likely scroll right past. That's why I just recorded a brand new presentation revealing what's really happening right now beneath the hood of the stock market. It's a story I haven't seen reported anywhere else. My number one stock to buy today, along with a popular AI stock I urge you to avoid or sell immediately.
QBTZ.
Visit my website below for all the details, including a free recommendation that's flashing bullish in my system.
Weeknights. Sell-offs like this can be bought only if you have cash.
Okay, we continue to move lower. So what we were expecting is working. Okay, those puts are back up to even Steven, almost.
Make your money hustle with Betterment.
5 years ago, Jeremy saw a problem.
So it's put on the internet every day how to brands that can find their customers.
So he raised a ton of money, acquired an AI company, founded by this guy, and built Brad Intel. The results speak for themselves. Over $50 million raised, investors from some of the biggest names in tech, and contracts with Fortune 1000 clients.
And we're just getting started. Aggressive acquisitions, breakneck platform growth, and a reserved NASDAQ ticker. RAI.
Wait until November 20th.
LED may res in 10 seconds.
It's on fire. It's got very predictable next couple of years of growth. So it's incredibly cash generative compared to most businesses. Just the structure of it. I love it. I mean, it's what's not to like. It's a fun asset.
UVIX.
I've now.
UVXY.
I'm stepping back from the
IONC.
being called chairman.
Yeah.
I'm still the control shareholder.
RGTZ.
I'm
PLTZ.
John Malone, of course, as you might expect, excited about the future of Formula One. And Sarah, you're out in Vegas, of course, ahead of that Grand Prix race they have going on there. You just heard from the control shareholder.
Right, and Liberty Media today is hosting an F1 summit.
Oh, by the way, those the put flies, those still have them, but those will be dust, which is fine. They were a hedge anyway, so.
What kind of growth is left in F1? And this is Liberty. I don't have to tell you, David. It was acquired in 2018 by Liberty Media, 4.4 billion. Its now market value is around 24 billion. And there are questions about just how much growth is left in the U.S. as part of that story. You're also going to hear from Michael Rubin. He's going to be speaking at
Okay, S&P rolling over. There we go. All right, you should be back to even on those puts that I took here.
A lot of key players when it comes to the business of sports here. You'll hear from them in the next hour of Money Movers. But David, there is a lot of excitement here with the new Apple deal. Remember, they just acquired the U.S. TV rights for F1, and also reports about a record valuation of an F1 team, the Mercedes team, reportedly being valued for $6 billion in a potential new deal for Toto Wolff, the CEO, to sell part of his stake. All of that is sort of increasing the attention on these higher valuations and the growth that the sport has really seen. And I will say, we're here in Vegas in part because so many business leaders come here. An increasing part of the revenue story around F1 is these sponsorships, and whether it's American Express or LVMH sponsoring the league, or companies like a MasterCard or a CrowdStrike sponsoring the actual team. You can't imagine how many CEOs and business leaders are here because they're excited about the growth in this sport.
Yeah. So interesting. And of course, back in 2018, it was Greg Maffei who helped orchestrate that acquisition of F1, as Sarah pointed out, a very strong one for Liberty.
There's a good documentary about that, I heard.
Yeah, I've heard that as well. You did hear Malone say he's been offered a premium for his control shares, not interested in selling. So maybe take that off the table a little bit.
SMCZ.
Meantime, holding on to these gains, although Bitcoin, which failed to take out yesterday's high, just about $1,000 from a 8 handle once again. More of this market rally comes.
Let's see where this goes. Are we going to stay up here in this range? What are we going to do here? Maybe take some off. Okay, I'm going to flatten this for now. Maybe not. Let's see how far we go with this. All right, we're probably going to drop into this. I don't want to exit too soon on these puts. 100 handles. That's crazy. Okay, we're already off 20 handles from the high. Okay, people will start taking profits. They'll get nervous. They'll see the market starting to move low. They say, "Oh shit, let me get out."
LUD may resume in less than a minute.
And coverage toward hearing aids. That's more than you get with original Medicare, but it gets even better because Humana offers plans with $0 low monthly plan premiums. You may also get $0 copays for routine vaccines at in-network retail pharmacies, $0 copays for in-network primary care visits, and $0 copays for in-network preventive services. Plus, worldwide coverage for emergency and urgent care when you travel. And Medicare Advantage plans ensure your covered medical costs, including doctor and emergency care, will never go above a maximum out-of-pocket amount that you know beforehand. Imagine benefits like these in one convenient plan.
Okay, we're going to lose this level? Probably. Man, this will start to drop pretty quickly now. Most likely.
Call or scan the QR code now to see if there's any coverage and benefits, including coverage for doctor, hospital, and prescription drugs.
Okay, here we go. We're going to drop into the gap. 50% retracement, maybe. Okay. Let's see. Where do we start here? That's the gap. Fair value gap. 50% would be right there. Okay.
As teachers, taking care of ourselves is taking care of our students. AG1 gives me a little bit of kickstart to my day, and I know it's full of ingredients that help support my immune system. I've got a whole classroom counting on me. I don't want to miss a day.
Buy the dip with Pro's best deal of the year. Never miss market-moving news and interviews with 3 global live streams. Go Pro at cnbc.com/Pro Black Friday. Terms and restrictions apply.
Okay, that's what I'm looking for. Okay, there goes the S&P. Good job. Good job. Okay, what's NVIDIA doing? NVIDIA dropping off. Okay, so we can close this for better profit, this Iron Condor. Still, what a great gap up, right? What a great gap up. Let's see, Goldman Sachs. Do I want to take anything else off? I got 30. I had 30 put credits. I can take some more off here. Let's see.
Meantime, tons of news between NVIDIA and the delayed jobs number today and some Fed speak. All sectors are green, got 2% gains in comm services and IT, although the S&P is basically back to levels that we saw midday.
Goldman Sachs. Do you think Goldman Sachs is coming back to 740 anytime soon? 740. Okay, I have these and I have these. 730, 735, and I have the 740, 735. January and December. I'll just leave these alone. These are going to evaporate too.
WKHS.
CORD, MSTZ, GHD.
So very optimistic view of the revenue outlook from here. Just the nature of the numbers. I mean, you beat the quarter
billion. That hasn't happened for a semiconductor company ever. They grew by $10 billion sequentially. That hasn't happened ever. So really robust growth, a lot of strength. Still some cynicism from investors about the sustainability of these investments, but personally, I think very strong outlook for all of next year.
Okay, that looks good. All right, back to S&P. NVIDIA pulling back. S&P. Okay, into the gap. Fair value gap.
Yeah, 100%. I think, and the company has been aggressive about making investments into its customers and into various partners in the market. And I think they've talked about that. They've been transparent about it. They're enthused about the investments that they're making, and they're using it as a catalyst to grow the market. And I think the message that they have, which is that the spending so far is coming from the capitalized companies that are out there.
Don't wait for me. Take profits whenever you want on these puts. Okay. Probably going to see more downside, I would think. All right, I could take some of these off. I got 10 of these. I could take some off. Nah, I'll let these go a little bit more. I know Frano likes to let these things go until it's like septuplets, 5-10 times what she paid for them. Frano's, if you don't follow Frano's really good with S&P 500 options. So if I'm not talking about it, usually Frano's posting in the trading room. Not to exclude other people, obviously, but just an observation on my part. We're usually on the same page. When we're not on the same page, I usually will do a double take and make sure that I'm looking at what I should be looking at. Okay, this is looking pretty good.
NVDQ, SMCZ, CORD.
You're going through those anxieties, but a very strong outlook, a very good quarter, certainly the best quarter that we've seen from them in the last year, and to me a very positive outlook from here.
I do wonder, hopping off of Sarah's question, how it makes you think about Broadcom, and it may be AMD as well, but I mean, you chart Broadcom against NVIDIA over quarter to date, 6 months, year to date. What does that tell us?
MSTZ, UBXY,
Well, I think there's a lot of enthusiasm for all of the AI names, right? And I think that we're not at the point where this is a zero-sum game. I feel like everybody is benefiting from the strength that you have. I think you see a company like AMD, which we have at about 3% market share. There's a lot of opportunity for that number to go higher. There's dials that they can turn that NVIDIA as a big company can't, but it's also uncertain. Broadcom similarly has a lot of irons in the fire, a lot of different things that are growing, a lot of different partners that they have. To me, they're all pretty good growth stories.
CORD,
But I would say NVIDIA trades at the lowest multiple of the three.
LFS
and when
may
you sort of
resume
think
in less
about
than a minute.
all of the business being AI versus those others that have some lower multiple businesses as part of the mix, I actually see the most upside for NVIDIA. But
Okay, what do hedge flows look like? All right, starting to hook. All right, I'm going to sell some of these.
Over the past few weeks into the quarter. Joseph, it's really an important print. Street's glad we got through it. Good to see you. Thanks for
Okay.
Joseph Moore over at Morgan Stanley.
Okay, looks good. All right, so I took half of my puts off here. Looks like we'll keep going. Okay, NVIDIA. Do I want to take this iron condor off now that vol has crushed? Probably, right? Let me go ahead and take this NVIDIA iron condor off. Let's see. What can we get for those? Buy them back. Open orders, working orders. Okay, I can get out for $52. Okay, so I'm gonna go ahead and take that off.
It's a relatively tepid bounce. There's time for that to maybe reaccelerate from here. It seems the overall market had a bit of a sell the rip response in the last half hour or so. But you weren't seeing Microsoft get much of a bid.
Or should I just hold on to this? Probably should just hold on to it, right? Yeah, let me cancel this order. Cancel.
You sort of have this overlay of caution around that side.
Okay, so NVIDIA, I'll just stick with this for a little while longer. Let me check out the chart. All right, we're headed back down to the 50-day. This is even better. As usual, I always double up at the end of the day. So I have 10 of these. That's $1,200 for overnight. So if I can keep 1,000 of that, close it for $20, $25 per contract. That'd be good. All right, so it looks like we're going to keep going here. S&P looks like we're going to keep going. Have some calls ready in case we get a bounce. Okay, so I have my trade windows. I have a puts on the left side, calls on the right side, active trader window. All I need to do is hit buy the market and sell the bid or sell the ask whenever I need to. Very quickly, one click. I love this Thinkorswim now. I hated it when we first transitioned from Schwab, but now I love it. Now I love it. So those of you who said I will love it eventually were right. Okay, put side. Let's see, put side. I told you 60. What we're looking at, the 6630s. No, 6730s. Okay, those are $19 now. 6700s. Those are $9. All right, so that was a nice trade if you took the 6700s. Okay. Okay, that looks good.
What does it mean for the financial profile of these companies that we got used to not really having to worry about?
We still going here? S&P. All right, NVIDIA. S&P. Okay, yeah, we're gonna head down into this level, right? We're gonna keep going.
I don't think it has to be a bubble or a bubble about to burst for there to be material downside in certain names. I think it's healthy. We started to separate winners from losers. That is down 25% from the high. Oracle's off.
Okay, so those 6700s are going for almost $10 now. So we got in an average around $5, 520, I think was the entry. We're at 10 now, so 100%. Good level to take some off. Okay, moving a little bit lower.
VXX, VIXY, SOXS, MSTZ, NVD, CONI,
WKHS.
IONCSM may resume in less than a minute. RGTZ, UVXY.
Okay, let's see.
NVDQ, PLTZ. LFS may resume in less than a minute.
Hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 11:11. Let me get a snapshot of this. 11:11.
WKHS.
That's a good omen, I guess.
You gotta stop doing what you're doing. Why? Because bookkeeping sucks. You shouldn't be doing it yourself. So go to Zingy.com. And what you're going to get there is a trusted financial partner. So you can do what you do best.
So with those options, you buy one put. All right, we suggested it. If you bought one put, you just made $500 for the day. Okay, so you're done. $500 a day. That's $10,000 a month. The more we use this hedge flows, the more accurate our trades are. Really love using alpha. Really great tool. Look at all these sales here. They sold all of these, so we're getting this cascading effect. Okay, they're selling these, so we're getting this cascading effect.
WKHS. Select quote. We shop, you save. I started the club for you. I don't have a background in business or finance. I need further insight. Jim was just a person to give me that. Join the club with Jim's best deal of the year at cnbc.com/club Black Friday. Terms and restrictions apply.
UVXY,
Overcomes about
MSTZ,
understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to sophisticated investors, beginning investors. I'm always looking.
Closing bell overtime. Weekdays 4 Eastern and streaming on CNBC Plus.
Holidays. Beautiful, right? They are to her. Because she banks with China. So she gets paid what she says and earns cash back on everyday purchases. Ooh. Bank smart this season through China.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Hidden Trust ETF. The Bitcoin fund from the world.
All right, so there your hedge flows are telling you what to do, what the markets are doing.
Just search for Ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
I set out to help brands cut through the noise with an AI-powered growth engine. We've raised over $50 million for over 10,000 investors and delivered real ROI for Fortune 1000 clients. Everyday investors like yourself can have a seat at the table.
Wait until November
WKHS.
Welcome back to Money Movers. I'm here in Las Vegas, Nevada. Formula One Business Summit as Liberty Media hosts investors and partners to kick off the F1 Grand Prix race this weekend. Liberty Media, of course, owns and invests in a number of media, entertainment, and sports assets, including Formula One. It owns MotoGP and investor in Live Nation. Here with me now in a CNBC exclusive in his interview back in January is Liberty Media CEO Derek Chang, and full disclosure, I am a member of the McLaren CEO Advisory Board. Derek, it's great to talk to you. Thanks for having us here.
Sarah, it's great to be here, and I want to thank you because I know you were early on into F1. Your Inside Track show was awesome, and I think you educating all your viewers on what F1 is.
Okay, so we continue to move lower.
Well, it's also been fun to
All right, those puts are cashing in now. The 6700s. They're at $13 now.
Since this is your first major TV interview, Greg Maffei led the company for about 18 years. How are you going to put your stamp on it from a strategic point of view?
Well, look, I think, as you know, I have a long history in sports and media and entertainment. I helped start the Yes Network in New York. I was with DirecTV for a long time, managing their content portfolio around NBA in China. Recently co-founded
More low ticks.
which is heavy into the digital streaming space for sports, high-end sports. So I know a lot about these industries, and I think being able to put that upon sort of the operating Stefano and Carmelo, both at Formula One and MotoGP, is helpful. Be able to speak the language. And then if you pull back a little bit, I think my long relationship with John Malone, as well as our chairman, is helpful because I understand what the drill is and what we're trying to do in terms of our shareholders and delivering returns to our shareholders over time.
Okay, so let's talk about that specifically on F1, where we're here.
Okay, very nice move here. S&P still going. Hedge flows trying to inflect here. All right, so maybe take a little bit more off of this. Okay, we continue to drop off. Where are we? We're getting close to this fair value gap. Okay, looking really good. All right, that's a really great trade. That's a really great trade.
Demand has been huge. It's there. Our partners that we've brought in because the race is here, people like Amex and Lego, Disney, they're all activating, this whole entire weekend. Peloton's doing a live show from Vegas. We have Kane Brown, a bunch of other musical acts. I think when you walk around the city right now, it is alive, and it's because of F1.
Well, and you bring up sort of the revenue model, which is interesting. So part of it comes from these sponsorships, an increasing amount, right? There's the TV rights deal, which we'll talk about, but that brings in the revenue. And then also just the ticket sales and promotion. What's the right balance for all of those sources?
Right now, it's pretty evenly split between the three categories. More recently, we've seen a lot more growth coming out of the sponsorship category.
More low ticks.
From what you would have seen 10 years ago when we bought, much more on the endemic side, and now much more leaning towards sort of consumer products companies. So people like Disney, PepsiCo,
Oh, gonna clean house on this one. Gonna clean house. Note the MACD cross. Okay, so Should always be paying attention to this. I've failed to talk about it sometimes, but when you're buying to the upside, okay, which is one of the reasons why I was reluctant to go long at the high. Once you see MACD cross down, okay, right there, or start to flatten out. All right, once MACD starts to flatten out, that's your exit. That's your exit signal or a short signal in this case. Okay, so yeah, that looks good. Win-win. MACD has yet to change direction as well. Watch the volume as well. Okay, the volume is a tell. Look at the volume. You don't want to buy a bounce right now. There's too much volume right here. Does this help? Does this help all? I mean, I'm just talking out loud. Okay. Looking for a bounce. We're getting very close to this L2 level, 1 day estimated move, vol trigger. Could get a little bounce here. You might want to take a little bit more profits off. We just could slide right through this, would be something else. Wow, this is going. This is still going here. Okay. So as long as that MACD is pointing lower like that, let me go to the 1 minute chart. 1 minute. 1 minute chart. Okay.
We view it as a very strong partnership that we could see it happening in other places, but you know, nothing's for sure.
1 minute. 1 minute MACD. Okay, that hasn't changed direction yet. Okay, we're going to still slide here. Okay, S&P. So those 6700s are $24 now. 6700s are $24.
You've seen it over the last 3 to 5 years here in the U.S. The number of people that are saying, "Oh," and their knowledge of the sport, and that comes through watching the sport. It comes through following it on social media. All these different touch points that we want to create with people comes from buying merchandise.
Okay.
Showing up at races, and I think that there's still
23.
to go for us, so we're really excited by this.
But in the U.S. in particular, you already have 3 races here, and you don't have any really big star racers that are American. Some people think that that's what's necessary to really up the momentum in this market. What do you think?
I think this brand is a very, very interesting brand for a lot of people here. And we would love to have an American driver. We don't need an American driver to be successful, and I think we've shown that. I think the sort of star power of the existing set of drivers, team principals, that whole dynamic has been amazing for the sport. I think people have latched onto it, and you know that's.
There was a little bit of worry there. I will tell you, when we got this bounce right here, I said, "Oh shit, they're going to take this and push it higher." But then I looked at hedge flows. Hedge flows made a lower high. You see that? Hedge flows made a lower high. Where are we going to stop? Okay. Hard to say. Okay, we got some support right in this area.
WKHS.
How does that change the business dynamic?
Well, I think it's great. I mean, having an American presence and what Cadillac has, their dealer network, you know, the promotion and the marketing that they can do and get behind it. I was with Mary Bear a couple weeks ago. I think GM is totally behind this thing, and I think that it will be fantastic.
Okay.
They're bringing Checo back. So
Do we bounce? Create a bear flag. Create a bear flag would be good. What's VIX doing? What is the VIX doing? VIX. Okay, VIX is bouncing. My son is killing me. Sure.
It's not like the NFL where the worst performing teams are still in the competition.
Yeah, but if you look at it, and there's 10 teams, and you've got 3, 4, 5 teams, and some of the guys in the middle of the pack are coming up. I mean, that's a pretty big percentage of the number of teams on the grid. So if you think about
Low tick alert minus 800.
Are we still going here?
it's much more democratic.
Oh boy, look at the puts go. All right, they're gonna. How far do we go here? How far do we fill the gap? Do we fill the gap? The gap's way down here. 66.50. Take some 66.50s. Huh.
What are your expectations here? How much of a change?
Okay, you know what? I'm gonna just take some profits. You're probably gonna make a lot more out of this trade, but I'm gonna take some more off the table. I don't want to be greedy. I got other things I got to pay attention to. My son's texting me about iron condors.
Michael Rapino and his team are phenomenal at what they do. There's risk in every business. That's sort of their bailiwick, and but we have confidence that regardless of what happens, that we'll have a very successful business.
And then quickly overall, how do you think about the capital allocation between F1 and some of the investments, MotoGP, also balancing out return to shareholders?
Look, I think one of the best uses. I mean, we've announced with the MotoGP acquisition, we're delevering right now, but at the same time, consistently and constantly looking for organic opportunities, ways to put money into the existing businesses where they see opportunity. And I think that's going to be a pretty high return on capital, and that's clearly what we're looking for.
You got to get a drive to survive from MotoGP.
Okay, let me just look at what is reporting tomorrow. I would still be short. I just took the rest of my position off for now, only because my son's asking me a question and I'd like to help him out here. He had a successful trade on, let's see, Zoom, Baba, Nio, Dell. That's next week. Today's the 20th. After hours is Gap. Let me just see what else is. What else?
Significant elements of that is really where the opportunity is. So we're really excited.
Well, Derek, thank you for.
Who else has earnings tonight?
It's good to be here. And we look forward to talking
Bear with me one second. I just want to help my son out here. He had a successful trade on NVIDIA iron condors. Now he wants more. Hilarious. I told him he's going to like it. Okay, Webull tonight, Viva, Copart, Gap, Elastic, Intuit, 10, Post, Ross Stores, BJ's tomorrow morning. Yeah, there's really nothing. Okay, we're still going here. Okay, puts are still going.
Stores nationwide will get details. Plus, how comments from NVIDIA's call are shaping some street views on depreciating assets, something that Michael Burry's been talking about for a couple of weeks. Stay with us.
EPSM.
All right, let me just send him a message. Okay, looks like we could bounce here. All right. Okay, we got a little bounce right in this area. Take some profits. I would take some profits off. NVIDIA, looks like we could bounce. Yeah, NVIDIA maybe a bounce.
EPSM.
EPSM.
If you're on Medicare and you get this, you could end up with this. Unexpected out-of-pocket costs, which for those on Medicare or soon to be is a good reason to take charge of your health care. So consider this: an AARP Medicare Supplement Insurance Plan from United Healthcare. Why? Because Medicare alone doesn't pay for everything. And what it doesn't pay for, like deductibles and copays, could really add up, even thousands of dollars a year. Medicare supplement plans help by paying some of what Medicare doesn't. and making your
EPSM.
out-of-pocket costs a lot more predictable. Call United Healthcare today and ask for your free decision guide. Learn more about.
Hold on one second. Okay, we got a bounce coming here.
And want less out-of-pocket costs and more people.
CNBC's best deal of the year. Market moving news and at
Excuse me.
CNBC.com/.
Don't mean to cough in your ear. Could be a bear flag. Probably going to be a bear flag, right? Probably a bear flag.
Carl, the union is now 1 week into its open-ended strike, adding more than 24 new cities to reach 65 in total.
Okay, Apple rolled over, so I didn't take any Apple. As we mentioned, I don't like buying at the high of the day. Okay, I like buying pullbacks. So if we bought up here, we'd be really upset, right? Market's pretty much going to go in the same direction. I mean, the Apple's probably going to go in the same direction as the markets anyway. So we're looking for a bounce here.
It's seeking new proposals that address its top issues to finalize a contract. Those include improved hours, higher wages, and the resolution of hundreds of unfair labor practice charges levied against Starbucks. The strike so far has not changed the fact that the two parties have not been in active negotiations to reach a contract after talks between them fell apart late last year. Starbucks maintains it will be ready to serve customers across its stores this holiday season, saying, quote, 99% of our 70,000 U.S. locations remain open and welcoming customers, including many the union publicly stated would strike but never closed or have since reopened. Regardless of the union's plans, we do not anticipate any meaningful disruption. When the union is ready to return to the bargaining table, we are ready to talk. It's a lot of finger pointing between the two companies.
NVIDIA.
To reach this contract and get back to the table. But Carl, certainly the chance for this to escalate further as it is open-ended.
I was just thinking, Kate, I mean, they're already trying to restructure some of their corporate workforce. We've been watching their assets in China get restructured as far as that ownership goes. This is just adds another log to that fire, doesn't it?
Yeah, certainly. I mean, this has now run through this union issue for CEOs, and there's been a failure to reach a contract here, and it's something that the union's been pushing for since 2021, Carl. I will note, though, Starbucks says so far this has not impacted its sales. Its holiday launch was its best sales day ever. Its Red Cup Day was the best in its history, Brian Nichols said in a memo to employees last week.
Low ticker at -800.
More lows. Yeah, it just looks like bear flags, right? Bear flags.
So there is the chance that this could spread further.
Kate, thank you. Kate Rogers watching Starbucks. Let's get a CNBC News update with Seema Modi.
Extreme low ticker at.
Oh, extreme low.
Inspectors with precise information about its stockpile of near weapons-grade uranium and grant access to the country's nuclear sites. Now, Iran has not yet responded, but is legally obligated to provide under the non-proliferation treaty. Iran has also blocked inspectors.
Okay, S&P 500.
By the U.S. and Israel.
Okay, you should have a good profit there. We could go a bit more. Maybe keep a couple of trailers on.
Australian users younger than 16 next month ahead of the country's
Through the gap. Boy, this is taking the balloon. This is taking the air out of a lot of people's enthusiasm this morning.
Messaging apps are excluded from the ban. And according to the NOAA, last month's Hurricane Melissa hit a historic
6700s are now what? What are they going for? 6700 put 0 day. 6700 0 day is going for $30.
Okay, thank you, Seema. Fanatic CEO Michael Rubin is coming up with me in just a few minutes right here in Las Vegas. Earlier this year, Fanatic's extending its partnership with F1. We'll get into that. The company's push into betting and the prediction markets stir up some controversy. And just in general, how the sports merchandising business is going. All of that when Money Movers comes right back.
UVIX.
Low tick alert -800.
Oh boy.
They just fall.
Okay, now I'm looking for hedge flows to turn back in the other direction. We're down below support. Okay, there's a support level at 6620. 6620. What are those going for? 6620. If we go there, 6620 is $4. I doubt we get there, but I'll have that on my screen just in case. Look for another bear flag. You know what? I've had a good day on S&P. I'm not gonna throw money at it right now. I'll just manage a few other positions. Iron Condor. I could close these now. For $50. Okay. Looks like it wants to keep going here.
That's not how investing works.
Okay, hedge flows are trying to turn right here. Hedge flows are trying to turn.
Wealth isn't won in a bet. Luck is not a strategy. And success demands discipline. You're serious about investing.
EPSM.
Right.
The FBI calls it house stealing, the latest scam where a cyber thief transfers the title of your home out of your name and steals your hard-earned equity.
It's roughly 60 to 90 days for that person even figure out that they're the victim of this crime.
6,700.
Notices, and you realize you've got 4 mortgages on your house that you didn't even know existed.
$35. Wow. 6,700's at 35 now.
How about something your wife will actually like? Like a custom glass fracture print, made unique, just like her.
Okay, we're still going. I don't know. It feels like we're going to hook upward. I can't take anything else down here. This is crazy. Probably keep going. Okay.
RGTZ. IONZ.
Some mornings the road calls for more than just horsepower.
Okay, hedge flows. Looking for this to turn. VIX is still pushing higher.
It's the details. How you carry the moment that sets the tone. This isn't just about looking.
NVIDIA back down to the 50-day. NVIDIA's getting back down to the 50-day. Could close these for about $50 right now. So $700 profit if you close these for $50. I'll let it drop a bit more. There's no reason to do anything at this point.
LUD may resume in less than a minute.
Now, this project builds on a separate $10 billion infrastructure investment that is already underway in the state. And together, they really mark this next phase in Amazon's push to scale AI campuses across the U.S. But the big question with these builds is whether there's enough reliable power to keep them running. Entergy Mississippi will be supplying electricity
leveraging grid capacity, power
Low
grids by
ticker
natural
minus
gas.
800.
More.
Now, this AWS expansion, it is one of multiple hyperscale campuses in development across the state, and also part of this broader effort to position Mississippi as an emerging hub.
Okay, S&P at a minimum. If you're gonna think about going long, you got to get MACD to turn up. So, watching MACD. Watch for MACD to turn.
Mac, just your thoughts about geography here. Obviously, we've talked about Louisiana and the Rocky Mountain West, but this is spreading a little bit, yeah?
Precisely, and that's why you're seeing names like
Okay, keep an eye on hedge flows.
Amazon and XAI all building in that
Still going.
Louisiana, Arkansas, and Tennessee that has very hospitable geography, flat land. It's, it's powered and more competitive in its pricing compared to other parts of the country. And at the same time, you also
Still sliding. S&P is still sliding. Let me go to the 2 minutes. So I'm gonna see a little bit. See a little bit more.
PLTZ. ETHD.
No MACD, Chet. No MACD yet.
Merchandise partner of F1. We're going to get his outlook for the increasingly crowded betting markets as well. When we come right back, Money Movers live from Vegas ahead of the big F1 race. We'll be right back.
CORD. NVD. QBTZ. BMNZ. IONZ. PLTZ. UVIX. SOXS. UVXY.
EPSM.
Okay.
Pay for everything. Your deductibles and copays could add up to hundreds, even thousands of dollars a year.
Everyone's a little surprised to learn that one.
Adding a Medicare supplement plan helps
6,700s.
and that could mean fewer
Okay.
surprises and more predictable out-of-pocket costs. Call United Healthcare and ask for your free decision guide. Or talk with a licensed insurance agent or producer to learn more about plan benefits, options, and rates.
$39.
Medicare supplement plans let you
Wow.
choose any doctor, any specialist, anywhere in the U.S. who accepts Medicare patients. You don't have to deal with any networks or referrals. This kind of plan also goes with you anywhere you
$40.
travel in the country. If you're turning 65 soon or over 65 and planning to retire, you're in the right place. Medicare supplement plans with the AARP name are the ones endorsed by AARP.
Thumbs up to that.
SOXS.
Remember, the time to prepare is before you go on Medicare.
Don't wait. Get started today.
Take charge of your health care. Call United Healthcare for your free decision guide and learn more about lowering your out-of-pocket Medicare costs and seeing any doctor who accepts Medicare patients.
Oh, and happy birthday
UVIX.
or retirement in advance.
CORD.
No matter what you drive, there's only one guarantee. It's gonna break down. I had a sensor light up on my dashboard. $2,600.
Okay, this is still going. 67s are $47 now. $47. Okay, that was a big win. Those of you who took it.
Almost a $6,000 job. Endurance covered it.
With Endurance, your car's most expensive parts are covered, plus hundreds more. I got a check engine light and a huge bill to fix it. Endurance covered it fully. I just call Endurance, tell them what my customer needs, and Endurance takes care of it. If your car's under 20 years old, Endurance has you covered with unlimited miles. So,
UVXY.
who's going to pay for your next breakdown? You?
Or Endurance.
ASG
Right
and
now,
Multi.
you can get $300 off any plan, plus a year of elite benefits, a $2,000 value free. All
Low
backed by a
ticker
30-day
minus
money-back
800.
guarantee. Call 1-800-903-3923 for a free quote.
CNBC's Changemakers
LRDA
2026
less than a minute.
spotlighting women who
QBTZ.
innovate, lead,
SOXS.
and are transforming
IONZ.
business. Do you know someone who's rewriting the
EPSM.
future? Nominate them now at
UVXY.
cnbc.com/changemakers.
Kim, why don't we just talk about what you see happening in the markets?
I have never been more excited about the future of the market.
NVD.
I just wish I could figure a way out to live 90 more years.
GSLP.
Extreme low, take a look.
Okay, NVIDIA, I'm out.
Welcome back. CEO of Fanatics is also here in Las Vegas for the F1 Business Summit ahead of this weekend's Grand Prix. Fanatics is the exclusive retail merchandise partner of F1. He joins us now in an exclusive interview. Fanatics CEO Michael Rubin, and just full disclosure again, I'm a member of the McLaren Advisory Board. Michael, it's great to see you here in Vegas. You never miss a big sporting event, and this is the center this weekend. Talk about where Fanatics plays when it comes to F1, because yes, you do some business, but they also have a big deal with Puma, for instance, for the merchandise.
Yeah, F1 is a very strategic partner for us. We are both the exclusive.
Okay, puts just like, jeez, what a trade. What a trade on S&P.
Trading cards in F1. We opened our store in London earlier this year. Lewis Hamilton came to help open it.
Damn, Penny, that was a good one. Didn't expect that. But how many times did we get like a, oops, let me go ahead and sell some of these.
People are really excited to be here. So many of the stars are coming out for this race, and I think just in general, there's a lot of momentum for F1.
Yeah, you said global, and I know that's a big part of your growth story at Fanatics. You sort of conquered U.S.
Okay, I'm completely out of S&P now.
Market. Well, I don't think we've conquered anything. I think we're just getting started.
Right, but that's your home market, right?
That's my home market for sure.
Well, maybe give us an update. It's a private company, so how big has the business done? It's really a tale of three businesses.
Yeah, Fanatics will be over $12 billion in revenue next year, 22,000 people. But we feel like a startup. I mean, we are in three businesses, as you said. The original business,
LUT halted to the upside.
that's everything January related. That'll be about
Okay, that's good. 60, those 6,700s hit 35.
$3.5 billion business next year. And then the betting and gaming business,
44.
$1.5 billion plus business next year. All three are growing very nicely. And you know, for us, the thing that I'm so excited about is every day we wake up and say, how can we make it better for the fan? What can we do to make it more interesting? And we're really obsessed with that. We feel like, you know, even though we are 22,000 people and over $12 billion in revenue next year, we feel like we're a startup.
And how much is international expansion part of the growth story?
Yeah, international is a big part of our business now. You know, global soccer is, global football is, you know, be $1 billion plus business. Certainly, sports like F1 are so strategic to us. So, and really, this hits, you know, our
Low, tick alert, minus 800.
fans. When you think about the F1 business,
Okay.
you think about, you know,
The rest of the move, if we get any more, is for the greedy. I can't blame you for wanting to hang around. This is doing really well.
If you look at the growth of the business, I'd say our international business is probably growing 50 to 75%, when the balance of the business could be, low double-digit grower.
So I mean, the business is growing fast. I think the last revenue figure was $8 billion back in 2024. You just said 12.
Yeah, we'll be over $9 billion revenue this year. Last year was about $8 billion. Next year will be over $12 billion in revenue. And again, we feel like each of the businesses have tremendous growth ahead for it. You know, collectibles business, we just launched the NBA October 1st this year. We're launching the NFL. Will be the last big set of rights that are moving over to Fanatics.
ASGN may resume in less than a minute.
And there's so much enthusiasm in collectibles right now, really driven by the product innovation we're doing, the market innovation, things like the debut patches that we created in F1. You come up and you drive for your first time, you get a debut patch. That's the one-on-one card everybody really desires and wants. And then things like, you know, Gold Logo Man's taking the best moments of sports in baseball. Ohtani, Aaron Judge, MVPs this year. They're going to wear the gold Logo Man all year long. The next season, people, you know, there's the most coveted cards that there are. So we keep creating exciting products, great marketing with that. And we're really taking the same approach in all of our businesses.
What about the sports betting business in particular? Because you entered a pretty capital-intensive business there where it was dominated by two players that had a few years of a head start on you.
Yeah, it's been
ASGN may rise in 10 seconds.
Interesting business because everyone told us we were nuts.
We're still going here.
We want to get into this business.
Mm-hmm.
We have two major players in Flutter that owns FanDuel and DraftKings. They're two incredible companies. And for us, we thought, look, we have 140 million fans in our database. We have so many strategic advantages based on all the relationships that Fanatics has. We thought we could create a better value proposition. So when we approached
low, tick alert, minus 800.
We said, what can we do to be different and better? We did two things that have been huge home runs for us. The first is every time you bet with us, you earn fan cash. So win or lose, whatever you bet, you earn fan cash. With that fan cash, you can make more bets. You can buy merchandise.
Extreme low, tick alert.
You can
We're still pushing this.
You can
Ay, ay, ay. This thing is going like crazy here. Wow.
Next year, $1 billion of fan cash, and that $1 billion will all get redeemed.
What is this level here? This is looks like we're headed here. 6620s. Okay. All right, I'm done. I'm not gonna fiddle with this anymore.
We take them out of the bet, and so there were like over 1 million bets that would have lost that won because of our fair play. We want to use things that are more fair for fans. So how are the results?
LUT may
We've
resume in
gone
less
from
than a minute.
irrelevant to the third player in 2 years, and we're the only sportsbook that I think is really growing its share every quarter. We're the fastest growing sportsbook and casino in the country, and I feel like we're just getting started.
What about the predictions markets? Very hot right now, fast growing. Do you think that there's a risk that they cannibalize sports betting?
Yeah. So first,
And also, are you going to get in?
I'll give this to you first, right here.
Yeah.
Let's go. I'm giving it to you right now.
We gotta make
We're launching the next couple weeks.
launching it.
Fanatics prediction markets. Absolutely.
Is this with crypto.com as it's rumored?
It is. It is with crypto.com, and we're super excited about. Look, from our perspective, if there's a business that is important to our customers, we want to be in there and do it better. So I'll say something that I think won't be conventional thinking. I think the winners in this are going to be the sportsbooks. I just think if you look at what Flutter and FanDuel has, and DraftKings and Fanatics, I think we have such strategic advantages from the enormous customer base that we have to all the experience. And
Are you saying like an advantage over the Kalshis and Polymark?
Yeah, definitely. And look, I like both. I mean, each of those companies are led by studs. You know, I think that they have great founders, and I'm fans of each of theirs. But I just think if you look at the inherent customer base, the experience that we have in this business, you know, it's super exciting for us. And look, we're only in 23 states today, so there's 27 states that we're going to launch in that we think, you know, customers want this product, and we want to give it to the customers. And
Regulatory risk, though.
there's definitely look. I can't tell you what the regulatory environment's going to be. What I can tell you is, if the regulatory environment says that we can do this, we're going to do it. And if it changes, then we'll change with it. I would not have believed a year and a half ago that all these fantasy players, prediction markets, sweepstakes casinos, I didn't think any of these things were
Low
going to be
tick alert -800.
So what do? We adapt, we build, and so we're launching our predictions.
They're $54 now. Holy shizzle. 54 bucks.
Do you think it will have a negative impact overall in the business? And what does it tell us about where regulation should be?
Yeah, so I'll give you a very unconventional answer here, which you'll probably love. I think the legal sports markets are working exactly the way they should be working. I think the reality is, sports betting has been a century-old business. There's been, and by the way, today more of it's still done in the illegal markets. The reason that these things are coming to light is because
Okay, we're gonna start to turn here now. I got a feeling we're gonna start to turn. Where did we 67? Can we get back? All right, looking at Lee Star reversals. Okay, I'm done with the puts now. Okay, done with those. I'll put this note over here somewhere. Okay, so we're done with this now. Okay, watch MACD's starting to turn up. You see that down there? See MACD starting to turn. MACD's turning. Okay, MACD is turning. Close those puts.
Yeah, look, for us, what we want to do is build the best company in the world. That is what I'm focused on. Do I think that could be an eventual outcome? Absolutely. Is it something we're thinking about today or in the near to midterm? No, we're focused on building the best consumer experience to growing these businesses, and certainly we think we'll create a tremendous amount of value as a private company.
All right, and you heard it here first, launching the predictions market in a few weeks with crypto.com. Thanks for the scoop.
Absolutely.
Michael Rubin, always great to talk to you.
Great to be with you.
Michael Rubin.
Yeah, they did, didn't they? Yeah. What about the puts that I had? I have the SPY. I got the SPY. Put fly. Let me see what I can get out of that for. Put fly. Still pretty far away from my. Okay, we got a MACD cross. Okay, we got trace turning up. Okay. Okay, we're getting a turn here. All right, should see a bounce. Okay, you should see a bounce. We got to see this turn up. Okay, hedge flows need to turn up. But if you check out MACD down here, it's turning up, starting to turn up.
LUD may resume in less than a minute.
Grandma doesn't spend all day at the infusion center. She gets her treatment at home with Evernorth's specialty pharmacy, Accredo. So Sarah never misses story time. Evernorth Specialty Services.
A lot of bulls are freaking out. They were all happy and jolly. They weren't paying attention to MACD over here. MACD's your friend. Wow, look at that move. Holy shizzle. Okay, if we get back above the 50-day, that would be a historic whipsaw.
Fortunately, in only a few minutes, SelectQuote found John a $500,000 policy for only $29 a month, and his wife Anne a $500,000 policy for only $21 a month. Go to SelectQuote.com now and get the insurance your family needs
At a price you can afford. SelectQuote. We shop, you save.
LUD. LUD. MNDR.
PLTZ.
Access to a world of investing that's reserved for a select few. By bringing public and private markets together, we're transforming.
Okay, looking for that to turn up now.
Explore our world of public-private plus funds. Take the first step.
MACD's trying to turn.
Low tick alert minus 800.
SOXS. TSLQ. MSTZ. UBIX. UBXY. IONZ. NBD.
LUD.
PLTZ. VXX.
Okay, we're going some more. We're dropping some more here.
Ninja Transfers helps you print on virtually any apparel with direct-to-film transfers.
Ninja transfers are so easy to learn, you'll be a master in no time. Plus, Ninja transfers.
Okay, no turn yet. MACD's trying to turn up. Just too much going on here.
Extreme low tick alert.
More? Okay, more.
UBXY. IONZ. PLTZ. NBD.
Says, didn't really think this get through.
PMNLUD halted.
Say everything you want.
SMCZ.
Let's go in some more. Jeez.
I set out to help brand cut through the noise with an AI-powered broker. We've raised over $50 million.
Hedge flows trying to turn up. Okay, give it a few minutes. We could stab a little bit lower. We're looking at support.
Tech Check is sponsored by Comcast Business, powering possibilities.
TSLQ. UBIX.
This debate around how many years AI chips are actually useful.
UBXY.
Adding some fuel to those bubble fears, NVIDIA
IONZ.
CFO weighed in on that last night, saying
MSTZ.
that chips they shipped 6
CORD.
years ago are still fully
PLTZ.
utilized today. It's a good
RGTZ.
topic for our Deirdre Bosa in today's Tech Check. Hey, Dee.
Hey, good morning, Carl. So that's right. CFO Colin Press. She tried to put the depreciation debate to bed, but she may have actually raised even bigger questions. She essentially said that NVIDIA chips, they last longer than most people assume, 6 years, and still at full utilization thanks to its CUDA software.
MNDR.
But what does full utilization actually mean? Running isn't the same as creating economic value, and that is where Michael Burry comes back in, throwing cold water on the whole idea. He posted on X that extending useful life confuses physical utilization with value creation. He likens the A100 chips to airlines that keep old planes around for holiday overflow. Yes, they fly and they're full, but they're only marginally profitable. They're not worth very much at all. Now, Jensen Huang has basically admitted this. He said last March that you can keep old GPUs working, but they become almost impossible to sell once the next model shows up. This was at GTC. He said that Blackwell, its latest generation, is so much more powerful than Hopper, the previous generation, that, quote, you couldn't give Hoppers away. He said there's only a few circumstances where they're even fine. That's where he was fine. Now, in the current moment where supply is tight, old chips, they will get used. But if that imbalance changes, and this is sort of the question on everyone's mind, does that value drop very quickly as well? The risk for investors is this uncertainty. If you do not know how long these chips stay economically valuable, you cannot properly model capex or margins. You can't model the AI cycle with confidence. Meanwhile, guys, I know we talked about Google's GPUs yesterday as a longer-term alternative to NVIDIA GPUs. If the market is struggling to understand
what's Walmart doing?
NVIDIA hardware,
Walmart's up quite a bit. Looking good.
it just dropped Nano Banana Pro this morning. Its new image model, powered by Gemini 3.
MACD. Looks like we're going to go a bit more here. S&P. Wow, that's crazy. This market's just selling.
Still up nearly 1% today as the tech trade overall sort of softens.
Yeah, that's a great example.
MNDR.
You're right. The conversation is not going away. It's definitely feeding the short discussion. And that's not even mentioning some of the innovation that we're getting out of the likes of China.
We got 3 deltas, 4 deltas. They're going for $180. That's crazy. All right, looking for hedge flows to turn back up.
So much less than American model builders. I mean, it's like a 9-to-1 ratio. We're spending on GPUs on all of this infrastructure, and the Chinese are able to create comparable open source models in some cases, beating out some benchmarks. How does that all sort of pan out? And that's another bigger question for sort of the bubble anxieties that I think is only going to get louder and raises questions also about the GPU.
Still moving lower, still moving. All right, 6,700s. If you're still in those 6,700 puts, they're $88.
Extreme low. It was a beat and a raise, a really strong quarter from Walmart. U.S. comp store sales better than expected. Better holiday outlook. I did speak with CFO John David Rainey. He told me, though, they are seeing this weakness in the consumer, a slight indication of weakness with low-income consumer, he says, but not enough to make us think differently about the economic environment. They see the gap, for instance, in high-income versus low-income zip codes on discretionary spending, but they're executing really well, and they're increasing business in places like advertising and memberships, which drive higher margins. Carl, they also announced
93. Holy shizzle.
stock exchange to the NASDAQ. And part of it because of their increasing focus on tech. You know, I'm told a big part of this is that John David himself was on the board of NASDAQ for a long time, so perhaps it's surprising there.
Oh my gosh. What a disaster. We're looking for a bounce, though.
In the market, when it comes to, you know, these technology companies, maybe that's playing into it as well if they're looking for sort of a higher tech-like valuation. But just in general, the business is firing on all cylinders, including the retail business, which was driven by higher ticket and higher transaction.
Indeed, and that e-com number, just mind-blowing, well above 20%, leaving in the dust what Target printed the other day with 2.4, and even what Amazon's going to be able to put together in these past few quarters. As for the market action, Sarah, we're on the cusp of losing 6,600, VIX back above 25. Obviously, you can feel sort of some of the street maybe de-risking in the wake of that NVIDIA print, and we're not done. Of course, we're going to continue to work through a series of catalysts on the way to year-end, but not as many, having worked through AMD and Microsoft and a lot of these Mag 7 earnings. Let's get back to Frank Holland at Post 9.
Welcome to the halftime report. I am Frank Holland in for Scott Wapner. Front center at this hour, the big reversal. Stocks at session lows as NVIDIA gives up its post-earnings pop. So what's driving this rollover? Our investment committee standing by to debate that and much, much more. Joining for the hour, we have Joe Terranova, Stephanie Lake, and Brent
WKHS.
Before we get this conversation started, quick check on the market. As Carl just noted, we're in the red across the board right now. Again, at session lows. The S&P pulling back just about 0.25%. The NASDAQ pulling back about a third.
LUD
Even
halted
Russell's
down.
in the red right now. The Dow pulling back just about 45 points. But remember, we were in rally mode earlier today, and that's where I'm coming to you, Joe. What's going on? I think everybody's trying to figure out what's going on after that great NVIDIA report that made every index pop, and now we're giving up all those gains.
Look, it's frustrating to have to come on air and share with the viewers what is actually right now unfolding.
WKHS.
And it really relates to cryptocurrencies and the continued decline that we're seeing there. Ethereum, Bitcoin, they both rolled over in the middle of the day, took the market down, the equities market down with the crypto market. You're now staring at greater than 20% losses on the quarter for each of these. Why is this happening? Because this is an example of where we have been in the last several days where investors and speculators want to take risk off the table. And that's the environment, that's the sentiment, that's the tone. And to see the reversal that we're seeing in equities with NVIDIA, I don't think it's endemic of there's something wrong with equities, okay? Extreme valuation equities, we saw what the market did to Palantir post-earnings, good earnings, bad price reaction. The market right now wants to invest, wants to allocate towards the AI theme, but it wants to do it with the quality names. NVIDIA is a quality name. So I don't think this is endemic of something troubling with NVIDIA. I think this is more about sentiment in the market.
Okay, looking for this to turn now.
Speculators want to take the risk off. And that one area that I continue to be focused on is cryptocurrencies, because that's where the leverage is. And excessive leverage, Frank, is always the troubling spot in the market.
Just to illustrate your point, by the way, Bitcoin back below 90,000. Earlier this morning, I believe it was about 91,000 stuff. So a big decline there. I'm looking at Ether in the red too. And I want to kind of jump off of Joe's point right here. He says the market likes quality, even if it's high valuation. I'm looking at Palantir. I do think that's a quality name. That's down more than 2.5%. Vertiv, almost down 3%. So, Joe, to your point, I know you said it's a lot of margin calling, and people sometimes they have to sell their equities to pay off their crypto losses. But why do you think these names in particular are so hard hit? Because after that NVIDIA report, it seems like their businesses are solidified, and some of these fears have been eased, at least for today, where we thought they were.
There's absolutely nothing wrong with NVIDIA.
Okay, let's see. S&P, we're trying to turn back up. Looking for that confirmation to the upside. Not yet. Not yet. It's too early. I'd like to see this bounce.
7% of the S&P 500, very, very overowned. Very well liked by the sell side as well. It's like 100% of the analysts have buys on this thing. So it is very overowned. I'm actually intrigued that Broadcom has actually acted better today, because I think it's a little less overowned, but it's still there. It's still very popular. But the issue is it's the food chain. So NVIDIA obviously is the AI play, the pure play, and the technology side. So is Broadcom, so are a lot of technology names. But then you go and you look at data centers and the industrials that build out the data centers. They're getting hit. They reversed as well. So did the grid players, the utility players, and now
LUD may res in 10 seconds.
Independent power producers are all down. They've all reversed as well. So it's like this knock-on effect. And I don't think it's the right action, to be honest with you. If it's because of Bitcoin and people are taking risk down, go to these quality companies that are not reacting to where numbers are going up substantially, where there's substantial buybacks and increasing up dividends, and the total addressable market is substantial as well. So I think you want to pick and choose. Do you want to do it today? I don't like the action at all, but I do think you want to pick and choose some of these companies. Every one of the names you just mentioned, I think are buys here.
Brent, I want to come over to you. We often go to you when we talk about cryptocurrency, specifically Bitcoin, because you've been an IBIT holder. What do you make of the action going on here? And I do want to point out the IBIT, the iShares Bitcoin ETF, is actually trading a bit lower than the coin itself.
Okay. That was a hell of a trade. Gave us a little scare at the open.
Right around maybe 92, 93, and it just can't seem to break past that anymore.
Yeah, well, I want to go back to what Joe was saying.
Those puts topped out at $95.40.
De-levering in the system. So where do a lot of institutions and specifically hedge funds lever up? Well, number one, they access the repo market, which has been very wonky lately. But more important, the yen, borrowing yen, go and buy risky assets. I mean, the 10-year JGB.
Okay, watch MACD. Looking for a turn. MACD.
So on a percentage basis, it's a massive move. And so I think you have this de-levering in crypto.
Okay, NVIDIA, I did take that off. The iron condors on NVIDIA.
Offside in this yen, borrowing yen. And so you have this liquidity sucking out of the market. And I feel like with Bitcoin, as liquidity comes out, Bitcoin gets hit with the bid, or crypto in general. And so to me, until we get the stabilization in the liquidity, and I think crypto will be the first sign of that, I feel that the market as a whole is saying there's something else happening. Because to Steph's point, I mean, NVIDIA's numbers were great.
Okay, hedge flows have yet to turn up markedly, so we could see some more downside, unfortunately. But MACD is trying to turn here, so I can't really do much here. I don't like buying at the low of the day.
Low tick alert -800.
So, Joe, I want to come back over to you.
UBXY.
Right now, we're looking at
SOXS.
NVIDIA trading lower.
IONZ.
And this is a question I've been asked this about 5 o'clock
NVD.
this morning. After this great
GECS.
report, do you buy more NVIDIA?
MNDR.
It's pulled back about 0.5% or 2/3% based on the moves right there. Is this a viable place for NVIDIA after that really strong earnings report that showed, at least for the near term, we're not in a bubble? Can you buy here on this very slight dip for NVIDIA or any of these other names on this dip?
As I grow older, I've become more and more confident that you have to have a process.
PLTZ.
My process is becoming more and
TSLQ.
more rules-based because I think
TSLZ.
market structure
TSDD.
dictates that. And I think you need to have discipline in a certain
MNDR.
regard.
All right, what are the fangs doing? All of those are lower. Okay, looking for a bounce there. Wow, what the hell happened there? Look at the daily. Look at the daily candle. Holy smokes! I don't mean to make fun. I mean, sure, there's some people that didn't participate on that move, but okay. Daily looks ugly. Okay, looking for this to turn back up. This could look completely different in the next couple hours. So watch this MACD. All right, I would suggest using a 2-minute, 5-minute, and watch the MACD. See if it gives you a cross. Let's go to the 1 minute. 1 minute. Trying to cross over. I think that's too short of a time frame, but we'll see. We'll see what happens here. Looking for this to turn back up.
LUD may resume in less than a minute.
All of them. I like all of them very much. You know, Vertiv was my
MNDR.
choice on Worldwide Exchange.
Great show.
Your awesome show. Between now and the end of the year, I still think that Vertiv is going to do well between now and the end of the year. This is an air pocket. This is an air pocket, and they're selling the entire theme at this point in time. But this is where you kind of go in and you look and you buy on the weakness, especially when you have orders and backlog
MNDR.
to the degree that you have in all of the names that I just mentioned, 40, 50, 60% in terms of growth in orders and in backlogs. These numbers I've never seen from an industrial company. But all that being
Okay,
said,
looking for this to reverse now. This feels way overdone. Wow, 126 handles. That's just hard to believe. That was 140, almost 150 handle move from top to bottom.
I said yesterday on the show, video time spent up 30%. That is ROI by definition. And so to me, now the stock is trading at 18 times forward estimates, revenues at 26%, which I think is sustainable. And I think it's overdone. So that's the one I added to, and I bought Microsoft brand new when it dipped on its quarter. And I do think Amazon is absolutely a buy because on the retail side, they are one of the haves versus the have-nots. It's Walmart, Costco, Amazon. And I don't think Amazon gets credit for their retail business. I know we're talking about AWS for this name. People like to talk about that. They accelerated that growth as well. So that's the one that I am looking at. I have not bought it back yet.
If I could, let me just clarify something as it relates to NVIDIA. My feeling that you don't buy NVIDIA here, you wait for a breakout above a new all-time high. It has nothing to do with NVIDIA.
All right, VIX, big move on VIX, back up to the highs. NVIDIA. Okay, NVIDIA. I took the Iron Condor off. Nice profit there. $48 average or better.
I think we basically went 7 for 7 with this earnings report. There really was no disappointment in any of these Max 7 names. So the visibility in terms of strong earnings growth and the guidance towards continuing that into 2026.
Let's see if we can't get a reversal back up here. Walmart. Let's see what Walmart's doing. Walmart have the 100 call for January. Walmart. Okay, so we're up $6, 106 and change. Okay, so the 50 days up and to the right. Okay, this is something I'll probably hold on to for a while. Another low tick alert. Okay, 50 days up and to the right, 200 days up and to the right. We're above the 50-day, 921, 200-day. Walmart. That looks really good. Walmart looks really good.
Low ticker at -800.
With about a 60% gain. And then I sold calls again
for January at 220, like so 2.5 months from now.
IONC.
I do think this $200
UVIX.
for NVIDIA is a
VIXY.
ceiling. If it couldn't break through
UVXY.
today on these stellar
SOXS.
numbers,
RGTZ.
Okay, that fair value gap got filled, right?
VXX.
his view of the partnership,
GSLQ.
if it can't be a
GECS.
sustainable rally today, I do
GSLZ.
think that $200 is going to be a ceiling until, to Joe's point, we
NVDQ.
get some more animal spirits. And even then, I still think $200 is going to be a tougher spot for it to break through. So I will continue to sell calls and take advantage of that.
Wow, that's crazy. Nothing there.
Somewhat sideways.
Still don't have any turn.
You know, I think about an hour for the show. I thought we all thought we were on a way different show about NVIDIA and bullishness on the AI trade, the AI build-out. Great note from
GSLQ.
Hedge flow still pointing lower. They're losing additional levels. All right, so that put fly that it took on SPY, that's looking a little better.
Both Micron and AMD were kind of late to participating in the AI story. They kind of sat out on the sidelines, and there was this rebuilding of positions in both of those names more recent. I think Brent talked about this the other day, and I agree. I think
What time is it? 12 o'clock. It's kind of hard to take trades here.
DRAM memory plays that you think about getting into. But the market right now is in the mood and in the environment of wanting to raise liquidity and remove a leverage that's in the system. And when you have names like AMD and Micron that have, to a certain extent, gone parabolic here over the last 45 days, they are clearly going to be susceptible to more aggressive selling than maybe some of the other semiconductor names that we view as quality, like a Broadcom.
Okay, I'm just going to take a couple minute break. I'll be right back.
Valuation, because while you were talking, I was looking at the valuation of Micron. It's only trading at about 12 times forward earnings. So valuation doesn't seem to be the story, Steph. How are people picking the stocks that are going to trade lower today? Because we mentioned, and we were talking about this all throughout the day, Walmart's up about 6.5% for a company that size to make a move. That's incredible. A lot of other names like Broadcom are still higher. So when we're looking at these names right now, what do you think investors are looking at to decide which ones to sell, which ones to move higher?
The way I've always looked at it is when a company reports earnings that are good and estimates are going higher and the stocks actually go lower, I don't like that action. Joe is the expert on that. But I don't like that action, but I think it is the opportunity over the long haul because I do not know when this is going to end. Nobody does. I do not know the price of Bitcoin, where that's going to settle out. Nobody does. But when we do see a stabilization, and it may take a couple of days, couple of weeks, but when we do, people will go back into the companies where the earnings estimates actually went higher. Because that is your opportunity. Stocks follow profits over the long haul, on the way up and on the way down.
LUD may rise in 10 seconds.
But yet the stock action isn't good. That doesn't scare me at all. That actually gives me the confidence to be adding to some of those numbers. That's one of the reasons, by the way, that I was adding to Meta and adding to Microsoft, and I'm going to add to Teradyne, because these are great, great companies that are now getting caught up in all of this noise, and I think that that's the long-term opportunity.
So would you count Palo Alto Networks in that same, I guess, basket or bucket? You own it, Joe owns it, Bryn, you own the BUG that holds it as well. I mean, Steph, is that in that same basket? The current quarter guidance was a bit weak, but it was a strong report.
Oh, it was a very strong report. I think it has nothing to do with the earnings because they beat and they raised guidance. I think it has to do with the second acquisition that they've done.
Chronosphere?
Yeah, they did another, right? So I think that they've done 2 deals now in a span of like 2 months. And I think that's a lot to handle.
GSLQ.
While I do think it is very, very
minus 800.
More low ticks.
Platformization is what it is all about.
UVIX.
It's offering the most
UVXY.
stuff for your customers
PLTZ.
and not one company out there,
VXX.
not even CrowdStrike, which is the
SOXS.
very best. Palo Alto's number 2.
VIXY.
None of them offer
GECS.
100% of their
GSLZ.
stuff to their customers. And so you need to make acquisitions. And I've said this many times, there are 4,000 companies in cybersecurity world, private and public. We're going to see massive consolidation. We're already starting to see, I think, the big 5 get bigger and bigger and bigger. And if people don't like this acquisition for the short term, I think they're missing out on the long term and what the needs are for their customers.
Very quick acquisition.
SOXS.
The CyberArk was what, $25 billion back in July,
UVIX.
and now this is about a $3.5 billion deal.
GSLQ.
Several months later, so the market's kind of looking at that and saying, okay, we don't want you to become a serial acquirer. The core of the business is really strong.
NVD.
And a lot of the bookings have a longer duration, which lends itself well
VIXY.
if you want to view this along with CrowdStrike as more of that
TSLZ.
core cybersecurity holding. I think these two are distinguishing themselves
RGTZ.
above all else.
No question about it. CEO said last night on the call, 78% of organizations are implementing AI. Only 94% are
UVIX.
still, or
UVXY.
94% are still
NVDQ.
lacking security
MSTZ.
guardrails. That is a big, big statement.
VXX.
If you don't believe the total addressable market is bigger than AI after those kind of statements, I don't know what will.
I want to come over to you. As we mentioned, you own the BUG cybersecurity ETF. We're talking about spending on acquisitions with these guys, but I also want to mention the CapEx for Palo Alto was also higher than expected, and we've seen companies be punished
RGTZ.
for just spending too much money
VIXY.
in this quarter and also recent other previous quarters.
Well, right. I think it's also
UVIX.
partially the market is just
UVXY.
weak today. But just to put some context on
SOXS.
Bug, which is going to own
MSTZ.
CrowdStrike,
NVD.
Palo Alto,
VXX.
Zscaler, all of those, we're $1 away from the April lows, like when we had Liberation Day. And so, that just shows you how far, really since November, Bug was like close to 30, 36. It's now about to break 30. And so
VIXY.
that's, to me, an opportunity where I'll be looking to add here. Because if you're just getting a sell-off back to those April lows, to me, like Steph said, it's like
UVIX.
these companies, I believe, are
UVXY.
secular winners. There's going to be some more than others. But when you're getting this type of drawdown, which I don't think is fundamentally driven, I think it's a very good opportunity for me to add to Bug in a diversified way when I'm hitting, once again, close to the April lows that we saw earlier this year.
While we're talking about lows right now, the NASDAQ actually hit a session low right now, down just about 1%. Also, our data team doing some great work. Bitcoin actually hitting its lowest level since you're about to say this, since late April.
Yeah,
Actually, maybe go past that point.
If we could, and allow me a couple of seconds just to talk about this, and I think I had a conversation with Brent several weeks ago about crypto, and I said I believed our strategy was late
MSTZ.
to crypto holdings, late to adding Coinbase, and we added
TSLQ.
strategy as well. And when we added strategy,
CORD.
I literally felt
LUD
as
may
though
resume in less than a
I wanted
minute.
to vomit at that moment. I did not want to have strategy. Strategy is not, it qualifies for the S&P 500, but it's not in there because it has not gotten that approved. There's nothing we can do about that because purely the rules say, okay, based on momentum, you add strategy in, and obviously at the next rebalance we'll do it. But
Oh boy. Hope everybody's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. On a pretty historic gap up, 126 handles, gave back 40, and we're still going. Jeez, what a crazy day. 47 handles. Still showing weakness. MACD's trying to cross up.
Understand when you see the signals that the mood of the market is changing. It doesn't mean it defeats the overall secular bull market. Doesn't mean it defeats the very strong tailwinds that exist. But you just kind of have to understand it's a moment to step back because risk is coming off. And once we see that to begin to exhaust itself, then we'll step back in and we'll buy some of the more quality names that we like.
Strategy pulling back more than 6% right now.
IONC.
In terms of the other big story today is the return of the jobs report, that delayed September number, coming in a lot better than expected, but with higher unemployment. CNBC's senior economics reporter Steve Leisman joins us now on what this could all mean for the Fed. Steve.
Hey, Frank, yeah, the jobs report generally supported the view that the labor market remains in decent shape, or the Fed speak did not suggest additional downside risk to the jobs market. But you're right, there were some cross currents in there. Non-farm payroll at 119, that was against an estimate of 50,000. Unemployment rate ticking up 4.4%. That was actually towards the high side of the rounding. It was about 12 basis points in there. July revised down by 7,000. August by 26,000. So you lost 33 total. And the wages were disinflationary, is what I might say about them. 0.2, although the average hourly number 3.8 over year. Not a bad number. I asked the President Ben Hammock about this tension that we have out there between weak job numbers on the one side and high inflation above target on the other side.
What we hear from the workers is that they're holding on to their jobs for dear life. We are in this low hiring, low firing environment. But what I also heard at that same roundtable was that the money that that they have coming in is just not stretching as far as it used to. That $30, what used to cost $30 now costs $50. And so they really, that inflationary pressure is still very salient for them.
Market's making pretty much a dovish bid on the chance of a rate cut. It's up now, likely because of the jump in the unemployment rate, but it's still a long shot in the absence of additional data. The chance of a cut rising to 36% from 24%. But that, the Wednesday minutes made clear Fed Chair Powell did not have the votes for a December cut, and that the bar may be high. And Frank, I don't know what happened in the last little bit there, but you did take a leg down in stocks. You took a leg down in yields as well. And that's going to play a role, I think, in the outlook for the Fed here. But the market seems to have kind of lost a bit of steam here, didn't it?
Quite a bit of steam. Actually, the NASDAQ hit session lows. The S&P down about 0.5%. So understatement is another one of your skills, Steve. I want to go back to what you were hearing from Hammock and just when you were talking to central bank people. They always say the data dependent. Okay, so you've been kind enough to send out the data reports that we're definitely getting from the government. We get jolts on December 9th. And then a few days after they make their decision, we're getting the next jobs report. How can a Fed that's data dependent make a decision to cut or even not, or do anything but pause, I should say, when they know another jobs report's coming up in just a few days, and knowing what we saw in October, biggest layoffs in about 20 years, I believe, since according to Challenger Gray and Christmas, and then we got the Amazon layoffs, UPS layoffs that you and I worked on together. Not knowing that number, how could you cut in December when the next jobs report's coming out in just a few days?
Well, I don't like as a reporter to start a campaign, but I am trying to do a little write-in ballot for the Fed to pause its meeting. I think it ought to wait for that data to come out. I don't see what it costs them to delay it. And the reason, Frank, is because it's important people to understand there's not just one jobs report that's going to come out with that November report. We're also going to get the October, at least the establishment side of the survey. So the Fed will be getting two looks at the jobs report, the October and the November data, as well as the revision. So I think a data-dependent Fed ought to pause and be dependent on the data here, but that's just me. I think it's a good question you asked. They ought to wait for it. Right now, there's a lot of discussion as to how much the job market is weakening, and then, of course, what we're waiting for, Frank, and I'm on the edge of my seat here, is when we get that inflation data. It's supposed to come out on the second day of the Fed meeting, but we don't know if it's coming out. We've not been able to get in touch with the BLS to tell us, are you putting out that inflation report on time for November or not?
Hey, Steve, it's Joe. Good to see you. Fed Governor Lisa Cook has made some comments here about the markets and about valuation, citing in particular stocks, bonds, and private credit. How comfortable can we feel the Federal Reserve is aware of the private credit market, in contact with
low
the
ticker minus 800.
Should we glean some form of comfort that they are on top of that situation, if in fact there is one?
Joe, that's a great question.
I asked
Beth Hammock about it today. I want to know that they're looking at the connection of the private credit market to the banking system. Even the AI funding story, I want to make sure that they're on top of that, and they suggest that they are, that they're looking at it. In general, Joe,
Extreme low ticker.
the things that end up blowing up are the things the Fed is not looking at, or that regulators in general are not looking at. There is some weakening going on right now, where some rolling back of bank regulatory capital under the new regime of Michelle Bowman. I'm not saying it's wrong. There are those who are concerned it's adding risk. She thinks she's adding essentially some reasoning or rationale to the banking regulations, which were pretty tough in the post-Dodd-Frank era. So that's happening. I think you got to be on your guard, Joe, is all I can tell you, and hope that there's enough equity in front of the debt to soak up the losses before it gets to the debt charges.
All right, Steve Leisman, thank you very much. Great interview with Beth Hammock, by the way. All right, coming up next here on Halftime, we're all over this rollover on Wall Street. Stocks now negative as NVIDIA turns red, but there is some green out there. Walmart higher following earnings. Going to break down that quarter coming up next. More Halftime in just 2 minutes.
All right. MACD is trying to turn.
She's so ready to take over with a comprehensive plan to help grow and protect your wealth for generations. Doors are meant to be opened.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire. I need Indeed. Indeed, you do. When you sponsor a job on Indeed, candidates can find it easier, so you can hire easier. Visit Indeed.com/hire. At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise.
Okay, S&P is starting to turn. You might want to consider some longs now. 6650s maybe, some 6650 calls.
If you love the stock market as much as I do, you're gonna love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome. To be on the floor, I just can't believe I'm here.
Go pro with the best deal of the year at cnbc.com/pro.
6650s.
The gifts you give say something. A custom glass print for fracture says something.
6620, 6650s.
I was like, I don't really know you. Oh, I'm used to disappointment.
EPSA.
That's instead. Say everything you want and more with fracture.
I have MACD turns and hedge flows turns.
A life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse.
Okay, MACD has crossed. MACD has crossed.
1-800-523-6900. Coventry Direct, redefining insurance.
And welcome back to halftime. It is a sudden sea of red out there, but Walmart is leading the Dow following earnings. The company hiking its sales and its earnings forecast. Joe, you own this one.
To do, and this is a really strong report. Look, they talked about higher costs ultimately.
Okay, watch NVIDIA. Let's watch NVIDIA. Okay, MACD is starting to turn. Okay, it's 2 minute. Let's see what the 5 minute looks like. 5 minute, not quite. Starting to turn a little bit. NVIDIA. Okay, S&P 500. Okay, we had the S&P 500 crossed over.
LUD may rise in 10 seconds.
You're going to have in the coming quarters is going to be much more difficult comps. Stock sitting here at 106. I don't think you're getting aggressive if you don't own it and saying, okay, we're going to rush to buy it here. I think you might be able to get this a little bit lower, maybe in the low 90s at some point. But we do, and we have had positioning in it for quite some time, and we maintain that.
Brent, I saw you nodding a bit while Joe was just talking. A lot of people see Walmart as a read on the consumer because they have the big grocery business, and they've really grown the discretionary business for things like makeup, skincare.
S&P looking for a turn back up.
What do you think it says about the consumer?
Well, I think that it says more about, to me, where the consumer shopping.
NVDX.
Upscale. You have Walmart Plus. You know, I find myself more and more ordering from Walmart versus Amazon because they have locations everywhere, and you can get what you want in 30 to 45 minutes because they have locations everywhere. So
Okay, MACD is trying to turn here.
over the past, almost decade have done just an incredible job. Not only
Okay, MACD needs to turn up. We're back down to this area of liquidity over here on the left. All right, S&P is trying to turn up. Take the puts off. Looks like we're done for now.
So I just think it's been just such an exceptional, company for so long, and also unbelievable that I think the Walton family still owns like close to 50% of the stock.
You had a retail analyst on Worldwide Exchange. She just basically said, "This stuff's cute now. It's cute, Walmart." By the way, tariffs still a big part of this story. Wasn't Sonoma out yesterday? So they're going to see a bigger tariff impact going forward. You have things like Ulta Beauty on a 5-day losing streak. Joe, you own this one. And as I mentioned, Williams Sonoma also on a 5-day losing streak. And then coming up, we got another test of the consumer. Ross after the bell. Another one of your names, Joe. Your thoughts on this? Not tariff sensitive because they're a discount retailer, but just your thoughts.
A lot of the consumer discretionary names that we hold in the ETF, you're seeing a reversal in the momentum, whether that's Garmin, whether that's Dash, whether that's Ulta or Royal Caribbean. Where you're seeing the strength is
Palantir, big outside day today. Palantir. A lot of broken charts, it looks like, for now.
I think maybe some of the positive news that we might have heard from Ross tonight was pulled forward after the earnings report from TJX. I do think it's two different stories. I think TJX is in a little bit of a better position, certainly with TJ Maxx and Marshalls. Be careful with Ross tonight. You might see a little bit of a disappointment on the earnings, but what do they benefit from? They're benefiting from that off-price environment, and that right now is the right climate to where the consumer is going to go.
By the way, the other point, don't forget about home goods. I know so many people that go to home goods now and just look at Steph's
Same
face.
store sales 5%.
Yeah,
I mean,
So,
Home Depot was a disappointment.
No one's remodeling, I guess.
well, people are buying pillows, clearly, because a lot of people like to go to home goods.
NVIDIA trying to turn the corner.
Steph, you owned this one before. Are you thinking about getting back in it? Right now?
Well, I mean, I was up 20% in the name.
Jensen's saying everything is sold out. So
They have done that. Richard Dixon has done a great job, and the management team he has brought in also really good operators. They've been gaining market share. I mean, comps at Banana
what's Tesla doing? Tesla looked good earlier. Tesla looked good earlier.
They're doing the right thing to get people back in the stores. They have the traffic. The stock is cheap. So I have seller's remorse, but I was up 20%.
Tesla gave back all of the gains from this morning.
So I'm thinking if we see any kind of sell-off,
A lot of stocks got sold.
Gap shares, they're fractionally higher going into earnings.
Low tick alert minus 800.
All right, more low ticks.
say they found evidence of metal fatigue cracks in the engine mount of a UPS plane that crashed moments after takeoff in Louisville, Kentucky. According to a preliminary report, the issue caused the engine to fall off and the plane to roll left and crash into nearby businesses and an oil recycling facility. 14 people died. In other news, 2 Homeland Security officials tell NBC News U.S. Border Patrol will soon end its operation in Charlotte and head next to New Orleans. The exact timing of the winding down in Charlotte is unclear. Homeland Security says federal agents have arrested more than 250 people during this immigration crackdown in North Carolina's largest city. Ukrainian President Volodymyr Zelensky says he received a peace plan draft from the U.S. Russia and the U.S. drew up the 28-point proposal, which Axios says calls for major concessions from Ukraine. Zelensky says he expects to hold a conversation with President Trump in the coming days to discuss, quote, the key points required to achieve peace. Frank?
Seema, thank you very much.
NVIDIA still weak. NVIDIA still weak. Okay, we lost most of the stocks that were advancing this morning. Regeneron's still the top of the list, Regeneron, but it has faded as well. PACCAR taking over in the number 2 spot. PACCAR. GE Healthcare. Okay, all these off the high of the day. NVIDIA. That was a hell of a move on NVIDIA.
Extreme low tick alert. Low tick alert minus 800.
All right, we continue to move lower. 65.70. Wow.
Everything is moving faster than ever. And every turn presents a challenge. You don't guess. You don't hope. You trust. You trust the foundation. The data.
Hedge flows are trying to turn the corner.
Because in a world that's always turning, trust is the traction that allows us to meet Jan. She's enjoying a beautiful day outdoors with friends and family. She's also managing her time.
while in the good times.
WKHS.
For the Fed. But having said that, part of that could easily be structural. As with the slowdown in job growth, which a lot of this has to do with immigration restrictions, the rise in the unemployment rate could also be structural as people move, from one industry to another. So we are seeing this move into AI. Maybe that's limiting the job opportunities in other fields that are moving. So I don't take it as a critical level. In the
WKHS.
market, it seems there's kind of a level that a lot of people think the Fed would respond to.
Right. Okay, that makes a lot of sense. You mentioned how people are flocking to the safe haven of treasuries, perhaps with the equity sell-off accelerating, or I should say declines. We're not really at sell-off levels here. We've seen, of course, credit hold up pretty well because they're undersupplied.
I don't know. I just get the sense that we could see a bounce in the evening session. A lot of charts are oddly broken or sold. Can't imagine NVIDIA would sell as much as it did, but it did. So
Well, I think Greg is great at what he does. I would never describe any credit investment as bulletproof. However, just because it's credit and credit has its risks. I think we've seen some softness in part of the CLO market, part of the private credit market in particular, where people are starting to question some of the valuations, the economic outlook, and we might be seeing some incipient signs of credit stress here and there. I don't think it's widespread, but it's certainly something to keep an eye on. And in times like this, particularly if you start to get a risk-off sentiment, a lot of investors want transparency and, more importantly, liquidity. And so they look to move out of things that limit the liquidity that they have. And I think that there's some concern about that might be contributing to a little bit of softness in the CLO market.
I mentioned the comments made by Greg Peters. Let's just take a listen to what he had said.
The top of the capital structure, there's a tremendous amount of subordination underneath you, right? And so you basically have close to 40% gold, 38% of subordination is broadly diversified, which is a blessing.
Okay, trying to get a turn here. Let's see what NVIDIA is doing. NVIDIA is trying to turn as well. I almost want to buy some NVDX up here. NVDX.
So yeah, I think they're great assets. I really do.
Greg Peters, they're talking about the
NVDX. This feels way overdone. I'm going to buy some NVDX down here. NVDX. Got MACD is trying to turn. Volume's starting to turn. We're still below VWAP, but we could see a move back towards VWAP at 1895. Okay, if I get here at 17, I'd have to need to put a stop maybe at 15 or so. I'll give this a couple more minutes. NVIDIA, I'd like to do something with NVIDIA.
Yeah, you and a lot of other people, because we've seen investment grade credit outperform high yield credit and come in with higher yields as well, which is surprising given that you should get better returns and better yields for taking on that extra risk.
CIPP may res in 10 seconds.
Chief fixed income strategist at the Schwab Center for Financial Research. Coming up on Bloomberg Markets, while some retailers warn of pullbacks, you look at Walmart and it is boosting its outlook yet again as shoppers keep filling their carts, both virtual and physical. We'll bring you more details next. This is Bloomberg.
Okay, NVDX. Watching shorts cover down here.
Low tickler at minus 800.
Okay, no turn yet. We're still getting some sells on any bounces.
As we enter the AI super cycle, latency becomes a currency. And that means that data needs to be processed as close to the user as possible. So if you want these data centers to be near the people, is it just a matter of build more of them?
No, unfortunately, because where the people are is also where there's no
CYPH.
space. So we have to completely re-architect the way these networks are done.
So it isn't just about bigger networks, it's also smarter that's going to be required.
That's right.
Have you ever wondered why Ireland produces so many horse racing champions? The secrets might just be in the grounds beneath them and the science within them. A geneticist in Ireland discovered the first speed gene in thoroughbreds.
Extreme low tickler.
Gene MSTN, which controls how a horse's muscles are built. And it comes in different variations. One version knows the muscles with more fast twitch fibers built for short explosive sprints. Another gene variation favors slow twitch fibers, giving the horse stamina for long races.
EPSM.
And a third
Value
variation
gene halted
creates a
down.
balance mix, ideal for the distances in between. Genetic testing tells breeders what kind of MSTN gene a horse carries, so they can align training and racing to the horse's natural potential.
MFI halted down.
It takes more than muscle power. It also demands strong bones, and in much of Ireland, that strength starts in the ground. The dominant bedrock beneath the soil is limestone. Limestone comes up through the soil, which means there is a lot of calcium in the grass. Calcium, excellent for bones, which is exactly what you want if you're breeding a nice, strong thoroughbred, backed by the perfect terrain and cutting-edge genetics. Irish racehorses are built to win. Bloomberg, bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
PLTZ.
This is Bloomberg Markets. I'm Scarlett Thur. It's time now for the stock of the hour, and we're looking at Walmart. While the broader market has turned negative, Walmart has held on to its gains after the retailer boosted its full-year sales and profit outlook while warning that higher costs, higher expenses, and higher prices are ahead. Let's bring in Christina Morales. She is a senior analyst at Punto Research for more behind Walmart's earnings. Christina has a buy rating on Walmart. And of course, we will dig into that company with a price of $105. So, Christina, talk a little bit about Walmart's transition to e-commerce. The company is transferring its listing to NASDAQ. It's really talking up how e-commerce has broadened its customer base.
Yeah, sure. For years now, for months, they have been investing a lot in technology. They have been developing their own AI
MSTZ.
or they're partnering
CONI.
with other AI producers.
CYPH.
And, they are advancing in that, and this investment in technology has allowed them to achieve their strategy of everyday low cost, and therefore able to offer the everyday low prices. Now they have announced that now you can make purchases via ChatGPT, and you can have more directed promotions in your mails, not like a lot of mails with promotions, but more directed.
MSTZ.
At the end, resulting in a better customer and client satisfaction.
Extreme low tickler.
And that's what is driving the traffic in their stores.
Right, and in fact, the digital offerings on the website, you can now buy luxury items, including pre-owned Chanel bags, which allows Walmart to draw in higher income consumers as well. So it feels like its overall customer base is getting bigger and bigger.
Yeah, of course, the gross merchandise value is been increasing for a while now, and what they did was to concentrate all the marketplaces of their different operations in China, and Mexico, and India, and into one app of Walmart purchases. So, of course, the marketplace
may resume in less than a minute.
The products you can buy there also is very large products, and now they are basically being number one or two, depending on Amazon, of offering online services. Most of the people are receiving now their purchases in a maximum of 3 hours time.
Yeah, pretty incredible. Especially, I remember when Walmart was kind of behind on the internet, on e-commerce services, and it has more than caught up. Now, when we talk about Walmart, we tend to see it as shorthand for the U.S. consumer, the state of the consumer. But if this strong performance that it's able to deliver on is more a reflection of its own strategy,
Low tick alert minus 800.
how much of a read does Walmart's results really provide on the state of consumer spending beyond the fact that this is a very
LUD may res in 10 seconds.
Yes, of course. It's well known that the consumer is still focusing
MFI may resume in less than a minute.
purchases or basic needs and leaving aside the discretionary items. But Walmart has been able to offer a broad range of articles. And for example, now for Thanksgiving, they're offering meals for 10 people under $40. So these savings and these offers are also attracting customers that may not necessarily only buy the
Extreme low
basic
tick alert.
consumer, but also discretionary items.
So I mentioned that Walmart is transferring its listing to NASDAQ on December 9th to reflect its status as a tech-forward company. I'm sure part of that is aimed at gaining inclusion into the NASDAQ 100, which of course would be the QQQ as well. Is that going to help with valuation?
MFI may res in 10 seconds.
Well, probably yes, in the sense that now it's going to be seen as a tech company more than a retail, retail based. But you can see now all the investments in technology it is making, and it is going to be able to lift its stock price if people perceive it more, or investors perceive it more as a tech company with a lot of AI investment, and it can benefit from the boost that the AI sector is having.
All right, good stuff. Christina, I really appreciate you joining us. Christina Morales, Senior Analyst at Punto Research. Let's stick with retail because Gap and Ross stores are set to report their earnings after the closing bell. Mary Ross Gilbert is a Senior Retail Analyst at Bloomberg Intelligence and joins us now. Mary, I tend to think of Ross as a regional version of TJX because it does the same thing, the discounted goods and treasure hunt, but it's mainly focused on the California market.
Yeah, California, Texas, yeah. So Ross Stores, though, looks to have, I think, a big beat as well. Something that we saw with TJX and maybe even Ross is a bigger beat, we'll see. But it looks to have a strong report today. We're thinking they could beat consensus by maybe 300 basis points when they go to report their sales.
Right.
So
Low tick alert minus 800.
the brands that they carry, and if you look at Ross,
I can't believe we were up 126 and we're down 70 now on futures. That's crazy. That's crazy, crazy.
Let's go to another retailer that has a nationwide presence, and that is Gap. Comparable sales for the third quarter are seen up more than 3%. This is a result of what? Better selection, better investments in its technology infrastructure. What's going on there at the Gap?
Well, actually, Starla, there's a whole host of initiatives that the company is being led by Richard Dixon, and he's really kind of brought Gap back to the 90s essence in the sense that they're really executing across the board. The only brand right now that's in a true turnaround mode is Athleta, but their largest brand, Old Navy, is really performing strong. And they just launched their first collab with Anna Sue. So it's Old Navy x Anna Sue, and a lot of pieces selling out. And it's also encouraging more full price selling. And it's something you're seeing with Gap. They have several collabs. So right now they have 2 active ones.
Yeah.
And that is Gap x Sandy Liang. Again, a number of key pieces sold out. They also have Gap's Studio, which is designed by Zach Posen. So I think everything that they're doing is resonating. The campaigns, I mean, their Better in Denim campaign it's created billions of impressions, over 400 million views. It's huge what they're doing. So I think they're going to have a big beat.
All right, watch NVIDIA here crossing over. I'm going to buy some NVDX down here. NVDX. NVDX. crossover. All right, I'll buy half. Okay, I'll buy 250, and then I'll buy another 250 if this continues.
LUD may res in 10 seconds. MFI may resume in less than a minute.
If you're standing still, you're actually going backwards. We're trying to beat our competitors on the track, but to do that, you want to beat them off the track. We need the best in class.
Yeah, you guys realize this is mostly driven by 0 day.
If you feel like you're on the wrong road with your finances, LUD, Credit Karma can help you push through to a better place.
MFI may res in 10 seconds.
To reach your horizons. Wherever they may take you. Find your way to personalized guidance to improve your credit, savings, taxes, and more. Intuit Credit Karma. Karma you can count on.
And that's what we're doing here.
Didn't really think I had a problem.
I would isolate and self-medicate. Like 48.5 million Americans. They didn't choose addiction.
Yep.
Watch the film No More Secrets and find out how you can
Got a lot of things that got to fall into place to get this to turn back up. But yeah, 0 day is a lot of what's going on right now. Remove the 0 day. Yeah, we got some support down here. A little bit of support. A lot of support down there at 6,500. Okay, going to turn this back up. 50% retracement. Let's see what NVIDIA. Let's look at VIX. VIX starting to turn. VIX. VIX is starting to come back in a little bit. Tesla turning back up. Okay, things are starting to turn. NVIDIA. Trying to turn NVIDIA. Okay, once the shorts start covering, it'll be pretty obvious, I would say. Hedge flows will shoot back up in the other direction. This is a very extended rip to the upside and drop to the downside. That was like 75 points. 75 points, right? At the low? I didn't catch it, but it was pretty close. 126 points up on the futures and then down 75 points. That's crazy. 200 points. Top to bottom. Okay, S&P is starting to turn up. I'm going to buy some calls. I'm going to buy some calls here. Let's see. How far can we get here? Let me go take a look at the chart. Okay, NVDX, I just bought half, 250 shares. Okay, let me go to a different chart style just so I can see a little bit more clearly. Okay. S&P 500. Okay.
They have to think about it as one part of building relationships with the company, and that will automatically lead to other business or for their firm.
Okay, let's go here.
For their firm and welcoming, the private company to the bosom of the company that they currently are in. Thank you so much. Bloomberg's Chief Wall Street correspondent.
Well, you still hungry, you? Kitty cat? Okay, there's your high. Point of control, we need to get back above that level. Right over here. Let's see, 50%. Let's go 50% from the high. From the high to the low.
MFI may resume in less than a minute.
Okay, 50% would be 66.70. Okay, I'm going to buy some 66.70s. Let's see what those are going for. They should be pretty cheap. S&P calls 66.70. Let's see, 66.70s are $4. $4. I really don't want to give back any of these gains, but I'm going to watch for this to. I'm going to grab this and. Oops. No, not that one. I'm going to grab this and put this in my active trader window. And if we start to accelerate, I can just drop right into these 66.70s. Let's see, starting to turn. Oh, what do you want, kitty cat? I just fed you. Here. There. How much more do you want, fatty? You're not going to fit those jeans. You keep eating. Ow, you got to keep eating those treats. Okay. 50% retracement. Okay. Okay, let me just add MACD here. MACD. Okay. Where is it? Where is MACD?
Don't wait until Black Friday. The Doorbuster deals are happening now at Hamrick's.
MACD. Okay, 66.70s. All right, so I got to keep an eye on these. They need to start trending. Has to be a 50% retracement.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Leonard.
Markets tank even after NVIDIA earnings and a jobs report that topped estimates. Welcome to the Thursday edition of Balance of Power here on Bloomberg TV.
That's a great song. Blood, Sweat, and Tears. I used to listen to them as a kid.
Just as the White House tries to soothe concerns about rising prices. I'm Joe Matthew alongside Michelle Jamrisco in for Kaylee today in Washington, D.C. And we're going to have much more on this ahead as we compare notes with Bloomberg's Michael McKee, digging inside the data. And we'll share insights as well with Kitty Richards from the Groundwork Collaborative. It's all after a look at Wall Street. Let's start there now. Charlie Pellet's got his eyes on the markets. Live from World Headquarters.
Recording in progress.
All right, what's up, everybody? Bananas moves today, and so we'll try to dig into at least what I'm seeing here. And just
LUD.
hard to parse exactly what is going on, Jay. You're right, they're not the market. All right, so let's talk about this situation as it stands before we get into the narratives around what may be the big driver. Where the flow has shut off largely here, right? So, pardon me. What you can see and what you can parse through the options order flow, and I'm not going to pretend to say that today, options were the reason, but they certainly exacerbated. This is positive, about 1 billion of order flow here. Something started right around 10:30, and you can just see this, right? It was just a cascade all the way down to 10 billion, and then right at 600 in the S&P, just a little bit below that, that flow shut off. You see this right here, that flow shut off. Now the issue is that vol's getting very expensive, right? And so during these types of moves, if you own puts, right, and the market just stops going down, you look at like a D's 25 delta put, that put will lose, 10% of its value just as the market stops going down. It needs that energy and needs that crash fuel in such a major way. So I've heard JGBs, I've heard crypto, I've heard Epstein file, I've heard so many different narratives around, what the driver is. But here's what I could tell you: whoever was buying puts here, they have now stopped, right? And all else equal, then the market should rally on that because that vol suddenly got very expensive. So that's the S&P 500 options. Now, what seemed to happen was and we were talking about cascading there with Hollis is, I'll talk about this plot here in a second. Is
Brent from Spot Gamma talking.
Started with a fair amount of zero DT put buying, and that seemed to spill into about 11 o'clock hour. You had about $2-3 billion worth of puts this year, right? And you go, okay, wow, that's a lot of zero DT put buying, and then it accelerated to non-zero DT puts. And again, you can see right as we broke 6,600, that largely stopped, and this became a non-zero DTE phenomenon. When you see longer dated put buying coming in, that's always a bad signal, right? Always going to be a bad signal, and it's material. It's a big size. And then when you look at the equity complex, equities were quite stable. And then when the selling in the equity in the index space got nasty, it rolled over into the single stock space. What I find so odd about this is the linear fashion of this selling, right? That to me is algo, basket, TWAP, which is a percentage of order, just sort of pushes those orders out, right? If you think about a market that is crashing because of fear, you would expect to see more jagged order flow, right? But this is very persistent, organized, algorithmic type flow that is dominating the selling and really driving things lower. So if you're gonna say, hey, Brent, this is because of, Sherry's saying CTAs here. It's like, look, I don't know exactly what it is, why it started up here, good. Who knows? While somebody went from the very bullish narrative like jobs is fine, Nvidia is good, blah blah blah, and then all that stuff is paying the piper. I mean, you look at something like Oracle now is on 217. So, I think what the key thing is if we just sort of look at the founders this morning, and I'm not going to attempt to say that I at all knew this was coming. I actually was felt pretty good about it. But this idea that under 6,700 things would break seemed really true this morning because something seemed chippy, something just seemed a little bit funky out there. I thought the jobs clearing was like, okay, that's the sign, right? That's the bat signal that we're all good here. But then obviously something broke, and then once that 6,700 level went, it was like, forget it, right? Then there's nothing else there to support markets. I was looking at, so what do you take away from this? Number one is this flow has stopped. Vol has now gotten exceedingly expensive, right? You're talking VIX 28 with the high this morning. That's telling you that puts went from like 23. It's like, okay, the puts at 20, when VIX at 23 is a rough approximation. They can hold their vol at a reasonable level at that time, right? Where puts can't really hold their vols when you start to get to VIX 30. So what I mean by that, if you have VIX 30, that's generally telling you that the options, the put options in particular, they need movement. They need downside movement in particular to keep their value, right? And once that VIX starts to come down, i.e. that vol starts to come in, just because the market stops dropping so much, you will start to see those put values come in. So I'm trying to pull up and send it over here. So we can just bring over a chart. I was second here. I'll have it up for you guys.
All right, I bought those 6670s.
EPSM.
50% retrace.
So to give you an example, at this point here, 65.80, the December 6,300 puts were $80, $2 was the high. S&P moved to here, 6,600, so it's 20 handles. Don't get me wrong, it's a decent move. Those puts lost $10, right? So that they lost more than 10% of their value right here, right? So that is the
Note MACD.
If you're short, you got to be really careful because you could easily get run over, even if it is the end of the world because the JGB, CTA, crypto market has broken, or Epstein files are about to, I don't know. You could easily get knifed on holding puts right now. So you have to worry about that sort of short-termish, at least relief rally. The key thing to watch here is we could rally, but what are the flows doing? Do the flows also buy the dip? If you get hero, particularly long-dated hero coming in now, that is a signal that this was just a spasm of some kind and we're probably okay. At the moment, as you watch these flows come in, there's no dip buying. Because I'll tell you this, I don't know what the driver is, and I don't think anyone actually knows what the driver is. I think there's some decent theories floating around out there. But if these flows don't increase, right, then what we're getting here is a short-term vol relief rally. But you want to see that call buying, particularly long-dated call buying, coming in as a signal that, okay, this was just a short-term thing. Until then, you got to treat rallies as transient, right? Trade them if you can, but don't marry them, right? Same thing you see here in the S&P when you look at that. This actually looks to me like it's about to just roll back over, kind of, right? Like this is, the absence of of put buying isn't the same as call buyers, right? This is just really very flat. So, the trend advisors where there was a Goldman trial before, in all scenarios, we're selling, for example. So I wanted to show you what is something that's interesting. I've been working through the models here a little bit, and so this was yesterday's gamma service in the S&P, and these color schemes are a little bit messed up, but I want to show you what happened. So under yesterday, in all scenarios, we had positive gamma. This is from the dealer perspective in the S&P 500 across all
volume.
This goes out in time, and this is something in my sandbox I've been playing. So we see positive gamma here, which was interesting yesterday because the market was kind of weak, right? But even though the ranges were kind of wide, it actually felt like something of a positive gamma environment. Yes, we'd have 1% swings, but it would rip up, it would move back down, it would go back up. It was these larger moves. So you say that's kind of interesting because what it inferred was after the market rally, if the market were to rally, there would be some selling into that rally, which is curious, right? You fast forward to, I believe this one was from this morning, and you see how much this changed, right? The color scheme is, again, screwed up a little bit, so you got to stay with this. But what this suddenly started to show is positive gamma is red here, right? Again, this is from my sandbox, so it wasn't meant for display, but it really showed something interesting. So you have the positive gamma way up there, and then the blue in this chart is negative gamma. See that? So overnight, it's like this seemed to change quite a bit, this version of the view, and I'm still noticing this.
Excuse me.
Negative gamma out here. And then when you look at this chart now, right, even more negative gamma down into this area. And the map overall, after today's expiration, also really deteriorated in under this 6,700 level, meaning that it's negative gamma now through here, whereas a couple of days ago, even though the color scheme is backwards on this one, you had more arguably positive gamma on, this chart, right? Because this is all positive gamma on this map. So the gamma has really been deteriorating. This was at a couple of about 45 minutes ago. Ignore that time plot. Again, a lot of negative.
Excuse me.
Seeing positive gamma, right, for tomorrow and the next day and the next day. And then this is the latest plot here. It looks like once we get through and digest and get rid of this zero DTE stuff, it infers that market makers are now back into this positive gamma stance. So I think that is quite interesting based on whatever just happened. It seemed like the flows have violently shifted now with all that put trading, such that the implication here may be that we're going to get a little bit of stability now off of this level. Again, I want to see these hero flows turn up as some sort of bat signal that is real. It's obviously an immense drawdown here. We're talking 200 handles, 200 S&P handles from the market high of the day all the way down to here. So a relief rally does make some sense, but obviously really really perilous at this moment because of the magnitude of these flows and still the fact that there's not a legitimate source. I would say if you followed me on Twitter that this morning I was talking about the fact that why would you own puts now that we cleared jobs, that we cleared NVIDIA, all should come for sale. That was the narrative I had. If the jobs seemed benign, which it did because after 8:30 we rallied. NVIDIA, obviously the initial earnings reaction was good. So I put up on Twitter, as I wrote in the notes, like, okay, like vol should come for sale now because we're going to enter the weekend and yada, yada, yada. And then obviously this unlocked and went violently lower. The reason I bring this up is because not all moves are related to flows. I have no idea what triggered here. Again, I've seen some good theories here about it. But what we can read from these flows is we had unbelievably...
Okay, these calls are starting to accelerate.
$10 billion over about an hour is as big as I've ever seen. That's literally like, okay, an hour and a half. Stunning amount of volatility unleashed. And then
High
again,
tick alert
50,
plus 800.
High tick alert.
It subsided, you know? If this turns up, then this was okay, now we're going to buy this dip and we're going to rally back. Who knows? We could rip all the way back to 6,700. It's certainly in the cards. The problem is we don't fully understand what the driver of this whole thing was, right? Like, if anything, vol should have gotten sold. We didn't hit, so something triggered these options flows. I don't know what it is. There's great theories running around there, but they're all just theories until we have something a little bit more, I think, materials for latch onto. But just since the webinar started, we're up, 40 handles here, right? So again, tread lightly out there, and I think until the smoke clears a little bit here, and we see some more solid positioning, it's hard to stick your neck out. And this also looks very algorithmic, doesn't it? It's very linear. When I say that, it is, if you're not familiar with what I mean by that, is again, you're
Extreme
getting this
high tick
very
alert.
signal,
Extreme high tick. Extreme high tick.
directional move in the flows themselves, which would be driven by something like someone buying one put every second and just an algo going ding, 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 right? So
MFI may res in 10 seconds.
Here we go.
Seems to have exacerbated things in a pretty material way. So when the earlier put buyers start to monetize their puts, you would expect to see these lines begin to rise, to your point there, Peter. And that's what I'm saying. Like, I want to see Hero move up. Why isn't it right now? So you would call this that, something of a divergence. Now the problem is the scale. We have to lend attention to the scale here, right? Because the VIX was at 28 at that peak. Now it's at 23. So that ball comes in. There's Vanna flow there because those puts, as I told you before, that 6,300 put, for example, was very big.
Extreme
and
high
now
tick
going
alert.
from 9 billion to
Okay, extreme high tick.
So that's $1 billion of the flow. It's just on the scale, right, of 10, it seems smaller. So you want to see this turn up, and I really want to see the idea of non-zero DTE flows come back into this market. You would expect anyone who's lucky enough to be long zero DTE puts, right, to want to monetize those and monetize them quickly, because the vol is so elevated, you're incentivized to do so, right? In a situation where you maybe own a DC put as a hedge, maybe you're not going to do anything with that. But when vol is extra high like this, you're getting paid more to close that put now or 20 minutes ago when vol was, VIX at 28 as an example, right? Because your zero DT put has gotten pummeled over the last few minutes, not just on the delta perspective, but also from the vol perspective, as that vol really contracts, right? So you want to see puts sell up, and let's be honest, like, we're not seeing that. This is not material put selling right now. I think there's a short cover there that doesn't look like an option short cover, at least in real size. So again, tread lightly. As you can see now, we're fading, right? So what I can offer here again is the signal that I would look for to say, hey, time to buy these puts, right? Time to point the ship in the other direction. Is, this is starting to look okay, but it's not, it's not massive. And then the second thing, obviously, is what specifically is the driver. Now, if I was going to say, hey, I really want to do something right now to put a trade on to monetize this, I would look at selling like these put spreads, something like that, something that plays a vol contraction because the VIX is at, these elevated levels, for example. Buying calls here, very tricky because vol is, again, very elevated. Let's do it just to check on that and see what is going on there. So this is fixed strike vol. The term structure had collapsed this morning. Obviously, it's surging now, right? So you're talking really quite elevated vols in the 19 to 20% range out in time. If you're implying 1% moves in the S&P, that's 16% implied vol. So you're talking 18, really quite elevated. The VIX term structure at the moment, we don't seem to be plotting the VIX on there. So what's going on with that? We should have an extra data point on here. Not sure we got an issue, but VIX at 24 is this line. So you got a real backwardated curve here in the VIX term structure. And then, lastly, if we were to look at skew, you see this put wing has it has the optics of that put wing really lifting. This is the type of risk-off scenario that you'd expect with VIX kind of sneaking into that 30 area. So again, moves are very transient. We don't have anything to hold on to here in the gamma space because it's just negative gamma everywhere. These flows are now starting to turn up. So that speaks well to the idea of maybe the low is in. If this turns around, obviously it starts to head lower, that works. But, here being flat to negative is overall a good sign for the market. And it seems like in the last few minutes since we've been talking here that those flows are turning a bit.
These calls dropping off.
MFI may resume in less than a
The
minute.
scale of this thing is just kind of interesting. And there's the equities is kind of rolling over. So I think we need to figure out what the heck is going on and then see if if those put sellers come in. If you are the type that wants to play a bounce, you got to be careful of buying calls in this situation, this scenario, because the calls are going to be very sensitive to implied vols, obviously, right? So we want to make sure that we are avoiding that sensitivity. So let's just give an example of that. If we load in here a SPX call, just to illustrate this is just a 66.45 call. We're gonna make sure we're looking at like a 25 delta option. So let's just make sure that's true. So 25 delta is like a decent amount of out the money. So let's just go 16. Nice. Okay, and then you can see that if we look at current implied vols, right, that skew is very elevated on the put side in particular. But you would expect that vol to come in 3-4 points now, right? If we start to rally. So if we got, it may even be a little bit aggressive, but you can see that there, right? So if we position for a rally here, you can see that attach, right? The yellow line is if we don't shift vols, and the purple line is if we do shift vols. So if we rally back to 6,700, we project that you would actually only make $42 on that call rather than $1,300 if that vol stays sticky. So again, choose your weapon wisely if you want to play a rally. If you want to play a rally, I'm not going to sit here and say that's a terrible idea because again, we don't know exactly what's going on. It's just don't just buy calls here thinking we're going to bounce because you're paying legitimately very expensive implied vols. You want to be worried about that. Now, the same thing can be said for the put spread, right? An interesting way, arguably, to play a bounce would be to get long puts. Now, the problem with buying puts here, obviously, is the vol is very expensive. So if you look at 1 month 25 delta puts on the other side of this equation, so the 25 delta, I'm looking at this lower number here. So the 25 delta put is right here. Let's go 63.50, 25 delta. So this is the P&L of that put, right? That put right now, that P&L of the put is based on this very elevated skew, right? That put skew is very high. So if vol comes in a little bit, again, we're moving about 3 points, that put skew is going to flatten out, right? So we're going to flatten out that put skew. See that line come down? And we move it back into the range. Look at the P&L of this put over the next couple of days. So you now have this path dependency issue where if you bought this put at 6,600, market rallies to 6,400. The next time the market goes back down to 6,600, vol's probably not going to be as high as it was the first time we crashed into that level, right? Because the energy drains off. So now you can see the problem with owning puts when this vol is this sensitive is you really need more crashing from here and crashing, not just chilling or grinding a little bit lower, whatever it may be. Otherwise, your P&L just looks terrible. It's also a fantastic way to play a rally or vol or just the market no longer really doing anything, selling puts in this very rich vol environment. But obviously, you have excessive risk there if the market crashes. So make sure you are positioning, correctly, and you're being very sensitive here to those vols. Spreads, a call spread if you want to get long. call fly, very wide one if you want to get long. And I don't mind the short dated put flies, in this case, either 1 and 2 DTEs. Andrew's talking about broken wing put flies. I like those ideas as well. So if you look at a put fly in this situation and we're saying, hey, I want to play a market rally, you know, you can slide these puts way down, for example, right? And say, okay, I want to sell a couple of these. I need to hedge out, so I'll just buy one. I'm just playing with the levels here, but you can see this is now a broken wing, right? You'd probably try to do this dollar neutral and just slamming some strikes in there just to give the point. But if that vol flattens out, right, then you still can generate that P&L with a lot less risk. So you can see
NVIDIA still looking for this to turn back up.
market rallies, you still could generate some P&L because that vol's coming in. So that to me makes a lot of sense. Put flies can be difficult to liquidate when the market's upset. That is absolutely liquidity risk. I did have a put fly before. It seemed to be okay. What I like doing in this case is going with a very short dated option. So I was looking at some stuff like here, right? Where it's like the goal is to get long where I think the market could move to. So, 6,500 is a pretty reasonable level, for example. So move that around. Very expensive, right? $11. Not cheap at all. Might even be too cheap to play. If I'm trying to find something cheaper, if I go 64. So what I'm trying to do is find out, where can I get that 6,500 put for about $1? And then the hope would be, so that's about right. And then the hope would be, if there is a market crash, right, it approaches that level kind of at expiration. And even if it's not at expiration, it just is that when the market drops and vol starts to get, so that's not very cheap, about $3. But the point is sort of the same here, still that this is
Market's trying to figure out what they want to do.
Low, tickle at minus
this structure
800.
would hopefully make money, right? Because that 6,500 put would start to accrue a lot of delta, more so than the very deep out of the money 6,400s, right, in this scenario. And because it's a data expiration, you may be able to get away with that trade, right? But obviously, if vol just goes kind of crazy and we just jack vol up by another 10 points, and we rip that put skew even higher, you can see that P&L suddenly doesn't look so good, right? That P&L starts to lose, as you can see here. So the goal would be to sort of, if I think the market worst case is 6,500, I want to get that put and then try to offset that cost. And then look at the $100 50 wide put spread. I'm probably trying to roll at it for something like $10, unless I think we could kind of pin that general area. So that's the way I would think about that. Looking at the Q&A here, hello, sir. I think in Hero you're seeing on 5, 10 minute, 30 minute, 1 hour time frame calls accumulating. Let's see. I did not get a really great look at Flow Patrol. I should have checked that out this morning. I got kind of caught up in the market here. So this is not terribly negative, but Meta was obviously the name that was.
Okay, we're right back down to this point of control. Looks like
the day, right? More so lies on their name. So has it already sort of paid its price? What does the flow look like here over the course of the day? Initial call buying, as was the rest of the market, and those calls kind of came for sale. So that flow actually looks fairly flat there. This morning, yes, right? Call buying, longer day call buying, all looks good. And then so far, this is pretty neutral. If you look at something though, like Tesla, same similar story, still positive delta on the day, interestingly. NVIDIA negative, that's really getting sold. This was also interesting to me. Oracle just getting pounded today, down 4%, minus $56 million. CoreWeave, which is another one that has a lot of concern. It's off its lows of the day, but now negative, right? So if you talk about the AI space, whatever macro driver may be aside, these names are now looking really poor. It's almost like the AI trade is now back to being shit, I guess is what I would say. So it's very curious. Other things, gold. Gold just can't really keep a bid now. There was some, looks like some
Low
buying as you can
tickler
see
minus
here as
800.
gold.
More low
GLD is
ticks.
373 level, so that's kind of interesting. But I'm surprised, and the reason I bring up gold here is because
Let's take a look at
across
VIX.
these different asset classes.
VIX starting to recover a little bit.
Prices all seem to be moving lower in conjunction with each other. And so oftentimes you think about what is the driver here? Well, if
VIX.
just CTA selling equities and the equities are dropping, but gold or crypto or whatever else it is holding in there, then that narrows down the potential leadership change. But here you can see.
Let's go see what junk bonds look like. Junk.
I was out there saying, look, puts are expensive. We're seeing a lot of increased options volumes, and then whatever
Junk.
today,
It's looking okay. It did fade.
Some people are blaming
gapping up.
This thing just can't catch a bid. It was down 11% yesterday. It's down another 7% today. Is the crypto complex big enough to destroy the equity market? I don't think so. The stablecoin market is quite big. Some people are like, well, stablecoins that's breaking the market. Let's just chalk that up into another one of the many narratives here in terms of what's ruining things. But Christopher Lisa, is there any statistical evidence for a 1 or 2 standard deviation? I haven't. Number one, I need to update the implied move, which is this here, right? I haven't looked at the 1. I haven't looked at the 2 or 3 standard deviation move. That is, I need to do that. I honestly should just go through and update this study I finished the study and then like a year goes by like that, and it's like, crud, I should update that one. So, Chris, I like that idea.
MACD did cross in the opposite direction, but we're not sustaining the cross yet.
This thing up, a little bit early as well. Is there evidence that this is the big one or on the verge of a bigger crash? Asked the dude. And here's the problem. Well, this is the thing, right? VIX hit 30, and for VIX hits 30 to the point earlier is you need a marked catalyst. This is the problem. This is the thing that is broken. Here is the unknown that we all have to ratchet onto or glob onto, whatever. Right now we don't have that. Right now it seems like a flow broke, not necessarily an options flow. Yen trade, crypto trade. I don't know. A yen trade seems like it's a plausible answer to me. Crypto doesn't. Epstein doesn't. CTAs. I don't know. I don't know about that one. But if there is a unknown that is known, like a bank is going under, or Oracle's credit default swaps just hit up 100, another 400 bits or something, whatever it is, right? Something like that. Then that vol can sustain because there's this massive unknown. For the VIX to be at 25 to 30 without a reason for or enough volatility to sustain that, then it's a little bit hard to crash, right? So. Yeah, carry trade related potential, right? But what I think you need to start to hear is a entity is on the brink. We need a bailout. We need a this. We need a that. Otherwise, these vols are very expensive, and you can't really justify owning them, right? At these levels. So we need to understand what's going on. How do you know that it's clear again? I want to see put selling in Hero. And to be honest with you, as we were just talking about, right now it's actually looking worse. If anything, not better. This is the S&P 500 signal now at lows, fresh lows in Hero. On the single stock side, that is kind of trending up. It's pretty sizable amount of flow too. So those signals are conflicting a little bit here. But again, I'm just treading very lightly here. When you see the whites of their eyes in terms of, all right, put buyers are coming in. Put sellers are coming in stocks. Put sellers are coming in the index side, particularly non-zero DT. Cool. Even if zero DT and you want to catch a rally, I think that's legitimate, but right now it seems rather tenuous. Also keep an eye on those fixed strike vols. If they come down, it's another great sign of stability coming in. Yeah, and junk bonds are okay. I like looking at the credit market in these instances is also valid. I don't know much about the credit market, but we all can find those FinTwit accounts and they'll put out there like, oh, credit spreads were wider or tighter today. So ultimately, you will not have a sustained crash, or you generally will not have a sustained crash unless you have a credit market problem. Because the credit market is where you get the price insensitive buyers, right? We talked about this before with Oracle, for example. If Oracle bonds are going to go to zero, you want to buy equity puts because those equity goes to zero before puts do, right? I don't like the rolling time frame, Shep, personally. I'm not saying don't use it, it's just I tend to keep it at 1 day. I get confused oftentimes, otherwise I think it'd be tricky. Some people like it, but the problem with the rolling window, obviously, is you could have negative values roll out of that window and it can move the hero signal, even though it's not the flows that are shifting. So we always have to be aware of that. Bakshar is asking about OPEX flows. That's a fantastic question. We're obviously going to be much more put heavy today than we were yesterday.
Low tick alert
When I
minus
look at
800.
this chart, Bakshar, and
Low ticks.
you can see how much the complexion of the flow has changed. We went from positive to negative game at this expiration. Excuse me, from negative game to positive game at this expiration. So I think those flows are shifting around, quite a bit, and we need to be cognizant of a lot of that's moving. I still stick with this idea that we're going to lose net puts tomorrow, long puts, I think. I would feel very strongly about that. Vol's going to be very expensive into the weekend. It's like, do you want to own vol to the weekend? Like, probably not, unless you give me a reason. But, man, that narrative has not worked out so well. So, I need to be sure of that. Could it be a broken algo? No, I think this was, at this day and age, like risk engines or risk monitors are so low. This is a purposeful put buying exercise, longer dated puts in particular. So unlikely that rolls off. If you're buying non-zero DT puts, you're probably not closing them today, right? If you're buying zero DTs, you let them exercise or close them. So it'll be different. VIX has a story. Sure. So let's just take a quick look at the VIX. And again, I have to wrap this one up here in about 2 minutes. So apologies that we're ending this one a little bit early. I may jump back on this afternoon. I can put in Discord if we do. But what do you make about the VIX here? The implied move, divide this by 16, the VIX by 16, it tells you what the move needed is. So right now, with the market kind of trending sideways, that ball's going to come in. It can't sustain that VIX 30. And we need a fear. We need okay, this is what broke. This entity is screwed. The Bank of Japan is broken. The Fed is broken. The OpenAI is, whatever it is. We need something to continue this unknown. Otherwise, it's like someone will wind a bunch of flow and we can all start to stick our neck back there, and vol becomes a source of alpha, right? VIX 30 is much more interesting to sell than VIX 20. I would argue, right? So Michelle, we can't sustain this level of VIX without some kind of clear signal, particularly in this holiday weekend, where we all start to look at Thanksgiving and things like that, right? Owning puts over Thanksgiving is 5-6 days of decay. Beta is very high in a high vol environment. So again, we need that VIC-G saying, what's the formula? We're multiplying by 16. You divide by 16. It's called the rule of 16. You can Google that. You get a whole breakdown on the rule of 16. Just divide implied vol or the VIX by 16, and that tells you the daily implied move. So that is so just to wrap this one up again, sorry, it's a little bit of a shortened session here. I may pop back on, or someone will do another Q&A tomorrow if the market's really moving. We'll make sure to email them or make note about that in the founder's note. But again, puts are really rolling over here. This is not the signal you want to see if you think the bottom is in, right? We want to see hero go up. We want to see put sellers come in. And that zoom out a little bit. Like we could crash tomorrow. Flow Patrol shows put sellers tomorrow. If Gamma looks more positive tomorrow, then things look good. We want to see blue in trace. Right now, we're not seeing that at all. So I have no expectation of the market bottoming yet. It could form very soon, but hero's got to really start to rip. This is down 10 billion. So we could have 4 or 5 billion of positive deltas. That would be nothing in this, right? But that would be material enough to show that it's real. But again, it's like 1 billion is a little short coverage when you're marking it against 11 and 10, 11 billion of negative deltas. I would think 6,500 is maybe where you get a little bit more of that stability. But again, until we know the source of what is going on, we just want to tread lightly. And ultimately, until we see put sellers and that fixed strike vol really contract, then that suggests or implies that no bottom is going to be in place yet. And if you want to play a rally, be wary of call buying. You want to trade call spreads or call flies, something like that, because of the potential for the implied vol crush. So, all right, with that, we're going to wrap this one up. Sorry, it's a little bit early here, but I will message everyone if I pop back on me for the end of the day here. I'll put a message in Discord or something like that. We'll do a special session maybe tomorrow to make up for closing this one a little bit early. Any questions, info@spotgaming.com, and we'll likely email everyone and maybe do something before the close today. We'll see how the market finishes up. If we really crash, we'll do like a 4 p.m. webinar, or we'll do something tomorrow at the open. All right, thanks everybody. Good luck trading out there, and tread lightly.
Okay, that was Brent over at Spot Gamma. Okay. Well, we continue to move lower, so you should have gotten stopped out on those calls if you didn't take a quick scalp. S&P turning back down. Let's see what NVIDIA's doing. NVIDIA. All right, NVIDIA trying to turn. Not making much of it. NVIDIA. Yeah. All right, puts are on the move. Puts are super, super expensive. So if you buy a put and it moves down a couple of points, you can lose quite a bit of your position. So if you're doing anything, do spreads now because volatility is extremely high. VIX is up there. VIX near the recent highs at 28. That was the October high. Okay. VIX back up to the highs. So if you traded the puts this morning on the S&P 500, really nothing left to do today. Just let the market settle down. See if we get a better read tomorrow. But right now, the hedge flows continue to move south. Okay, we got a couple of levels down here. 6,500 looks like. Money Magic, you were looking for 6,500, right? Seems doable.
MFI may resume in less than a minute.
Oh, boy. All right. I need to make some lunch.
Low tick alert minus 800.
MFI may rise in 10 seconds.
Flash crash.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
MFI.
Okay, so we got net open interest, largest at 6,500.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
All right, net open interest you can see is pretty clear. Let's see right here, 6,500.
MFI halted.
higher. IBM is still on the plus side, Cisco fading along with the broader market fade that we've seen. But the two announced that they're partnering in terms of this next frontier when it comes to quantum computing. IBM has already been working in this space, as you know. And what it sounds like when I read through some of the press releases, it sounds like this is a 5 to 10 year out plan. They're working on building a network of large scale, this is fault tolerant quantum computers by early next decade.
Low tick alert minus 800.
They're going to collaborate on what IBM calls these network distributed quantum computing. So that allows these powerful computers to work together to run computations at massive scale. So again, when you think about quantum computers, the difference between that and say the regular computer, a regular computer, I've used this analogy before, like a flashlight. Quantum computing
Wow.
is meant to be more like the sun and lights a broader path than what a regular computer would. It's a long-term bet, but it's a signal that these big heavyweight tech players, it's not just about the smaller companies like Rigetti, see quantum as the next big opportunity over the next decade, honestly. So IBM's trying to build a powerful machine. Cisco's trying to build, kind of the highway that connects all of this here. So they're, again, trying to create this network of quantum computers that work together. They're trying to do this proof of concept. They say the first proof of concept will come essentially within the next 5 years. It's, a full system with big potential. And the idea is quantum is going to solve problems faster. So you think some of the medical problems, the medical solutions that we want to have solved. So again, it sounds like it's another development in the next frontier, guys.
Yeah, which I definitely think is a step in the right direction as we continue to see quantum really take some legs here in the overall AI and tech story. So we appreciate it, Dan King Hall, for always giving us an insight on what is moving markets throughout the day. But now to shift gears and focus more on some 2026 hiring trends as well as what we're making of the, of course, September jobs report. Joining us now is Corey Staley, economist for Indeed. So Corey, thank you so much for being with us today. What a wild day it has been in these markets, but to focus on a very critical component of the overall economic and Fed landscape is jobs. So what really do you make now of some of the trends you're seeing for 2026 hiring?
Yeah, thanks for having me. It's good to be here. So, obviously the September jobs report, very much surprised to the upside today, almost twice what, a lot of analysts were expecting. Good news, on the backside of things, we also saw unemployment kind of pick up a little bit. We saw some maybe concerns in the household survey. But all in all, we see, that the labor market didn't fall off a cliff, right? Things are still pretty solid. We're still very much in this low fire type of environment. And as we look forward to 2026, we're starting to see kind of that trend looks like it's going to remain. What we did is we did a forecast based on the blue chip consensus forecast, and we found that a lot of the outlook for GDP, a lot of the consensus points towards a labor market looks a lot like it does right now in 2026.
All right, futures continue to drop off here.
Take into account kind of the economic theory around the beverage curve and job openings and that inverse relationship with the unemployment rate. It seems like we're kind of at that flux point, and that's why maybe the Federal Reserve is a little bit uneasy, even though the numbers don't completely support that just yet. Maybe that's fair. From the data you guys track around job openings, is that still trending lower?
I wish I had some more companies like NVIDIA reporting earnings that we could take some condors on. That was nice.
But we're still seeing that job openings are coming down over time. The labor market continues to cool, and they're about where they were back in 2021, right? So we're seeing the Indeed data showing that the labor market is continuing to soften. Even in the absence of these government reports, we've seen that job postings now at the end of October were only.
Okay, you can see puts are still being, puts are rolling over, still being bought. Okay, not being sold. If this was rising, the purple, the fuchsia color, if that was rising, that would show you that puts are being bought or sold rather. Or being bought. Puts are still being bought. $11 billion. You see that right there? $11 billion in puts being bought. A lot of this being 0 day. Can't believe this move today. 200 points.
I mean, really, what this says to me is that what it means to be a good jobs report is actually changing from month to month, right? Because we start to see job gains shrinking, but we're also seeing the pool of labor shrinking in real time as well. So with that said, I mean, it's hard to exactly know, right? We have the million number here, but at the same time, it's really hard to know, okay, well, what would have happened in the absence of these policies hadn't changed? And so the real tell here is going to be the household number.
Extreme low,
Keeping
tick
an eye on
alert.
the unemployment, because we can't have a case where there's been a lot of discussion about new entrants into the labor market, you know, recent grads having a hard time finding work, and yet we're also saying, well, a good jobs report doesn't necessarily need to be as high of a number. Those things can't necessarily play together completely well, right? So if we start to see a case where job numbers are coming down and unemployment's going up,
MFI
that's
halted
still
to
a
the
bad sign,
upside.
right? So keeping an eye on
IONC.
how households are
These 6,700s are back to $130.
CCHH. SOXS.
The phrase no fire, no hire at the top, and that's been sort of the phrase that's been used for the better part of the last couple of years to describe the labor market. Which side do you think drops the no first? We're going to see perhaps unemployment start to pick up, or are we going to see jobs growth start to pick up from your vantage point?
I think that's a great question. I mean, ultimately, right now, it seems like the pressure is much more
IONC.
cracking in terms of the no fire, right? We're starting to see the tech layoffs, you know, has been something that, you know, has happened, you know, off and on over the last couple of years. But now that we're starting to see some more kind of transportation retail layoffs, you know, with, you know, UPS and Target and some of these different companies, that starts to hit a little bit differently, right? So I think it's a big key to keep an eye on here, and where we'll know that that kind of.
All right, we're about to make a new low here.
Is once we start to see that spreading out, right? So right now, obviously, a lot of fears about layoffs still pretty low. And we hear these tens of thousands of job numbers, and we think that's huge, right? Like I work with.
Wow, no bounce, no follow through on the bounce.
Ginormous, but it's still a pretty small portion of the 160 million people. But at the same time, again, it's going to be interesting to keep an eye on, and I think that's where a lot of the pressure is right now.
No, I think a really good point too, because that's always what I tend to check.
Low, tick alert, minus 800. Extreme low.
All right, so something's going on here. Something's going on. Markets keep selling.
SQQQ. SOXS. IONC. TZA.
So we so appreciate it. Really great read on what we're seeing as far as hiring trends. Corey's Daily Economist for Indeed. Now, coming up next, we'll discuss Bath and Body Works, which is pacing for its worst day in over 5 years, down around 45.5% as their overall turnaround strategy is not paying off, and we're seeing overall a failure to drive that growth going forward.
MSTZ.
Opportunities don't stop when the market day ends. So neither do.
This is the watch list. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust.
Okay, another crossover to the downside.
Welcome back to Next Gen Investing. Now time to discuss Bath and Body Works. Unfortunately, with today's massive repricing, we are seeing shares well below $30 a share on the heels of what was disappointing commentary, but also just disappointing lack of growth, frankly. Joining us now is Sam Vadas, of course, host for the Schwab Network. Sam, I am personally disappointed because I am skeptical to admit that I am a frequent Bath and Body Works shopper, but I'm just not, clearly I'm in the minority camp because they're not really seeing start to take hold.
TSLQ.
Doesn't seem like a lot of appetite right now for the
TST may resume in less than a minute.
LUD. And sanitizers, etc. right now, Jenny. So what we've seen is that we've seen shares underwater today, and I mean this was a company that was already.
Let's see what junk bonds are doing. Junk.
SMST.
We were already seeing some pressure mounting for the stock today off the back of what was a disappointing report here.
Nvidia.
Profits lower, they cut their full year guidance.
New lows on NVIDIA.
MSTZ. IONZ.
Adjusted EPS of 35 cents compared to 39, which was what the street was estimating. Net sales down 1%, slashed its guidance into low single digits, and also cut its adjusted
MFI main res in 10
to
seconds.
287 from a range of 335 to 360. So this guidance, you could argue, is particularly important coming from the retailers as they do enter what is going to be a very critical and important holiday season, because of course this is a time when we see a lot of people going out and spending their money, and it's been really interesting just listening across the retailers as to who has actually been cutting their guidance and which ones have been holding up okay, namely Walmart today, which obviously we're seeing shares heading in the other direction. So you just wonder,
Low ticker at -800.
what they're spending it on right now, but they have cited, to your point, Jenny, the macroeconomic pressures. They're worried about consumers, they'll buy their products. Consumers are cutting back on
Crash of 2025. I can't believe this is NVIDIA I'm looking at. That's a big move. Feels like institutions got some selling. Like Brett was saying, they don't have a specific catalyst for this for now.
Down some strategic missteps, according to them. Also, the economic concerns and uncertainties really playing out as to why we saw this downbeat fourth quarter sales. They do say that sentiment is hovering near record lows. I mean, we can see that already in some of the sentiment surveys that we pass over each week as well. And so many of these customers are actually putting off some of their discretionary purchases. So there is concern around job stability. That is something that the C-suite did highlight as well, particularly because of the disruption around government workers, which was certainly an interesting part of the remarks. But they also have told us that they're waiting for bigger discounts. This is coming from the C-suite around the customers that they're likely to not spend on themselves.
Wow.
So
Just wow.
to keep an eye on.
SQQQ.
SPXL. Direction Daily Bull. 3 times. 3 times as much downside at the moment. S&P. Let's see what the equal weight looks like. S&P equal weight index.
Low ticker at -800.
Okay, yeah, that's pulling back to the 200-day. We're probably going to get a bounce. With VIX above 27, 1 standard deviation. Starting to look at opportunity in the short term. VIX way outside the upper Bollinger Band, 1 standard deviation.
MSTZ. VXY. VXX. VIXY.
All right, UVXY. Been hearing a lot of that. People getting scared. You can hear UVXY, UVXY.
CORD.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab.
UVXY keeps hitting the scanner.
UVXY. MSTZ.
And mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach.
Forward returns.
IONZ.
Forward returns should be better.
CYPH.
We don't stay up here very long. The pops usually last for a few days
CORD.
at most.
UVIX. VXX. VIXY. UVXY. UVXY. MSTZ.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines.
CYPH.
Breaking news and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free.
CYPH.
SchwabNetwork.com.
All right, we should start to turn pretty soon, I would think.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
MNDR.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. And we have a big show for you today. I mean, it's worth noting, first and foremost, the market has taken a turn. We've had a 1,000-point swing on the Dow. Well, easy come, easy go. We'll also take a look at several crypto ETFs, breaking down the weakness.
MFI may resume in less than a minute.
Fallen below 90,000 over the last 24 hours, 7-month lows, and a way to take advantage in faith-based investing strategies. Yes, in that space, and we'll explain. We'll also talk about the details on the Walmart report and why.
Okay, let's see what hedge flows are doing. Okay, we got 2 hours to go. 2 hours to go.
USARW.
All right, I just heard USAR. USAR at lows.
MFI may rise in 10 seconds.
783. It's worth noting this morning, every single sector was in the green. Now you have technology, industrials, materials, and consumer discretionary lagging. Small caps down 1.1%.
MFI.
Gold are both lower. Gold's down $21.
Johnson & Johnson at highs. Lilly at highs.
Been over 3.5%. We're joined now to kick things off by the aforementioned Steve Sosnick. He is chief strategist at Interactive Brokers. Steve, thanks for joining us really on short notice. I know you're very busy today. We'll keep it quick.
Okay, let's see if this can turn up.
Certainly getting all the attention, but you flagged to us earlier today that it's possible Bitcoin and the crypto complex also help spark this big turn. Why and what specifically did you see?
Hi, Brian. To me, it was kind of uncanny. I was on the phone with someone discussing, how
good the market was doing. And I said, Bitcoin is starting here to flirt with 90,000. If it breaks, I have a feeling that the S&Ps can follow. And it was uncanny. As soon as we broke 90,000, down went the NASDAQ and the S&P 500. I'm not going to say that Bitcoin is the reason that we had the big intraday reversal. Bitcoin was the proximate trigger, because I do think right now algorithmic traders are using Bitcoin as what we would call a lead. It's right now it's being used as a proxy for speculative fever. If I'm noticing it and you're noticing it, algorithms are noticing it, and so money is being allocated on this rationally or not.
Well, is money
That's where we stand.
Is money also being raised? Is Bitcoin maybe?
Okay, I'm going to make some lunch real quick. Give me 5 minutes. Not going to make a difference over the next 5 minutes. Looking for a bounce.
TSDD.
To a certain extent, yes. I mean, many people are up. Well, it depends. The newer travelers are not up because we are down for the year, but we are still well above where we were before the presidential election. And also remember, a lot of the crypto complex carries a lot more leverage than stocks. Stocks, you can't lever up the same way that you can do in crypto. And so as a result, if that starts to break, it's much more, it adds a lot of fragility to the system.
This is a critical, as usual, Steve, critical aspect that you are bringing up. And I want all of our audience watching and listening to hear again what you had to say, which is this idea of leverage. It's not that you're buying a Bitcoin or selling a Bitcoin. You could leverage up 2 to 1, 3 to 1, 5 to 1, 10 to 1, or even more than 10 to 1. Can you not? And that leverage means if things go up, it's very good news. But if things go down, you've got to have that capital, have that cash and money available for you to raise. And this is the danger. I think today is very indicative of this idea of what leverage can do in the stock market.
Exactly. Leverage can be a great friend when it's going your way, but it can be a very nasty companion when it's not. And what happens, particularly in a lot of cases, the idea of waiting for the margin call, for the margin department to call you up and get money from you isn't the case anymore. At Interactive Brokers, we move very quickly, and people unfortunately do find themselves liquidated. That's the model in the crypto world. And what happens is, if you do these trades, it's great when it's working, but there's a lot of risk. There is always the balance of risk and reward. In the recent environment, people have been paid for embracing risk. In the current environment, where it's much more balanced, you've got to be much more careful about embracing leverage.
Yeah, and we're not, I want to be clear, we are down. We're at session lows right now. I'm not making light of a 1.75% decline in the NASDAQ. That's a pretty steep drop, especially what's been a solid bull market for the last couple of years. But the market story is not that we're down 1.75, it's that we were up more than 1,000 now, and that things have certainly turned around. Maybe it wasn't Bitcoin, Steve. If not, is there something else that you saw? Because we woke up to green. We woke up to futures up. NVIDIA was up more than 2%. We thought, all right, this is buy the dip. This is the all clear signal. Clearly not the case, at least not today.
I think the other things here are, first of all, this is now becoming a key reversal where you have higher highs and lower lows. If we finish at these levels, that's technically pretty nasty. But what's going on is there's just part of it is also the market's willingness to chase rallies. So I think what happened was when we woke up this morning, the S&P futures, NASDAQ futures were up about 1%, and that was okay considering NVIDIA was where it was. But the need to chase this thing to up 2% is what makes it fragile. When you lose a little leg of the stool, down you go much faster.
Well said, Steve. Steve, appreciate you jumping on. Thank you very much. All right, joining us now is FundStrat's head of research, CNBC contributor Tom Lee, also the chairman of BitMine Technologies, an Ether Treasury company. All right, so Tom, you've heard what Steve had to say. This is, by the way, not unusual for NVIDIA, is it? NVIDIA, the good folks at Bespoke, your team, you've recognized that NVIDIA will often have these kind of wild swings following earnings, but what is your take right now on these markets?
Well, I think I'm going to kind of add to what Steve said. I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like
MFI may res in 10
what happened
seconds.
October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for,
NVD.
they need to
NVDS.
reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so
NVDQ.
in 2022,
TSPD.
for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stable coin's price vary from other exchanges. It actually, stable coin should stay at $1. It dropped to 65 cents. But that only happened within the exchange flows, within this exchange because of liquidity. That triggered an ADL, an automatic
RADX may resume in less than a minute.
many accounts. It wiped out as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of things, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than relying on internal quotes.
RADX may res in 10 seconds.
But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, the glitch clause, your flight can take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Brian, it is. For instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found, and you said it, leverage is what's dangerous.
And
And so
that-
investors should not be using excess leverage in crypto. But
But you
Tom
implied it in
DeMarco
2022. In 2022, we had what you would call a 6-week washout, maybe because of this, again, not using the word glitch, this software or coding problem or mistake. 6 weeks later, we know what happened. If you bought then, you made a lot of money. Do you still think we are in a washout period in an overall bull market?
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs is faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now, because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks.
This reminds, okay,
so that's the MicroStrategies.
This is one of, if not the most important interviews I've done this year, and that's respectfully to every other guest we've had on this fine network and fine show, because I want to dive in a little bit deeper to what you're saying. That basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly known as MicroStrategy, now just known as Strategy. The stock is down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down? What's the chicken? What's the egg?
Yeah. Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect the Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts.
What you're looking at on the screen is the teal colored, the upper candles. That is longer dated positions. We want that to be moving higher, not lower. 0 day is the solid line dropping, and puts are at the bottom. The purple, you can see it's minus 12 billion. All right, so we need to see less of this put buying and more put selling. We need this teal colored line at minus 6.9 billion. We need that to be moving higher. So we don't have a bounce yet until we see that happen. Okay.
appreciate your time. Really super smart interview as always, Tom. Have a great day. Thank you.
Futures trying to turn.
All right, out of stocks for a bit. Let's go now to the bond market because Treasury yields, as you might imagine, on a day like today, they are responding as well. They're not quite as much as Rick Santelli we might think, though. When I see a market reversal of this magnitude, maybe I think bonds get bought a lot more and we see a yield right under 4%. Not the case today.
No, and I think that you nailed one of the reasons why. And I think portfolio insurance that was referenced by Mr. Lee in the old days, well, think about it this way. If it isn't really the economy that's driving stock prices lower on a day like today, maybe that explains why Treasury yields aren't paying as much attention. That relationship with nasty moves in stocks usually translates into buying in Treasury. And even though there is some, you're exactly right. There doesn't seem to be what many would have guessed would have showed up on a day like today. Let's go quickly and look at the dynamics. 119,000 jobs you see on that bar chart. You know, we turned the corner to some extent, and that was the good news, but it was a mixed bag. 4.4% unemployment rate, that's a 4-year high, as you see on the next chart. If you look at 2s and 10s, we made the high yield basically right on the number, and that's the top of the closing range for November, basically, for 10-year, right around that 415 to 417 area, and we held the bottom of that closing range right around 408-ish. We're hovering at 410, not huge moves. Finally, what has been moving wildly today are probabilities for the rate cut in December. It was as low as 24%, as high as 41%. That was today. It's certainly sitting now at 36%. That chart you see, well, yesterday we went down. That knocked the percentages lower. Today, with the market's moves, we see it coming back a bit up. That price is a little bit more cut. So 24 to 36%, still well under 50. Ryan, back to you.
What quickly though, Rick, you're a markets guy, bond guy, but what'd you make of what Tom Lee had to say? I thought that was an incredibly interesting interview because we're talking about these software problems and forced liquidity and hedging against it. I mean, you're a markets guy. That was kind of a rare peek inside the engine, I think.
Yeah, the only thing I'm not sure that I agree with is it's not a glitch. It's the way the markets are and the programs are created. Now, just like portfolio insurance, it wasn't a mistake. It just wasn't the most efficient way to accomplish the goal. And just like the leverage in that system that Mr. Lee was pointing to, in the end, they will find ways. But you always have to protect the holders, the FCMs, and all the people in this equation that take the risk when value of something used as collateral diminishes in a fast way.
Yeah, and it wasn't just portfolio insurance in 1987. It also reminded me of 2007 and early 2008 when the people that they were the ones you could push around, got pushed around, and started things selling. Rick Santelli, thank you very much. All right, after the break, we're going to switch gears fully. Ukrainian leader Volodymyr Zelensky confirming he received a draft of a possible peace plan that could end Russia's war in his nation. We'll get more on this potentially big piece of news with Michael O'Hanlon next. His markets right on their lows, and we've got full market coverage all day long. Stick around.
Okay, still waiting for hedge flows to turn up. Any bounce is susceptible to rolling over pretty quickly. Main reason is we're looking at this hero flows. What you're looking at, the teal colored line, is overall market longer dated positions. That keeps dropping. We want that to be pushing higher. Also, the puts are being bought, not sold. As the purple down here, or lavender color, continues to move lower. We want that to move higher too. We got the heroes starting to turn up, so that's a good sign. Maybe short term we'll see a little rally. Watching for that retracement. Okay, we got stopped out of calls earlier. Gave back some of the gains from the puts from this morning. Okay, we're starting to turn back up, perhaps. Okay, we got MACD crossing. Okay. We got UVXY, kept hearing it on the audio scanner. UVXY tends to pop for 4 or 5 days and then it rolls over. Doesn't last very long. It's a very um, a asset that doesn't last. It just keeps perpetually losing value. So watching UVXY to turn back down to give us a signal.
Low ticker at minus 800.
More low ticks.
For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So once again, this week, a story around Blue Owl Capital is among the most read on the Bloomberg terminal, has been all day. This is as the company's shares had fallen to the lowest level since 2023, with co-founder Craig Packer blaming negative articles about private credit for the decline. Now, the latest news point, I gotta say, we've talked about yesterday. If you might recall, Blue Owl Capital scrapped a planned merger of two of its private credit funds after scrutiny rose over potential losses for some investors. So the story's still a long one, and we wanted to dig a little bit deeper.
To do that, we're joined by Bloomberg News Chief Wall Street correspondent Sri Natarajan, who's here in the studio, along with Davide Shaluzzo, Bloomberg News Chief correspondent for Private Capital. Both join us here in the Bloomberg Business Week studio.
All right, welcome. Sri, I do want to start with you. You reminded us yesterday, Blue Owl, this is a firm that has been held up as kind of a poster child when it comes
Bitcoin
to
trying to turn up.
Is it, again, I want to ask you, the merger coming undone or something more? Like, is it just a company-specific thing that's a problem, or might it be the canary or owl in the coal mine? Like, is it something more in terms of what's going on in the private credit world?
Look, Blue Owls are supposed to be fictional characters in the real world, and it's now up to the Blue Owl management to prove that their marks are not illusory. In a credit market where you're dealing with private loans, the investors, your investors, are reliant on what you believe those loans are worth. Unfortunately for Blue Owl, many of their investors in their publicly traded BDCs don't quite believe the book value, and that's why it's trading at a big discount to book value. If you want to blame negative articles, that does sound a touch defensive, and it's not going to really help the cause. And there are a lot of Wall Street veterans who are pointing in this direction and talking about trouble. But I would like to take a step back and say, when you ask about whether this is a canary in the coal mine, we haven't seen some crazy implosion. When you're investing in 100 companies, there will be some defaults along the way. Right. The question is, can you keep it below what your peers are experiencing, and is it below your historical averages? So that tells you where you are in the credit cycle.
S&P turning up. Watch the S&P here.
The rest of their peers are seemingly doing just fine. But the mind goes back to the kerfuffle last month when Jamie Dimon got on the earnings call and gave what sounded like sage advice about the credit cycle and said, when there's a problem somewhere, you can expect a few other problems to pop up, a few other cockroaches. For some reason, a lot of players in the private credit market took it as a direct insult hurled in their direction and got worked up about it. Prominent in that was Mark Lipschultz of Blue Owl, who really took a real swing at Jamie Dimon. A month later, you kind of feel like saying, if you come at the king, better not miss.
Well, before
want to bring in Davide, but Jamie Dimon, how many times have we had conversations with you? We all wait to see what he has to say about any situation. He doesn't, or does he, just drop something to stir the pot? Does he do that?
Let me tackle this carefully. I think the fact that Jamie Dimon has been the CEO of JP Morgan, the largest bank in the United States with a $4.6 trillion balance sheet for 20 years now, right? Like it makes you think that he's coming from a vantage point that is unparalleled, to be honest. And he's got the experience and the position and the pedigree to speak his mind, and thankfully he does. In this case, and if you look back over the years, some of the things that Jimmy has said, whether it's about work from home or a myriad number of topics, can veer towards the extreme. But what he said here seemed fairly innocuous. All he said was, there's never just one cockroach. There will be other troubles that come up. He didn't necessarily say that others will be in deep distress. Why did the private credit industry take it so personally?
Yeah.
So, Doug, initially, come on in here, because you cover private capital for Bloomberg News. The focus that we've had this week has certainly been on Blue Owl, not just investor reaction, but also the press that we've seen around the company. Is this something you're seeing in your world outside of Blue Owl right now, too?
Yeah, and I would say one thing to Jamie Dimon's comments, like he wasn't wrong, because we have seen all of these situations and across the industry. By the way, we've seen them on the bank side too. So I think there's a broader issue kind of in credit markets where people are questioning like some of the underwriting standards and red flags that may have been ignored in the past, and that cuts both ways. I think what Blue Owl really put on the map is an issue that all of these firms are kind of wrestling with, which is how do you sell this asset class to retail investors, and what is the right format to do that? You can historically, permanent vehicles, very long dated stuff, but it's great for institutions. You lock up your money for 7 years, and it works well for them. But if you're making a push into individual investors, you have to provide some kind of liquidity. And what is emerging with this failed merger of Blue Owl is that liquidity is an in-between between daily liquidity and 7-year liquidity, and it doesn't kind of work as intended sometimes.
Well, how big the issue is that for private credit overall, if they don't have the market that includes retail investors?
I mean, I would say for Jamie, a lot of funds are being set up in a similar way, where they provide quarterly redemptions subject to a cap. And you can either come out at NAV, which is basically the value of the assets in the fund that the manager assigns to them, or if it's in a public structure, you come out at the price that the market assigns to it. And the market right now is believing that most BDCs are 20-30% below their asset value.
But here's the thing, there was nothing crazy or revolutionary or wacky about Owl Rock or Blue Owl wanting to merge a private fund with a publicly listed BDC. It has been done in the past. The problem and the challenge was it was being considered, or at least it was presented to the market at a time when the amount of redemptions in that private fund were climbing. And if it climbs above a certain mark, Blue Owl might very well gate redemptions, and you never want to be in a position where you tell your investors you're not allowed to get your money back. They had been honoring all their redemption requests so far, but if you ever had to get to the position of gating redemptions, or basically saying, right now we will not allow you to pull all the money that you want to pull, that spurs panic. That results in more people wanting to run away from your vehicle. So instead, when they talk about wanting to merge it with this public vehicle, which is trading at a 20% discount to book value, which means once you're in there and then you want to get out, you have a 20% loss on day one, it starts to feel a bit icky. And that's what's really resulted in this market reaction that makes Blue Owl, or at least pushes Blue Owl into this defensive corner.
But all this makes me feel like, okay, Blue Owl is supposed to be the poster child. Like, if we're talking icky or redemptions or gating those redemptions, that to me, if you're talking about the poster child for private credit, then it makes me wait, like, okay, if they're supposed to be a peer and they're maybe potentially having issues, what else is out there? Because not everybody's in the same situation.
And that
in other
goes
words,
back,
they're in weaker situations.
And that goes back to the broader concern about the industry. It's not just Blue Owl, and Blue Owl is in the spotlight because
here's where we are in the markets right now. The Dow's not down much. Pros aren't looking there anyway. Look at the NASDAQ. And if you're just joining us, just paying attention to the markets today, that does not tell the story. The NASDAQ is down 1.6%. That is not a good day, but it's not catastrophic. But I will note, at one point today, the NASDAQ was up by 2.6%. NVIDIA numbers came in solid. Stock and futures were up this morning. NASDAQ rocketed to start the day. So we're now down 1.6%. Don't have to be a math whiz to know that's about a 4% top to bottom swing for the NASDAQ. One of the biggest swings that we have seen this year. So again, the numbers themselves, not terrible, but the swing, 4% move, there is your headline. All right, time now for your market navigator. And let's talk about gold, because not even gold is actually higher on this down day, but overall, it certainly has been a golden year. Gold up more than 50%, and your next guest says gold keep going up. Joining us, Phil Striegel. He is Chief Market Strategist at Blue Line Futures. Phil, appreciate you joining us. Obviously, today's kind of an odd day. I want to get your take on Bitcoin in a second. Quickly, are you a gold buyer today? It's down. Why not? Why not pick some? Oh, well, I mean, we're only down about $1 on the day. I'll take that than owning owning Bitcoin or owning the NASDAQ right now. I mean, gold has just been fantastic. And as we go into the second half of the fourth quarter, begin 2026, it looks like the momentum in gold is going to continue that bull run. 10% move in September, best monthly performance since 2016. 5% move in October, all-time highs. We're up 55% this year. Look, the global economic outlook, it continues to support gold. Globally, we're seeing many countries face declining growth, rising inflation. It creates that inflationary environment that benefits gold. Gold, if you look at it against many different foreign currencies, the Australian dollar, British pound, euro, Indian rupee, and Japanese yen, all right or near those all-time highs. There's really three main drivers that are going to keep this going into 2026. I want to pivot. I'd love to get more into those drivers, Phil, but I've got to ask you about Bitcoin, because gold, we can talk about gold tomorrow, Monday, or Tuesday. It's still going to be around. It's been around for, a couple thousand years. Bitcoin's down big today. It's about 86,000. It was $125,000 6 weeks ago. I don't know if you saw the Tom Lee or heard an interview a couple of minutes ago where he said maybe 77,000. Looks like it could be a bottom for Bitcoin. What's your take on Bitcoin and crypto right now?
Well, okay, when you get to that outlook, you look at the April lows, the tariff lows, it was 75,000. So that seems like the next logical round number bottom on there. Guys like Tom Lee, he's trying to acquire some of these cryptocurrencies like Ethereum. So he likes the lower prices, and the way they structure their product, they're issuing debt in order to purchase or become this Ethereum treasury. So however you slice it, lower prices works for him in the near term. Now, Bitcoin futures, they just haven't done what they're supposed to do. I mean, we look at central banks, they're not buying Bitcoin. We look at investors, they are deleveraging themselves at Bitcoin. Yet one of the largest outflows on a BlackRock Bitcoin just a few days ago. So Bitcoin, as far as a portfolio diversifier, maybe a small slice, but I could tell you I'd rather own gold, even oil, copper, silver over Bitcoin.
I like it, the commodities guy, going deep into some of the hardcore commodities, because I will say this, I'm not saying I understand everything about Bitcoin, but I do know you got to have a pretty strong stomach. It's like watching your Bears this year with that ball next to you, Phil. You think they're down, then all of a sudden Caleb Williams brings them right back. Phil Striegel, really appreciate it. Thank you very much. Thanks. All right, up next, more on the huge reversal on Wall Street today and what it might mean for the Federal Reserve. You're going to hear from somebody who helps manage more than $1 trillion. NASDAQ down 1.5%. We're back right after this.
I'm here. I'm just eating lunch.
Bitcoin, which I think is a store of value, is waiting more for liquidity to emerge in the marketplace. So those are 2 points to keep an eye on for sure.
All right. Well, it's great to see you, Christian Magoon. Thank you so much. Really appreciate it. Thank you. Coming up next, we'll do some faith-based investing. We have a special guest with us who will explain.
Still don't have much of a change in direction on hedge flows.
Low ticker at minus 800. IONC.
All right, if institutions start selling at this time of day, not a good sign.
IONC.
At some point, the shorts will start covering, I would imagine. Haven't done so yet. At some point, we'll see the shorts start to cover. Still got plenty of time.
Sometimes, you know,
All right, NVIDIA was the star of the day, and then it wasn't. Wow. I just can't believe we had such a move in NVIDIA. Completely out of the iron condors. You should be out of them too, most likely. NVIDIA, I'm out of those iron condors. I did take some Goldman Sachs off too.
unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus.
I got out of this for $48 limit.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track
$480 per contract.
Trade brilliantly.
No, sorry. $40. $48. Sorry, I said 480. $48. All right. So we got about $52, $72 in profit, $720 total on this credit spread. I misspoke. Okay, hedge funds, excuse me, the hedge flows have yet to turn. You know, if you're concerned about the markets, obviously what most people are doing right now, you don't want to be most people. Most people have bought UVXY. This is getting close to a peak if it wasn't today. I'm thinking.
ESG, but slightly different inputs. Essentially, we have an investment philosophy that is rooted in the idea that investing is ownership. We believe that owners of a company, you have an ethical responsibility to understand the products and practices. We want to find those products and practices that are creating value and leading to human flourishing.
And you are going to share several ETFs with us. I'm looking at them here, and they somewhat track indexes, but you take stocks out that don't have the values that you have when you talk about biblical values and all that.
Yeah.
For example, when you look at U.S. markets and you're tracking the S&P 500, right? You have the U.S. market. That must be the ESUM.
SGPX is down.
How many of the S&P 500 names make it into your fund?
Yes.
Half? Well, I
Less.
mean,
Yeah,
less.
less.
Okay.
Yeah.
So I was going to say, do you take out 10 names?
Yeah.
I said, no, that can't be right. Half? It's, okay,
Yeah.
so less than of the 250. How many names of the 500 are pretty much in the fund?
So for the U.S. market fund, we're benchmarking against the Bloomberg.
Okay, so I see conversation about 2022, the bear market. You know, we're
We're screening out about 70%.
3 years into this current trend.
Yeah. So kind of back to the idea of investing.
Stock Traders Almanac looks at the week before the Thanksgiving holiday buy weakness. So it looked like that was going to be the case this morning. Still has time to bounce, but looked like the case was going to be buy weakness prior to the Thanksgiving week. All right, and sell into Wednesday next week.
And so we have a team of 5 that work with our fundamental investment team to identify which
Looking at 2022, the S&P 4,800 down to 3,400. Okay, it's 1,200 points. more or less. Is this beginning of something, or is it similar to April? Or what's the catalyst? The catalyst they keep talking about is Blue Owl Capital, private credit, potentially blowing up. It's always something out of left field. We're back to the 20-day, 6,600. We really need to see. We need to see this longer dated positions. We need to see this turn up, starting to flatten. So if this starts to turn up, the teal colored 6.8 billion, if that starts to turn up, that would be good. That would be good for the markets. We're starting to see puts being sold as this rises. Hedge flows are turning up. The cyan color 65.75. You can currently see that starting to turn up. That's real time. So if institutions start buying here, that would be a good sign. It's a crazy move today, though. Hopefully you capitalize on some of those puts. I sold them too soon. I took profits too soon. I think a lot of people in the trading room did that as well.
Incredibly difficult area for a faith-based investor to allocate to because it is typically fraught with products that are typically addictive or they're causing harm. And so our high dividend value ELCB is a fundamental active strategy managed by our co-CIO, Dolores Bamford. And we really think the first of its kind, a faith-based offering in a large cap value space with a high dividend focus.
This type has been around for a long time. These ETFs are more new, right?
Yes.
What sort of led to this?
Yeah, so we've been around for 17 years, really starting with an expertise in healthcare, and we continue to have that. But more as a fundamental active investment boutique. We still have those capabilities. The reason that we've launched Systematic is to try and create an ethical win-win for a faith-driven index investor. Our view is that as a faith-driven investor, you don't have the luxury to invest passively, given that indices are inherently values agnostic. So what we're trying to do is broaden our availability as we seek to create full portfolio solutions and create easy opportunities for faith-driven investors to align their values with their investment portfolio.
So all those sit-in stocks that we used to cover, those are all out.
Those are out.
And you mentioned NVIDIA would be one that's in there. Any other names that seem to make the cut on a regular basis?
Yeah, so any company that is creating value, right? We don't want to just avoid. We are unyielding in our avoidance of problematic areas.
Yeah.
But we want to be taking a positive look at the opportunity that business has to create impact. So any product and service that is adding value to those 6 neighbors of a business that I mentioned, that's a great opportunity for us to consider for our portfolios.
And how do you feel about the economy and the Fed and where the market is headed in general? Because good values or not good values, you need a market to go up, right?
Yeah,
I mean, how do you feel in the big picture?
Yeah, we're very encouraged on the fundamental active side of the resurgence and sentiment for healthcare. That is a big part of what we do at Eventide. So our fundamental active strategies have performed very well as a result. Generally, we're optimistic, and we're optimistic about long-term equity market exposure, which is really the intention for offering these systematic strategies.
Right.
Is we believe in the benefits that offers for investors. We just want
Okay,
to
NVIDIA,
further values alignment there with it.
All right.
S&P, no,
Thank you so much.
nothing yet.
Glad you were with us today.
That is one ugly candle.
Thank you, Michael. Coming up next, our panel is standing by to talk all about
The volume is not
those earnings. In fact,
too high, which is interesting. It's not above average.
but they've been pushing some other things that are doing well.
Huh.
Big picture for Walmart and retail. We'll be right back.
Okay, so stock charts chart. This does show as a distribution day. Stock charts. So that does show up as a distribution day. Stochastics oversold. I don't know. I keep looking at UVXY. UVXY wasting asset tends to spike for 7 to 10 trading days, and then it rolls over and continues to waste away. These spikes tend to be opportunities. We'll see. This is a pretty nasty day, though. pretty big swing in the markets. We're down 1% right now. We were up, what, 2%? 3% move intraday.
From trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling,
All right, so from the high, SPY from the high to the low, high to low, we're at 5%. Now, some of you were looking for maybe the 10%. I think Linder's run. You were looking for 10% potentially. Here's your 5%. The low over here, October, very similar looking candle. And yet the next week we were up. That was a Friday over here. This was a Friday, October 10th. Monday we came in, inside day, dipped a little bit, tested the low again, and then took off to the upside. Looks like a head and shoulders top, potentially with a neckline right along the lows of today. So maybe we get a bounce, a relief rally for a bounce, put in a lower high, and then complete the head and shoulders. Hard to say. It's unfortunate. It was a really good day today at the open. We were able to close quite a few things. I took some exposure off of Goldman Sachs.
Omni-channel tech powerhouse that nobody can really compete with in retail, with the exception of Amazon, of course. But importantly, big picture, they're diversifying their business. Ads are growing over 50%. E-commerce is growing over 30%. Walmart Plus had its best quarter since it launched. And what we see moving forward is we see a cash flow inflection that has already happened and will continue over the next several years.
We have good news overall in that the grocery always seems to do well. Also, they've been investing in picking up other areas like apparel, like fragrance and self-care and things like that, trying to improve the look of the stores, getting mannequins for the apparel to try and push some of the other areas because grocery has been the bright spot. Charlie, what do you think? Does Walmart have a good look ahead?
Oh, absolutely. I mean, the seeds for this were sown in 2015 when Doug made his speech at the stock exchange during the analyst meeting. So we're going to make all these investments, and people didn't really understand why. And the online business is just rocking. The move up market, they keep calling out the higher end consumer driving a lot of their growth in both sales and traffic. And that's a testament to the merchandising. They tried this before. They went up market. They had a fashion show during Fashion Week and put some ads in Vogue. That didn't do so well. This time it's doing much better. They've really nailed it on multiple fronts. I don't see any headwinds at all ahead of them. The Amazon story, when I was covering this company years ago, I used to hear the question, how does Walmart compete with Amazon? And I would always reframe it and say, how does Amazon compete with Walmart? And I think we're seeing that today. I mean, Amazon has not made a dent in the food business, despite the Whole Foods acquisition. And Walmart keeps growing share in food, which drives traffic, which drives sales of other products. You mentioned the stores being fresher. They keep refreshing the stores. I can remember 20 years ago when I first started covering the company, the stores were pretty grim, and now they're not. I mean, they are anything but grim right now. Doug and his team have done a phenomenal job with this company.
As I've been following Walmart over the last 24 hours or so, you definitely have different, you mentioned the upscale shopper who's now going to Walmart, and that's one thing. You also have the fast delivery of food, and the SNAP program did affect the numbers, but it turns out the people who use the SNAP benefits also want the fast delivery of food. They found that out as well. So you don't need to be a millionaire trying to hit Walmart.
5%. We're just sitting here doing nothing. Trying to grind a little bit off the low. S&P.
TJX and Bath and Body Works all gave a cautionary tone. There's certainly this feeling that Walmart's going to be the answer for.
If you're hoping for a rally, I'm sure a lot of people are hoping for a rally. I mean, we started off today. Felt wonderful. You know, everything was up. So hopefully you took the opportunity to take some trades off into that strength, which is what I was doing. Okay. Took the NVIDIA call side off. The 195 calls. I had 195 calls. I took those off this morning. They expire on the 21st. I did reduce risk on Goldman Sachs. That at the high of the day, I sold, bought back the 730-725 put. We took some puts right around, let's see what time it was. The 6,700 put we took at 11 o'clock. And the markets rolled over. Okay, we took those puts at 11 o'clock. And we had some from before that. Let's see. Yeah, 10:05. We had 10:05 because we had that first drop at 10:05. And then we bounced. I thought, oh shit, here we go. We're gonna like rip this higher. And those puts went from $5.20 down to like $3 within a couple of minutes. Then it bounced and rolled over at 11 o'clock. We added to it at 11 o'clock. So, except for that, taking Goldman Sachs off, a quick trade on LFS and AUID earlier. Not much today on the long side. NVDX, I'm looking for NVIDIA to rise. Here we go. Starting to pop. S&P pop. S&P popping off the low again. MACD is showing a bullish signal.
Sporting goods heading in to the quarter with solid demand. A final quick thought here, Jamie.
We're pretty positive on retail in general going in as it relates to Walmart. Some of the other names you mentioned, TJ Maxx, Costco, but you know it's going to be remain a bifurcated consumer, and we think Walmart's in a better position than anybody to take advantage of that.
Yeah, Walmart. I'm going to double up on Walmart.
Charlie O'Shea, Jamie Myers, thank you both for being with us here on Schwab Network. I'm Nicole Petalides every single day. Opening bell at 9 a.m. and the watch list here at 2 o'clock. I'm glad to be with you live on the floor of the New York Stock Exchange. The Dow right now is down 156 points. Keep it right here. A lot of action going into the closing bell. Market on close next.
NFE.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim.
Yeah, if nothing else, Grover, we'll see shorts cover. Puts monetize.
By chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Man, my keyboard on this laptop is getting old.
And start learning today.
All kind of weird things happening. All kind of letters popping up. All right, here we go. So we're starting to push a bit higher. Be interesting if this ripped to the degree that it did on the drop. I don't see that happening, but it'd be funny. Boy, that would make people even more complacent, right? If we retrace, hi Tickler, if we retrace some of this. Hi Tick.
think one of the most important things is you're making a play in a risk
I take alert.
way here going into earnings.
So that would be a further downside.
Maybe some
area
cheap
to
lotto
watch.
calls, like 20 deltas or whatever, 30 deltas. Makes sense.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
All right, let's see what hedge flows look like. Okay, these are starting to turn. Let's look at Hero. Hero stands for Hedging Impact of Real-Time Options. Okay, so we can see what's going on here. Okay, so longer dated options are starting to get picked up. The hedge flows are turning up. The cyan colored 65.95. That's, and the puts are starting to get sold. As puts get sold, this will rise. The 11 billion here, the lavender color, that'll start to rise as well. So this is all starting to look a little better. Oh, I'm surprisingly calm. Everything seems very clear. If that makes any sense. You know, we had a pretty decent flush. People were talking about private credit. Some people talking about that investors in private credit they saw Blue Owl Capital was 30% below net asset value. 30%. That's a big haircut, and that they would curb outflows. Okay, so meaning they're not gonna give you everything back all at once. I guess you sign an agreement or whatever. But private credit, that was a big deal back in COVID. If you remember, private credit was the thing that everybody was talking about because banks weren't loaning and companies needed capital to run businesses. So they were private capital became very, very ubiquitous. Everybody was talking about private capital, investing in private capital, blah, blah, blah. And now here we are at all-time highs and private credit is starting to create some problems. It's always something out of nowhere, right? Whether it's tariffs or it's COVID or it's credit default swaps, whatever it happens to be. It's always something that people weren't talking about. Now, Jamie Dimon, for his credit, was talking about private credit a couple of weeks ago, right? Talking about roaches or cockroaches or whatever. All right, no follow through. No follow through yet. All right, we got an hour to go. Less than an hour to go.
SGPX may res in 10 seconds.
Just give me your observations about what it might tell us about either investor positioning or
Ed Yardini. He's always got a clear way of covering the markets. Oh gosh, here we go with the AI bubble again.
This fellow Michael Burry, of course, has raised a lot of angst and anxiety about the earnings of particularly NVIDIA and also Palantir. And so, he's got skin in the game now, and he certainly would like to talk these stocks down. But I'm not convinced that this is a bubble that's about to burst. I think it's a bubble that's losing some air. So maybe it won't burst because we're seeing enough people anxious about the situation that it'll take some of the air out of this bubble.
Yeah, that's a good point.
Right, and I guess it's important to remind folks that we can just even set the bubble talk aside and say whether it's becoming a bubble or already has or never will, the market's risk-reward calculus changes every minute, right? I mean, we can talk about downside risks, even if you don't think a bubble's bursting. We didn't have a bubble, in 2022 necessarily when the market went down a bunch. I guess the point is the S&P 500 at the lows today has been sitting at this down 5% level from the record highs in October. Still looks pretty routine. I just wonder if you think that there are things that we're going to have to digest from here that might make it a struggle to rebound toward those highs.
Well, I think this issue of AI bubble and how the GPU chips are depreciated and the quality of earnings of some of these tech companies will continue to be challenged. But I look at their revenues, and the revenues, you can't really doctor that, and the revenues kind of speak for themselves. Are absolutely awesome. And so I'm sort of in the camp that believes that this too shall pass, and I remain bullish on the market because I think overall earnings are pretty good. I mean, great earnings. Industrials are doing extremely well. And in addition to that, I think communication services are showing some strength. So all in all, I don't see the problem on the earnings side. There is a lot of angst about valuation, and we're taking some of that away. But I don't think we're going to correct the valuation issue all that much here.
Yeah, I was going to say, earnings have done their job. They obviously have been much better than expected, yet the S&P's back where it was before the start of earnings reporting season, really. It's touched levels from September, which is another way of saying market's less expensive than it was a couple months ago. Ed, want to get to one of the other, issues top of mind today, which is the interplay between the jobs data and the Fed. And for that, want to get to Steve Leisman, who can kind of run down what we learned today and where it goes from here. Steve.
Hey, Mike. Yeah, the jobs report generally supported the view held by many at the Fed right now that the labor market remains in decent shape, or in Fed speak did not suggest additional downside risk to the jobs market. Here are the numbers. It came in at 119, which was more than double the expectation. July and August were revised down by a combined 33,000. Less than previously reported. The unemployment rate, though, did tick up 11 basis points, 12 basis points there. That might have been a cue for the market. And wages were a little bit muted, up 0.2 and 3.8% year over year. I asked Cleveland Fed President Beth Hammack in an exclusive CNBC interview about the tension between the weak job numbers on the one side and the above the target inflation on the other.
It's a bit dated because it comes from September. It does look like it was a mixed report, but it's in line with my expectation that we would see some further softening in the jobs market, which just highlights the difficult time that this is for monetary policy, because we are seeing some signs of softening in the labor market, but we're still seeing elevated signs of inflation.
So markets bid up ever so slightly the chance of a rate cut, likely because of that jump in the unemployment rate. But it's still a long shot bet in the absence of additional data. The chance of a cut rising to 33% from 24% before. You can see there January at around 73%. As it stands now, the Fed will not have another full jobs report before its December meeting. It meets December 9 and 10. The November jobs report, along with half of the October data, the payroll side, is going to be released December 16. So when it comes to a jobs report for the Fed, what they see is what they get. And Mike, I keep searching the news wires for what happened at 10:46 this morning that changed this market sentiment, and I can't find a news item. By then, Beth Hammack was already done by half an hour, so I don't think it was her, or I don't think it was anything I personally said.
No, I think you're off the hook on that, Steve, although I think it's a good point that it didn't seem as if there was a very definable trigger, although the backdrop of the Fed, in the data, seems like there may be a slightly higher chance of a December cut, but it's still not even 50-50. That's kind of the worst of both worlds, right? You're saying things were bad enough to consider you may need it more, but you're probably not going to get it.
Mike, you remember those days when it looked like the market was trading a Fed mistake? Maybe that's something that's going on here. When you read those minutes yesterday, and I personally thought I was out on a limb saying that it didn't look like Powell had a very easy time or had the votes for a December rate cut, and I felt pretty comfortable. Like that, I was more on the sturdy part of the limb, reading those minutes yesterday when many said they didn't really want to cut again in December, and it may just be a pause. It may be that they won't want to cut in December, maybe because of the lack of data, maybe because
market's just sitting here doing nothing.
And that they resume again in January, which is where the market is is priced. But it could be that the market feels like the Fed is making a mistake here. That's just a trade I don't want to say is happening right now, but one we want to watch.
For sure. Yeah, it's been at least in the back of folks' mind for a little while. Steve, thank you very much. So, Ed, I mean, where does that leave us? I mean, right now, the market is saying rates are still tilted lower. We maybe get a cut within the next couple of months in January. And I guess the question is whether you think the economy is in need of that.
I don't think the economy really needs it. We haven't had a lot of data recently, but we have certainly had lots of earnings reports, and the third quarter earnings season came out real hot. Instead of earnings being up 6.5%, which was what was expected going into the season, it looks like more like 14, 15% on a year-over-year basis. And that's basically the third quarter in a row where earnings expectations have been beat significantly. The other factor here may very well be what's happening in the crypto markets. The sell-off in Bitcoin. I mean, a lot of the players in the Bitcoin market are basically risk-on traders, and they may very well own NVIDIA and some of these other high flyers. And when they get queasy about their position in Bitcoin, they may want to take some of their winnings in other parts of their portfolio. So I think that's part of it. And by the way, the Genius Act in July, I think, is what.
Just waiting for the markets to tell us something. All of the New York FANGs are near the lows of the day, so not much to see there. We only got about 10 stocks green on the NASDAQ 100. We only had 4 stocks at the open, 2 to 4, something like that, that were red to start the day. Now everything is red. 90% is red. So completely different look this time of day with 50 minutes left to go.
So how are you reading it, Courtney? In terms of, short-term, market had a bit of a rug pull here with what's going on with Bitcoin, and then maybe people squinting at NVIDIA's numbers, but it's hard to know what there would have really brought out the selling.
Yeah, and coming into this week, I mean, people are starting to question the AI trade. I mean, there is so much capital expenditures. People are really questioning when that's going to become profitable. We are also really looking at the valuations of these companies, and there's this whole idea of circular financing, and none of that really went away with NVIDIA's earnings. So while they did have a really good earnings report, I show the demand is still there. The question is, can some of these companies, especially the ones who aren't public yet and aren't profitable yet, when is that going to happen? I think that question hasn't fully been answered yet. But I do think a bigger part of this picture is just some of the other things that are happening in the markets today. So Bitcoin being down is very correlated with the overall markets being down. That is part of your risk on trade. And also you had some Fed speak today where they were coming out and saying they see downside risk to the markets as well. I think you just had a combination of those things, and people are just taking their profits.
Yeah, a little bit of Fed speak around this sort of financial stability discussion. But I mean, it seemed a little bit like not alarmed, but definitely watchful of some of those issues. Yeah. Rich, I mean, you see this skepticism seeping into the AI trade, or at least the market trying to sort relative winners and losers. How does it leave you trading the tech trade?
So look, the AI anxiety is continuing. That was caused by obviously the circular financing, the leverage with Oracle, the questioning depreciation schedule, and the stretch valuations, none of which concern us. Because what we're looking at is companies that have had outstanding Q3 results. The market will continue to move them lower until a point where operating cash flows become very attractive. And we're actually very close to that right now. Specifically, if you take the 3 hyperscalers, Amazon, Google, and Microsoft, the operating cash flow as a percentage of the market cap is now roughly equivalent to the 493 stocks, the non-FANGs in the market. So we can talk about Bitcoin affecting the large cap tech stocks, but you can't argue with the growth in the hyperscalers last quarter and their operating cash flows right now, which will ultimately set a floor in these stocks.
Although the operating cash flows have never been the question, it's what they're doing with the cash flows, right? So the free cash flows is what's been going down because they are investing so heavily.
So if I'm the CFO of Microsoft or Google, and I've got $180 billion in operating cash flow for next year, I'm going to invest $110 billion back into CapEx. What are my choices with it? I return it to shareholders, I put it on my balance sheet, 4% risk-free, or I reinvest it. Okay, they're reinvesting it, and look what happened year over year. We had 39% growth in Google's earnings, Microsoft's earnings, 34% in Google, and 20% in Amazon. So the decision to reinvest these large amounts is scaring everyone, yet we're seeing huge increases in the growth of the earnings and the operating cash flows.
Courtney, bigger picture too, coming into this week, I think, you passed the 3-year anniversary of this bull market. You arguably could have clients coming to you and say, look, we've compounded at 20+% annually for the last 3 years. Have we kind of already pulled forward some of these results, or where are the opportunities outside of what's already been working in the last 3 years? Is that a discussion you might have?
It absolutely is. And actually, I wish more clients would come to me with that. I think more people are wanting to get into the AI trade still, wanting to get into the things that are doing the best. But I do think that is prudent to do as an investor right now is most of the returns that have happened since the bull market started in October of 22 are from the AI trade. And so I think at some point looking to take some of your profits there and adding to some of these other sectors of the market is a very good thing to do, because though I don't think this is the bubble bursting, I think there's a lot of other areas of opportunities that are not as expensive as the AI trade. And when you're seeing these big pullbacks and these big drawdowns on days like these, that's not necessarily happening across the board. I think it is, just as an investor, it's a good time to look at that. I think seeing people doing so is probably more of a reason why this isn't the top of a bubble, because people are pretty skittish. They are looking to take profits on days like today.
And Rich, if you're not concerned big picture about kind of the financial condition of these tech companies, which of course is pretty bulletproof up to this point, what are you doing tactically with your clients? I mean, have you taken profits in those areas? Are you looking to park cash? How does it feel going into the end of the year?
Well, we begin with the end in sight. So we'll target a rate of return with each individual.
45 minutes to go. Still nothing.
And with that, we'll build an asset allocation.
I would imagine shorts will cover here shortly.
We've had years of growth on the equity side, which means that we've got to continually pare back the exposure to equities. It just so happened that no one loves municipal bonds anymore. And munis, and listeners have known, I've been a big proponent of munis over the last year, where we're getting 4.5%, 4.75% tax-free in munis. So what we've been doing is tactically reducing equity, which have been growing enormously, and reinvesting into the safe side of the asset allocation, which if we're getting 4.5% tax-free, that takes us a long way towards the end in sight, which is 7% for that particular client. So we're adjusting asset allocations, we're maintaining our technology overweight, along with some other sectors, and we're adding municipal bonds. We have added quite a bit.
Okay.
Alibaba has earnings, right?
If you're hoping clients look to other areas, I mean, is a 5% pullback in the S&P enough to kind of shake loose a lot of value in those other areas and feel like, this is a decent entry point?
I do, and we've been doing the same thing here. It's just people are getting very overexposed to these categories, so we've been
Gap.
actively taking those.
We're looking for.
I think, is it going to be enough to trigger like the larger
11% on Gap? Huh.
I don't know.
11%.
Still seeing that FOMO trade.
Gap.
To be in there. But I think it's absolutely what you want to be looking at. And when you're looking at the broader economy,
11%. 10% would be 20. $2, right?
Things like Walmart came out. They're actually showing that the consumer is actually still
5, 2 above, 2 below. Let's see what an iron condor looks like on. Let's look at an iron condor on Gap. Gap stores. Let's see. Okay, so Gap. They're looking for 11%. So let's just say 10%. Ease of calculations. We'll add a little lanyap to that. A little extra. Let's go here. GAP, Gap.
Really just continues to get benefits from
Gap.
consumers who are looking for value. Those shares at 7%
Missed.
They've been on the climb all day. Palo Alto Networks shares are sliding.
Third quarter, 3.87.
Surprised by the cyber company's plan to buy cloud observability.
Very minuscule earnings. Let's see what an iron condor looks like on this one.
$3 billion.
Outside the Bollinger Bands, okay? Gap.
On the other hand, it could expand the addressable market by $100 billion by 2028. But right now, you can see investors are weighing the bad news off by 7%, those shares. And Expedia is also lagging down 11% this week.
What did it move today? 0.5%?
Today, here's Expedia off 1%. TripAdvisor is the one that's really dragging off. It's off about 7% today. A little bit.
So above 25.
Consumers are increasingly
above 25.
AI for their travel planning,
and AI has superior
25.
product and experience.
See what 2530 looks like. 2530.
It's a narrative, Mike, that they've really been struggling to put to bed, but it just is persistent.
I was going to say that has been the bear case, and Google's.
That's a little close.
See how it goes. Contessa, thank you. Talk to you again soon.
We'll find out what that goes for.
Up next, Star Analyst Dan Ives.
And then
NVIDIA's numbers, and that stock's fizzle in today's broad sell-off. He will join me at post 9
21. Let's go 21.
Down 0.9%, just slightly off the day's lows. We are live from the New York Stock Exchange. You're watching Closing Bell.
21. 19. $2 wide. I don't know. That's kind of it's kind of weird. 25. 25, 27 on the upside. It's probably not even worth it. Let me see what Gap stores, what this looks like. Gap. Oops. GAP. Gap. Ah, it's pretty expensive, huh? Selling call spreads. 58% risk reversal. IV rank is 65%. 1 month IB is 71%. Okay, so I'll see what this looks like. What the hell? Not a big risk, not a risky stock. Gap stores, GAP. Let's see. Yeah, not much premium in these, huh? 21st. Okay, so let's go to the next week. Let's go to December. What the hell? Let's go to December, see if there's a little bit more premium here. Okay, there's a lot of open interest at 24 all the way through 32. 25, we said it's a little close. Yeah, this isn't even worth it. We'll try it. What the hell? Sell Condor 2730, 2730. Sell the 27, buy the 30. So that's 3 handles wide. So then we'll go 21. 21. That seems very close. 21. 18. No way. No way. Something's got to be wrong. Oh, these are all calls. No wonder. Duh. Why is it giving me this? I was looking for an iron condor. Sell iron condor. There we go. That's better. Sell the 20, 25, 26, 27. Buy the 30. Sell the 21. I'll sell the 20. 20 and 17. Easy to calculate. $82 credit. 27. That seems to be a little high.
Getting some breaking news. Let's send it over to Sarah Eisen live in Las Vegas. Sarah.
26.
Hi, Mike. Good to see you. We're going to break the news right here, right now. Here with me is Toto Wolff. He is the CEO, Chief Principal of Mercedes.
That's $1 credit.
George Kurtz is the founder and CEO of CrowdStrike. This has been rumored, but now it's official, George. Tell us about the news.
It's official. I took a minority stake in the Mercedes F1 team in partnership with Toto.
20.
Couldn't be more excited about
So 20 and 17. 20 and 17.
Long-term partnership that we have.
Okay, 17 is way down there. 3 handles wide.
The key thing to focus on here, it's a personal stake for me.
Got $100 in credit.
But again, what we've built over time in terms of the relationship has really allowed us to come to this day and put something together that we think is great for all parties, and could be more excited to be part of the sport.
I mean, a part of the big news here is the valuation for Team Mercedes of $6 billion. He's taking 15% of your stake. You own about a third of the team, or used to.
50% return. Wow.
Of the overall team.
For 10 contracts, 2,000 and held aside.
Okay, with George, because it's important. When I started this adventure with Mercedes, we're in there for the long term. I've had
Sounds like Arnold Schwarzenegger.
20 years in touring cars, in smaller formulas.
Cars.
The Formula E team with them. So
Look out, there's a bomb in there.
That we had, and we're not sellers. But with George, we kind of grew together.
All right, took an Iron Condor on Gap. Not looking for much. Gap.
Part of the journey of growth, and George is very unique in the sense that he's not only a successful tech entrepreneur, one of the most successful tech entrepreneur, but he's also a racer, and that is a skill or a niche or combination of understanding that is important for us. So bringing him aboard is great. When it comes back to valuation, we're still undervalued compared to U.S. American teams.
You're not happy with the $6 billion valuation?
Well,
it's more than NHL. It's more than a lot of the baseball teams. You're up there with NBA teams.
Yeah, I think, the reason why I guess George has done that, and he's a super shrewd investor, is that there is upside potential. And I'm not saying this, we are very proud of where the sport has gone in the last few years, but, the valuation is extrapolated from profits and from revenue and the multiples thereof. There is no such thing as a trophy factor of the asset itself.
You think there's a lot of growth runway. I was going to ask you, first of all, George is a racer, and as I just learned from his wife, he is one of very few people that has won Le Mans 100th anniversary, 24 hours, and Spa. So, fun fact there about George Kurtz. Are you buying this because it's fun to have a stake in the Mercedes F1?
All right, so that's what I'm going to do. I'm going to do 27 up here.
$6 billion is a record high valuation for this sport.
Look, there's a passion here, but when I put something together,
26, 29. 26. 29. Okay, cool. 26, 29.
I wouldn't be involved. So
what?
I think when you have passion and business come together, it makes things a lot easier when you have people that you know for a long time and that you have kindred spirits.
26, 29. Okay, 26.
Of winning and high performance cultures. That's a huge opportunity. And from my perspective, the U.S. market is really underserved.
By 20, by 17 put.
There's
always a question of whether it's peaked. We have 3 races here. We already had Drive to Survive. We've had a Brad Pitt movie.
Well,
How does it get better?
Think about all the new fans that are coming into the sport, right, and growing. And this is something that I think the U.S. hasn't had for a long time. I was telling you the story where you'd have to get up and watch a Formula One race in the middle of the night before you had a DVR. That's not all that long ago, right? So you have all these new fans coming in. You have a different demographic. Female demographic is really involved with some of the, the latest shows that are out, and they're fans. And when you come to an event, you see what it means. Like, the reason why CrowdStrike is involved in Formula One is there is a return, right? We perfected that, and we want to bring that to the United States, to the tech market, and have other partnerships that can exploit that and make the best of Formula One and what it all means.
What do you see, Toto, as the biggest growth driver for the sport?
Yeah, like George said, over the years, we've seen
over the years.
Not only in the United States,
get out of here. There's a bomb in here.
When it comes to audiences, that happens every year.
You sound just like Arnold Schwarzenegger.
In the United States, if you look at Austin, that happened most recently, more than 400,000 spectators.
All right, so no follow through. They're going to back down to the lows.
Also, that our fan demographic is getting
younger. Get out of here.
Group is 15 to 24-year-old females, 42% females overall.
This one seems to be pretty safe. 26, 26, 29. I don't see this being a gangbuster move. So $1,000 in credits. Yeah, that looks good. Call. And what's a 26? Oh, that's a 35 Delta.
Your role doesn't change at all, does it?
No, not at all. I'm, running this, and I love doing it.
That's a 19 Delta.
As long as I think I can contribute to the business positively, I will continue to do so.
35 Delta 26. I got to roll those up.
Well, you always need to have something
26.
in the back of your mind. I mean, maybe one day I can convince George to stop cybersecurity.
Okay, 20. 29 would have been better. Okay. So let me adjust this real quick.
George, B2B companies have been lining up to get into
Okay.
F1. A lot of them come to the Vegas race, which is why we come at CNBC. You said it's worth it for a CrowdStrike. What is the payoff you get for being part of a team like that?
Well, let's think about this. Most CEOs or other executives or other folks have been to a baseball game or a U.S. football game, etc. When you come to a Formula One race,
26, 29. That is a.
Mercedes runs it. It's just incredible. So when you have the
That is
ability to
a
sit with someone over a 3-day period, you get
30
to know
Delta.
someone. Sure, you get to watch the race. Sure, they get to appreciate the cars. They have an experience they've never seen before. But when you get to know someone in B2B, it's relationship selling. Right, and you get to see people in their environment. You get to see what they're doing, how they operate, and it's generated a tremendous amount of business for us, based upon not just being on the car, but the relationships we build in the paddock. And that's the special piece that we see here, and that's why we're involved. And that's why, again,
Call side
building
call.
that community, building not only all the sponsors, but the tech folks, and being able to showcase our technology to the rest of the world is important for us.
26,
and, we aim to do that
26.
at a higher level in the future.
All right, we got to make some more news here on Mercedes. Everybody's looking ahead to the 2026
26.
season. There'll be new rules. There'll be new cars. Where's Mercedes going to stack up?
Well, it's a good example. We're the only sport that combines
Get out of here.
cutting-edge technology, science, and the gladiator in the car and the people's business.
The car.
And next year, particularly,
29.
these challenges.
29. All right, so 19.
We'll be having an engine that is 50% electric with 100% sustainable fuel, a car that will generate its downforce while at the same time, maximum downforce, while at the same time trying to save some of the electric energy. We will have DRS, the wings that go down on the front wing as well. So brand new car, huge technical innovation on the chassis side, the same on the power unit side. What to expect, I don't really know. We have we're setting our own targets. We are on track to deliver the targets, the right ones, to be at the front. That's what makes the sport so exciting. We don't know.
Do you get a further edge now having him as an owner, when it comes to analyzing the data, using AI to enhance performance? George, is that part of the story here?
Well, part of the goal here is to help in any capacity from a technology.
Yeah, I'll leave it alone.
Data is foundational to performance, and I think the teams that really embrace data, embrace AI.
Okay, you know what I'll do? I'll buy some calls. That way, if it does pop, I'll pay for that. Buy some calls.
Big part of the sport. I think what I mentioned before. Not many entrepreneurs like George, who have been so successful in the tech area, have been in Le Mans 200 miles an hour in the night in the rain. He knows what it takes to drive these cars. He knows how to analyze the data and how to correlate it with the engineering side. What kind of data are important, and this unique combination of those skills make him a very good sparring partner for myself and also for the engineering side and the team.
Well, thank you both for breaking the news here with us. These rising sports valuation has been a huge story for CNBC. So congrats on the new deal.
Well, thank you.
George Kurtz of CrowdStrike, Toto Wolff of Mercedes, and just for full disclosure, I'm an advisory board member of the McLaren F1 team, which recently got valued a little less than $6 billion. With that news, send it back to you, Mike.
All right, Sarah. Thank you so much. All right, up next, Dan Ives on the NVIDIA reversal. He is live here at Post 9. That's next.
Let's see what I get filled here at. Debit.
IONC.
All right, S&P is just sitting here. All right, so I took an Iron Condors. I don't think it's the best, so I'm not going to post it. But what I did take, I'll just show you what I took. Not recommended. I took 35 Delta call.
SGPX.
IONC.
At 26.
Low tick alert -800. IONC.
So 11% would be just what, $2.50, 2.5 points, but the deltas are higher. Okay, so they got a lot of premium in those deltas. That's probably why they're 35s. So maybe not a big deal. Maybe it's not a big deal.
SGPX.
It's only 250. So I'll be right at 26. So we could be right at 26. Nada. No shorts yet. All right, 26. So this is the downside. I have plenty of time to take this off. 2017. 2017. So that's a nice delta there. Let's see. Working orders. Cancel that. All right, so gap is fine. It's a little risky, the 35 deltas, but those are out in December.
-800.
All right, S&P moving a bit lower now.
Extreme low tick alert.
All right, they're going to sell it into the close. 25 minutes to go, 24 minutes to go. All right. I was hoping for a bounce. Nothing happened. Nothing's happening. December. 26. 34 delta. All right.
CBC. TECS.
34 delta. I don't think in this market we're going to get huge pops after today. We'll see. Be interesting if Gap stores beat 26, 29. Okay, and this is December. That is those are a 20 delta. 20 delta. I don't know. I just get the feeling that Gap is not going to get up there. The Bollinger Bands are squeezing. The markets are shifted lower. The lower strikes, I got a 20 delta. 50 days right there. RSI. I'm trying to rationalize this trade. Okay. Spreads. We'll see what happens. No big deal. It's only 10 contracts. All right, so that'd be $24,000. If for some reason I decided to buy 1,000 shares of Gap, that would set me back about 26,000. Yeah, I can handle that. Okay. 2017. Okay. And the profit, the credits here Credits. Total credit was $970. $970. If anything, a lot of these stocks are probably going to fade a little bit more. Okay. All right. What do we got? We got 21 minutes to go. Markets are not giving us anything. NVIDIA just pushed lower.
Low tick alert minus 800.
More low ticks. NASDAQ. Let's see what the New York Fangs look like.
NVDQ. TECS.
All the New York Fangs are at the low of the day.
IONC.
Yikes. This was definitely out of nowhere.
SOXS.
Live and let live. You know you did, you know you did, you know you did. Live and let die, huh? Paolo? Live and let die. That's what, Paul McCartney? All right, so BXX, that's been pretty active. UVXY has been very active. People are worried. You got SQQQ being bought up. Okay, so if we do have a big move, SQQQ is being bought. SQQQ. Wow, that's $80 now. SQQQ. What's TZA doing? TZA? Small caps. Yeah, I can't see this moving much more. See, here's the problem. Here's the problem with the bears. UVXY. This doesn't sustain very long. Okay. The last time we popped in the second week of October into the third week, we went up for 5 days and we reversed on the 6th day. Right now, we're up for 6 days. Day 7. Do we reverse tomorrow? I'm thinking maybe, unless this is something a little more unusual. I mean, this is pretty unusual. Up 126 points, down 95 points. Do I want to take any hedges? Probably, right? Probably should take a hedge. I had put credits, or rather, I had a put fly coming into today, but that's going to, maybe that'll go closer to the money. Let's see. No. I can get out at a limit, 20 limit. I get some of my money back.
SOXS. IONC.
All right.
IONC.
AIIO. Okay, SPY. Let me take a look. SPY. Okay, I have this 650 put long. 650 put long. Can we get down there?
IONC. NVDQ.
Low tick alert minus 800.
All right, so put fly amount.
TECS.
650.
RGTZ.
640.
IONC.
630. Okay, so we're done with that put fly. I really don't want to get assigned 1,000 shares of SPY down here. If we were to close in at 650 or just inside 650, I could get assigned 1,000 shares. I'm not going to do that. I'm not going to go for that. I can't go for that. No, no can do. I can't go for that. Okay. Disappointing day. In the afternoon session, the early lunch session from about 10 o'clock down into the low at 12:30. That was pretty good. I did close my puts too early at 44. They went as high as $155. That was pretty crazy. I couldn't hold on to it for that long. I mean, these swings, these puts would be off 20 bucks in each little swing during this little move here. So I just took the profits and run. Because I thought for sure that this rally right here, this first rally, I thought for sure that was it. We're going to run right back up. Nope, didn't happen. But this trade right here made up for everything else that didn't work today. We do have longs. Thankfully, most of these longs calls are for next week. Okay, Walmart. I'm going to add to Walmart. Walmart going in. Walmart's always been a pretty decent trade to have on into the holidays. I have the 100 strike call for January. So I'm not going to do it here. I'll do it maybe tomorrow. At the 100 strike call for January. So I like to double that up to about 10 or 15. 10 or 15 calls. So I add 10 or 15. So Walmart's okay. All right. So that's all right. I don't have anything else expiring today. Except those calls got stopped out. Okay, we thought we might get a bounce. I thought we might get a bounce, so I bought the 6670s. Didn't happen. Overall, it was a good day on the S&P. I think for what I'm going to do from now on is not be so tricky with the S&P. Once we get a really good signal, go with the trend. Take the profits. If it's a really good signal, maybe we'll take a reverse trip. But today, there was no reverse. The markets just dropped and just continue to roll over. So this trip down was really good, though. Very unusual. Look at the daily chart. Wow, it looks just like October 10th. Wow.
SOXS.
It'd be really comical if the fear that we're seeing. Well, let's see what the VIX is at now. VIX, we're up there at 27 and change. Yeah, I mean we're close to that October 10th. October, what was that? October. Can't read that. Can't read it. Friday, October 17th. Okay. That was a reversal candle. The 10th was the Friday. 10th was the Friday, that first pop in the VIX. That was the Friday, October 10th. That's when we had the spat with China over rare earths. A week later, we spiked higher. We're pretty close to that. I got a feeling if we spike up tomorrow, VIX spikes up, I think that reversal is going to be viable in the S&P. Just based on history with VIX. Let's go see what junk bonds look like. Here's VIX, junk bonds. Junk. Okay, faded all day, but we're still above the 200-day. We're not selling off. Okay, junk bonds are not selling off like they did back in April, February, March, okay? February, March. Okay, February, we rolled over right here. Junk bonds, we rolled over. We dropped below the 200-day, retested, and then rolled over again into the April 7th low. So far, it doesn't look so bad. Which is the strange thing about what's happening right now is that most of the indicators that would signal that the markets are preparing for a crash isn't showing up. Okay, TLT, you think people would be running the bonds? Does that look like they're running the bonds? Treasury bonds for safety? Are they going after gold? Are they going after gold? Gold futures. Does that look like they're going for safety? I don't know. It doesn't to me. I don't know about you. Bitcoin's trying to bottom here. I think this is going to turn out to be an opportunity, as we usually see. You know, it's very upsetting to experience this. You know, if you're a day trader or if you're in the trading room all day, it's very uncomfortable to experience this. But some stocks are doing very well. Walmart held its gains all day. Consumer staples, healthcare, pharmaceuticals, biotechs, those are a risky asset. So if you were thinking the markets are going to crash, I would argue that you should see biotechs losing the 20-day. Should be below the 50-day. If you thought the markets are going to crash, biotechs, a very risky asset class, should be, don't jinx it, Vinny, should be below the 20-day, should be testing the 50-day. S&P 500, let's go look at that. Equal weight index, this is probably setting up at the 50-day, if I'm correct. 200-day. We're right above the 200-day. Since the April 7th low, let's take a look. Let's do a Fibonacci. Only reason why Fibonacci's work is because so many people use them, right? All right, so what's 236? 236 is just about where we are right now. Okay, just a little bit above where we are. So if we come back here, is there another pivot? Yeah, there's a pivot right here. Let's see what this pivot looks like. Right there, that pivot low. 618 lines. So confluence, you have 618 lining up with 618 lining up with that. 618 lining up with nothing really. Pivot there. 618 lining up with 382. And you got the previous low. All right. So what this is telling you is that this is a broad-based pullback, but there are stocks that are working. Biotechs, pharmaceuticals, the big banks that they sell off. Goldman Sachs did retreat, right? Goldman Sachs did retreat. I did take, at the high of the day, I did take off Goldman Sachs. I did take off some Goldman Sachs. I mentioned that earlier. Okay, Goldman Sachs. What time is it? Oh, we got 6 minutes to go. Goldman Sachs. Okay. So we're right back down to the support level. I took these off here, the 730, 725s. I had 10 of those. All right, so 1,100 in credits. I didn't get 1,100. I had a debit. What was it, $50 debit? $50 debit. So $60, $600 in credits in my pocket now. So I have these two left, 730 and 740. 735 and 740. That's 30 points overhead. I don't see the banks crashing. Okay, let's see. JP Morgan. Okay, that did pull back. All right, I almost sold some credits today on JP Morgan. I'll probably look at it tomorrow if it bounces. What else do I?
Ticker minus 800.
Okay, is that a reversal low tick? Wow, that's so ugly. So ugly, Vinny. Okay. Disney, what's Disney doing? Disney. Oh, Disney pulled back. Okay, Disney did pull back. All right, so I'll need to roll that out. Disney. I got the 105, 100 put credit. Okay, Disney. So this one I have to roll out. Disney. Okay, so this one I'm going to have to roll out. I already rolled out once to December 19th. I got plenty of time. Disney can bounce between now and then. Oh, let's see. Annotate. All right, so we rolled these over.
MAGH.
Rolled this out.
MNDR. GLOL.
Rolled the 21 Novembers, which expire Friday, which would be a lot more, I won't say difficult to roll, but we would have to be a little bit more precise in what we did.
TSDD.
All right, so we're in the money here. Okay, these credits. 105, 100. 105, yeah, same strikes, 105, 100. All right, so 105, 100.
MAGH. GLOL.
105, 100. Okay, so this is starting to slide down the lower Bollinger Band. So more than likely what I'm going to have to do is roll these down. Or buy puts. Buy puts. You could do that too. Let's see what tomorrow brings.
BACQU may resume in less than a minute.
Actually, we're right at break even now. What's Disney at? Disney's at 102. All right, so a little bit past break even. I'll wait for a bounce tomorrow. I just had this feeling that things don't look as bad as what the markets are telling us right now as far as S&P. Junk bonds don't look so bad. If people were very concerned, we'd be seeing big investors buying treasury bonds. They're not doing that. U.S. dollars at 100. Gold is not ripping higher. Safety trade, gold is not ripping higher. Here's U.S. dollar. U.S. dollar rising a bit, but it's certainly not ripping.
Low ticker minus 800.
More low ticks. All right, so those SPY put credits, put flies, probably going to be close to be in the money. Make sure that those all closed. I had 10 of them.
RGTZ.
SPY.
TSLQ. TSDD.
SPY. Where are you? SPY, yeah, completely out of SPY. Okay, so I had the 650, 640, 630 butterfly. We're 2 points out of the money. The last thing I want is to wake up tomorrow, have 1,000 shares of SPY that I have to deal with. All right, so almost $750,000 worth of SPY. I don't, no thank you. No thank you, I don't want that. Especially in this kind of market where we might bounce, we may not bounce. If I was a betting man, I would say, yeah, we're going to bounce. Okay. So we certainly, you know what the good thing is, as Ed Yardeni said, the good thing, oh, we got less than 40 seconds. The good thing, Ed Yardeni said it, right? We cleared the deck as far as people that were over euphoric about AI, right? So the trade is no longer crowded. The AI trade is no longer crowded.
TSLQ. TSDD.
MNDR. AIRG.
All right, that's it. That's our wrap. Feels like Friday. All right, so that's a good thing. All right, junk bonds are not that bad.
DRMA.
WDC.
MNDR.
What else? US dollar.
NFE.
MNDR.
VT. NFE. VT.
NFE. KTTA.
RGTZ.
All right. Well, that was a hell of a day. That was a hell of a day. Wow. Every once in a while, you have these experiences that you can say, oh, you remember when President Trump put the tariffs in place and we started heading lower? Remember when COVID hit and everything dropped? Oh, by the way, let's go take a look at call wall. Let's look at the call wall. Call wall is still at 7,000.
VT.
MNDR.
CSIQ. MNDR. CYPH.
So we're still at 7,000 here, okay? I don't know. I don't see any reason to panic. It's been a very uncomfortable week or so. Started last week. Wednesday peak, Thursday, Friday lower. We bounced. And then today it was just like, oh my gosh. Hopefully you caught a piece of that downward movement. That would definitely help with some of the longs that you might have. So anyway, have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. All is not that bad. I got a feeling we're going to see a pretty bullish bounce pretty soon. The good thing is the AI trade is no longer crowded. NVIDIA, where's NVIDIA closing at? NVIDIA. Okay, closing at the low of the day, NVIDIA. Okay. So this trade, for the most part, isn't that crowded anymore. I would think a lot of people got flushed out, probably looking at the prospects of what if this keeps going lower. Always looks worse until we get the bounce, if we get one. Anyway, I'll see you guys tomorrow. Have a good evening. Take care.